news out of China overnight. The central bank announcing plans to reduce the amount of cash banks need to have on hand by 50 basis points effective February 5th. The bank governor said that the move would inject the equivalent of about $140 billion into the market. Separately, Beijing said that it is considering plans to evaluate bosses at publicly listed state firms. Part of that evaluation will focus on how executives manage stock performance. Officials encourage those executives to control the performance using market-oriented methods like buybacks and dividends. And Eunice Yoon tells us that there have been reports of unofficial guidance to hedge fund managers to refrain from short selling. So, propping things up at all costs. Joining us right now to talk investing in China is Patrick Chovanec. He is economic advisor and former chief strategist at Silvercrest Asset Management, which has $31 billion in assets under management. Patrick, all of this stuff that they've been talking about the last couple of weeks, does that boost your confidence in investing in China?
Well, the things that you just described, they don't sound like really market-oriented measures, especially telling people not to sell. China has demonstrated in the past that it can put a floor under share prices if it wants to. And if that's what you're betting on, then fine. But if what you want to see is the doom and gloom aura that is over Chinese markets somehow go away, I don't think it's going to go away anytime soon, because the problems are deep and they're not going away.
And I mean, these moves are really kind of phenomenal to think of a government telling people to do all of these things after, by the way, that same government was responsible for talking down a lot of these companies and these stocks before because of the moves that they were making in the past.
And they've done it before. They've put a floor under the market, but they haven't addressed the underlying issues. And one of them is U.S.-China tensions. A lot of investors, both outside of China and inside of China, are worried about Chinese companies, as well as other companies doing business in China, being in the crosshairs of tit-for-tat sanctions. And I don't see those tensions going away. The other thing is, it's not just people outside of China worried about external issues, but there is a real sense of gloom over the Chinese market domestically. People don't feel like the country is going in the right direction under Xi. That doesn't translate into open opposition or criticism, but it does translate into a kind of despondency about the future of the country and the kind of moves that would really change things.
That money goes away pretty quick. I mean, it's like dumping a bucket in the ocean. You know, you keep trying and trying, but it's not. Are you sure it's totally different than QE, or when the Fed just buys bonds, hands over? And remember, people said that it wasn't completely out of the realm of possibility that maybe the Fed would buy S&Ps. It never happened, I don't think. But is it that different than buying?
It's not totally different, but it's of a whole different order when you have the government telling
and buying stocks. Okay.
So the kind of heavy-handed intervention is quite different, which some people say is good if they want to see share prices stop falling. But in the end, it really reinforces the problem, which is that people feel that the business climate in China is very heavy-handed and state-controlled. And if you're worried more about them rounding up on, the next time they're going to round up entrepreneurs and get them in trouble, it's not moving towards that more market-oriented outcome that is really the cure to what ails China.
Can I just ask, Joe Tsai and Jack Ma both bought shares of Alibaba yesterday. We were reporting that they're doubling down on this. So if they seem to have more confidence, should we read anything into that?
I wouldn't say yes. There are good companies in China. The problem is, what is the catalyst for people taking a completely new look at them? And that's not just foreign investors, that's Chinese investors. There was an article in the Wall Street Journal the other day about Chinese investors pulling out of China and putting their money into the Japanese market because they're so despondent about the outlook. I actually, as an investor, I'm more interested in who's the beneficiary of this. And the beneficiary really has been Mexico. Mexico with the friendshoring, and one of the reasons why the Mexicans wanted to make a deal quickly with Trump over NAFTA was that they knew that if they did, the ire would shift to China, and that they would be the primary beneficiaries of that. And I was in Mexico last summer, and for all its other problems, trade with the United States is booming because companies are locating in Mexico as an alternative to being in China because of all this.
It's like onshoring or close shoring.
Close shoring, friend shoring.
Yeah.
Patrick, thank you very much. By the way, Patrick is a man of many talents. He's also got a book about learning to fly, which he learned how to do.
Well,
COVID.
you got to keep your boarding pass where you know exactly where it is.
Pilot.
You got to, bring your ID for sure. Can you help us get in the front of the plane?
No, but I can tell you that learning to fly,
You're talking about learning to pilot.
learning
Okay.
to pilot a
I need help learning to fly.
makes you feel a lot better about being a passenger because you know what's going on.
Yeah.
You don't feel as out of control. And that's one of the reasons I wrote the book, was not just for people who want to learn to fly, but people who just want to understand what's going on. when
Bill,
we're
can
in
I ask
there.
a terrible question? Have you ever been on a plane now as a passenger and go, I do know what's going on and I don't like it?
No, the safety standards are very
Are you
high. I
sure?
know we're all talking about 737 MAX and everything, but
Okay.
there's a big pilot shortage out there right now because the
You have a
standards are so
second
high.
job if this whole thing doesn't work out.
Not entirely.
Squawk Box coming back right after this.
Begins here.
Good morning, everybody. Futures in the green after Netflix posted a big subscriber jump. Look at a breakdown of stocks to watch ahead of the open. Former President Trump winning the New Hampshire primary. Nikki Haley vows to keep fighting. We'll get reaction to last night's results and find out what is next for the GOP from former Maryland Governor Larry Hogan. And the road ahead for Tesla. We will preview tonight's big earnings report and find out where the stock may be headed. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box right here on CNBC. We are live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Becky Quick and Joe Kernan. Let's show you the futures 2.5 hours before the market set to open this morning. Here's where things stand. We got some green on the screen. We'll talk about the elections and what just happened in New Hampshire last night. But Dow looks like it would open 92 points higher. The NASDAQ up about 122 points. The S&P 500 up about 21 points. Treasuries right now, when you look at the 10-year and the 2-year, you're looking at the 10-year right now at 4.109. It's come down a little bit. 2-year at 4.328. And then crypto, let's talk about Bitcoin. I don't know if you want to talk about Bitcoin, Joe and Becky, but we are back at about $40,000, $40,218. I'm not sure what has been moving that around exactly right now. Meantime, markets focus not only on what the Fed does with interest rates this year, but also what happens to the Fed's $7.6 trillion balance sheet. It's amazing to talk in numbers that start with a T, but Steve Leisman does that every single day. Steve Leisman, what are you thinking?
Yeah, there's an extra zeros there, and it's really hard. I got to put it into the spreadsheet to figure out if it's trillions or billions, or I'm not quite there yet, but I'm getting there. Here's the deal, Andrew. Fed officials, they've been debating out loud publicly for the first time when to end their reduction of the balance sheet known as quantitative tightening, and guess what? It could happen this year. The Fed, as you remember, ramped up the balance sheet by about $4.8 trillion during the pandemic, buying treasuries and mortgages. It started reducing the balance sheet, which is known as QT, in mid-2022, and it's brought it down by $1.3 trillion. So is that enough? Should it go back to where it was before the pandemic or some amount higher than that? The Fed admits it doesn't know for sure.
There's no economic theory that tells you how big a central bank's balance sheet should be. I know of no theory that tells you. You have Switzerland where, it's basically 100% of GDP or some number like that. So there's no real theory.
So what are the consequences of getting this wrong? The consequences of too big a balance sheet, they don't look to be huge. Some asset prices could end up being more highly valued than they otherwise would be, and there could be less room for future quantitative easing if they need to go back to it. But it could also help taxpayers, and that Treasury has to replace fewer treasuries rolling off the Fed's balance sheet. Now, too small a balance sheet is not that big a deal either. It was in 2019, but now the Fed has this standing repo facility where the banks can get reserves in a crunch if they need them. Luke Randall of Rights and ICAP tells me if the Fed shrinks the balance sheet too much, it won't be pretty, but it won't be disruptive like in 2019 because of the standing facility. So the Fed, guys, is going to have this very big, very complicated debate about ending QT. Some officials are going to want to go longer with QT. Some are going to want to end it sooner. Some want to get it with mortgages. Some want to hold on to a few. And they'll debate different ways to make that decision. It's likely going to move markets when they announce they will ease back on QT. Some are thinking maybe it happens as soon as March. But keep your eye on the prize. The most important story, Andrew, for the economy is going to remain interest rate policy. Andrew?
You don't want to give us a hint, though, of what you think really is going to happen at this point? And can you just layer in, actually, Steve, I want you to actually hit this, if you could. We talked all about New Hampshire just now, and we keep talking about what the Fed's going to do and when the Fed's going to do it and what the market thinks. And, everyone has a conspiracy theory that somehow Jay Powell is thinking about the election. And can he lower rates later in the year, or if he does it earlier in the year? Do you think that factors at all?
Maybe a little bit. I mean, there's this idea that I think the only thing Jay Powell wants to do is stay as far away from the election as he possibly can. And that's why, Andrew, I have a plan for the Fed to avoid the election, which is May, July, November. If they want to, first of all, I like the idea of that Powell has in the past done this every other meeting thing. Cut, wait to see how it plays out, wait a meeting, cut again. If you do that, you start in May, which is a little bit later than the market wants, which I think is a good message to this very hyperactive market. And then you wait a meeting, and then you go in July, which is before the silly season, aka the election season. And then you can cut right after the election, if you look at how the meeting comes, it comes the day after the election or 2 days after the election. You cut in November, you're apart from the election, and then you have an option to do December. So you dial in 3 essentially, and you have an option on a 4th this year for 100 basis points. And that's, of course, if the inflation data cooperates. But I think if the election matters at all, it's that the Fed wants to do what it's going to do apart and away from being seen as having any impact.
Steve Leisman, thank you, sir.
Sure.
Our next guest says that he sees more room for the markets to rally from here. Joining us right now is Stephen Parker. He's the head of specialized strategies at JP Morgan Private Bank. And Stephen, I think you're getting at the issue that people are wondering everywhere right now. If you haven't been invested, the market's at new highs after this kind of crazy start to 2024. People are wondering if they missed out. You're saying it's not too late.
No, I don't think it's too late. You know, last year markets certainly were climbing the wall of worry. Nobody wanted to believe in one of the strongest rallies that we've seen in a long time. And now you get headlines about new all-time highs, and that gives people a reason to think that maybe it's time to sell. The reality is, if you look back historically, buying at all-time highs has actually been a very good strategy. A year later, you're typically up 70% of the time, close to 10% returns. So I think the focus should be less around the headlines and all-time highs and more around the fundamentals. And we think that the earnings story is compelling. We think that the policy story is going to offer tailwinds. And we think that the corporate sector is in really good shape.
What's the counter case for this? I think a lot of people want to believe this. There's a ton of money on the sidelines, and there's probably a pretty good argument for it. But if you had to make the counter case, if you had to argue on the other side, what would you say?
I think the counter case is that, one, markets seem to be coalescing around this view that inflation is softening, which allows the Fed to ease because of that inflation story, not because the growth story is really bad. I think if we were to have some sort of shock and see a downside surprise to economic growth that forced the Fed's hand because of a slowdown rather than inflation cooling, that's potentially a big risk to the market. But that's not our base case. It's not showing up in any of the data we're seeing.
Let's say the Fed decides not to cut rates, but they do what Steve was just discussing, and they stop quantitative tightening. Is that in itself enough liquidity or extra boost to the market to keep things going?
I think that probably causes a sell-off in the short term. I think markets are coalescing around this idea that the Fed is going to be cutting rates this year, and while the end of QT would be an easing method for financial markets, I don't think it would be enough. The good news is the expectations around what the Fed is going to do have come down a little bit. If you went back
But if it's not enough, if the economy is chugging along, things are good, and the Fed takes its foot off of the brake that is quantitative tightening.
I think the reason why markets would take that negatively is because they would view that as a sign that the Fed is a lot more worried about inflation being sticky or turning up again. If they weren't willing to cut rates, particularly given what markets have priced in at this point, I think that would be the big fear that would be expressed and caused a pullback. But frankly, won't be
that may not be your base case, but that doesn't seem like a crazy scenario.
I think what you would hear from the Fed has learned their lesson over the last decade or so. They're going to communicate, they're going to over-communicate, they're not looking to surprise the market. So going to where we are today, which is markets pricing in 100 to 125 basis points worth of cuts this year, to not cutting at all, I would view that as a big shock, and markets
Is the market listening, though? Because it seemed that when the market made those assumptions, the Fed sent everybody out to kind of talk back those expectations.
Yeah, but if you look at what's being priced in, I think there's a little bit of a balancing act, and I think maybe the 125 basis points in cuts, markets may be a little bit more sanguine in terms of how much we'll see, but I think the direction of cuts is certainly being priced in, and that would be a shock, particularly in terms of the communication side of things, that I think would rile markets a little bit.
All right, so where do you like best? What sectors within the market?
So there's a couple areas that we really like. We do think, despite the strength last year, there's a lot of opportunities in tech. There's a lot of focus on the Magnificent Seven. But when you think about those companies, they look expensive relative to their history, but not so much relative to the growth rates that they're delivering. Tech also has little to no debt, so there's not an issue around what's happened with higher rates. And tech went through an earnings recession last year. So we think that the growth outlook for the tech sector looks really good. Early reports are positive on that end. We also think that the rally widens out. Small and mid-cap names, particularly more quality parts of the small and mid-cap area, which actually started to outperform in the back half of the last year. We think there's still a catch-up trade there.
Stephen, thank you.
Good to see you.
But coming up, trends in the health wearable category heating up. This is an Andrew story. Samsung jumping into the ring business. What were you today? 80, 85 yesterday, right? We're going to speak to the CEO of Aura.
Yeah, I'm down to 77.
No, I could tell. I could tell. Couldn't you?
I'm not getting sick. I know you.
Talk about.
I know you think I have a cough, but
We're going to talk about the new competition. When you come back from Davos, you have something, okay? And then former Maryland Governor Larry Hogan joins us with the reaction to former President Trump. Huh?
That was weak.
You do it.
Hogan.
I know nothing, Schultze. Well, we'll be talking about Trump's win in New Hampshire. Let's try. Hogan.
Hey, too low. You're sick too.
And in the next hour, Senator Jerry Moran plans on meeting with Boeing's Dave Calhoun today to discuss the company's response to the latest in-flight incident. Is that what it was? On an Alaska Air flight and the grounding of the 737 MAX 9. He will join us in the next hour. Squawk Box begins right now.
Welcome back to Squawk Box. Samsung recently announced it's developing a smart ring.
We've created a powerful and accessible health and wellness device here to change the shape of future health like only Samsung can. Meet the Galaxy Ring.
We talked about this briefly in Davos the day that it was announced. This now putting Samsung in direct competition with smart ring maker Aura and raising the stakes in the tech wearables market. Joining us right now is Aura CEO Tom Hale. And the reason I mentioned it even in Davos, Tom, is as you walk around Davos, at least among the sort of mogul crowd and maybe wannabe moguls, like, I mean, maybe I'm in the wannabe category because I wear one. You know, so many people have their Oura ring and they literally come up to each other. You guys don't wear one, but people come up to each other and say, what's your score today? How'd you do? There's a lot of people in Davos who are like, I don't want to look at my score right now because they're all screwed up. But this is a, something, you know, whether it's Mark Benioff or you name the person, they all wear the ring. But Tom, thus far you have not had what I would describe as meaningful competition. This seems to change that dynamic.
Yeah, look, we're an innovator in this space, and we've been working on this for 10 years, and it's a hard problem. It's not easy. Announcing that you have a smart ring is pretty easy, although it doesn't take much to imagine that you could do it. It turns out that it's very difficult. Our innovation, our investment, hundreds of millions of dollars, countless hours of effort, you know, we've yielded a product that people love. And so, look, we welcome the competition. It's validation for the category.
But Tom, here's the thing. So by the way, and Joe would probably want me to disclose, my readiness score this morning is a 77.
Yep.
Though I did get an 85 on my sleep last night. So my readiness is worse.
Is it digestive?
I had a higher heart rate. I ate some sushi, which I think was a little salty last night. My HRV was very low. It's a longer story. We don't need to discuss this on the air.
You're sick. That's
and they all seem to think I have a cough, but I'm okay,
You're
Tom.
sick. Both of you are.
She thinks we're both sick, Tom.
You are.
The question, though, is this. One of the things that we've been following over the last several months now has been this battle over a patent dispute on Apple's watch around blood oxygen levels. You have, I think, 120 patents on this little ring. I'm holding the one that I wear up on the screen. Can somebody else even make a ring? And should they be able to make a ring? I mean, I think there's also a public policy question about this. Without infringing on your patents, meaning I imagine you're going to be combing and breaking apart the Samsung ring to go sue them.
Look, we've been investing in IP for 10 years. That 150 patents, those are the ones that you can see. There are ones that have been filed that haven't even landed yet. I think it's very important for us to protect the innovations that we brought to the market and to make sure that we do that. The Apple and Massimo story is a David and Goliath story for the ages. I mean, who would have thought that Massimo, this company that I think very few people have actually heard of, but is incredibly innovative and it has invented the category of pulse oximetry, you know, it has been able to get Apple to take a product off the shelf and remove a feature from their product. So look, having an IP strategy is critical, but it's not where we're focused. We're focused on delivering for our customers and creating value for people like you so you can understand your health journey and figure out whether or not you're getting sick after Davos.
I didn't even know what the guy, he goes, we're going to make a ring like only Samsung can make it. So I need them to explain that to me. What if I want a ring like only Aura can make it? And what are we talking about? What kind of ring would that be? With like a big widescreen TV ring, or what kind of ring would Samsung make that only Samsung can make it? That's just like, what was that?
Listen, I think you know, it wouldn't be the first time that marketing has been exaggerating what's possible. I think the reality is that we'll see what gets delivered in the market. We'll see whether or not it infringes on us, and frankly, we'll take the action that's appropriate.
Right.
Honestly, we welcome the validation. We welcome the idea that smart rings are something that people should have.
Can you just explain this to us though here, because it is an interesting public policy question. Given what you know about the Massimo back and forth with Apple, is it possible that anybody could ever create a way to monitor blood oxygen that wouldn't infringe on their patent? Meaning, are there certain things, and this could be true of your ring too, and this is why there's an interesting public policy question about whether there could ever really be competition if certain patents are so expansive, or I don't know if so expansive, but expansive enough.
Yeah.
Can somebody invent something that does the same thing in a different way?
Look, anything is possible, but there are certainly things like the laws of physics or the approach that you might take to pack a small number of sensors into a very small space, or the algorithms that you use to create biosignals and turn them into meaningful data. I think those are things that we'll see when the product's in the market and the evidence is in. Quite frankly, you know, we're just excited that the whole category is getting a huge vote of.
There's no blood oxygen. There's no blood oxygen sensor on the ring, right?
Actually, blood oxygen is one of the things that we sense, and we
How
do
is
it
that
in
different
a.
than the pulse ox?
It's the same mechanism, but it's actually a very different approach. For example, the number of sensors and the way that you sense it is
Tom, that's where
it's a
I feel
different
like
location on the body.
that's where I feel like there's an in potentially, though. I mean, people could say you just changed the way pulse ox already did it, so why couldn't people change the way you do it? You did it this way, laying out the ones, and they're going to do it this way, laying out the ones. I mean,
All right, you do have blood oxygen. I turn my blood oxygen off, Tom, because people say that once you know your blood oxygen is okay, if you don't have blood oxygen issues, that it drains the battery. True?
It's classic that the blood oxygen, once you know that you don't have something like sleep apnea or that you're not sick, that you don't need to see that. It's not a metric that changes
so
over.
I turn mine off because I do think it takes battery.
Wait, you can measure sleep apnea with an Oura ring?
Yeah, you can.
Lots of
Because
people have
the
seen
actual test for it is such a pain in the ass. You got to do it on your back, got to do it on your side. I'm avoiding it. I may have it.
It's something that affects a large
I will buy
population.
you an Oura ring as a present because you know this is the one thing. I mean,
Will you hook it up to my iPhone? Will you hook it up?
I'm not sponsored.
Well, what if I want a ring like only Samsung? What if only Samsung can make it?
Well, maybe we'll have to wait.
Will
for
you
that to
hook it
come
up to
out.
my iPhone? That's what I'm worried about. How do
I'll
you do
hook it up
that?
to your iPhone.
You Bluetooth or something?
Yeah, Bluetooth. Tom, can you help? Joe?
Absolutely. Listen, we'll make sure that you get connected. The reality is that we're not trying to get you into a closed, ecosystem. We're across ecosystems. We work across iOS and Android.
You should get one.
We're there for you.
I think I said I'd buy him one. I think it's for $299.
Oh, that
right,
one.
Tom, is that right? $299.
That's right.
$299.
You got it.
That'll never happen.
Why?
Well, you could say it's been for the last 5 Christmases or something, right? Although you said ice cream.
he sent you ice
He
cream.
does. I don't
send you ice
I
cream.
don't send him. I
Tom,
send him my
it's
good
not-
wishes.
and the ice cream's not good for your Oura ring score. Tom, it's great to see you. Appreciate it.
Thank you, Andrew. It's great to be here. Cheers.
Next year, I'm sending you cigarettes. Coming up, Tom Chu with a list of stocks to watch. Let's check out the futures right now. You're going to see that we're in the green across the board. Dow futures up by about 100 points. NASDAQ up by 132. The S&P up by 21. Squawk Box will be right back.
Time now for today's Aflac trivia question. What year did Netflix launch its streaming service? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What year did Netflix launch its streaming service? The answer, 2007. Prior to the launch, Netflix offered DVD by mail, which began in 1999.
And welcome back to Squawk Box. I'm Dominic Chu. Here's a list of stocks that you need to watch ahead of the opening bell this morning. We'll start with late-breaking earnings news. Out of telecom giant AT&T, those shares are down roughly almost 4% right now, nearly 700,000 shares of pre-market trading volume. The report here was mixed. Profits per share came in below analyst forecast, while revenues were a beat. Now, much like competitor AT&T with Verizon yesterday, AT&T did report better than expected growth in wireless subscribers that pay a bill versus prepaying for service. But it's AT&T's full-year profit forecast that did fall shy of expectations, where its free cash flow forecast came in better. So overall, AT&T shares down roughly 4%. Also late-breaking, earnings on DuPont-ish. The specialty materials company behind everything from Tyvek housing construction wrap to Kevlar used in body armor is down right now 11.5%, 50,000 shares of volume. It reported preliminary quarterly results, pre-reported results that largely came in below what analysts were expecting, both on earnings and in revenues. It also battled continued weakness in China during the quarter. DuPont is also saying it's seeing similar trends developing in the current quarter. Also expects quarter-over-quarter declines in sales and profits as well. So that's the reason why those DuPont shares are down 11.5%. The big earnings headliner from last night's close that's still having a big impact this morning is Netflix. The streaming video giant is up nearly 10% at this stage right now, over 250,000 shares of volume. It reported mixed results. Profits came in below estimates. Revenues were better. But a lot of the positive stock price movement is being attributed to a big beat in subscriber growth. Netflix added 13.1 million net subs last quarter versus expectations for around 8.9 million. Its current quarter earnings forecast came in above estimates, while the revenue forecast fell shy. And we'll cap things off with a check on Amazon. The e-commerce and cloud computing giant is up nearly just about 1% or so, roughly 125,000 shares of volume. Analysts at Morgan Stanley have tagged Amazon as a top pick heading into its earnings report, slated to happen on February 1st. They cited things like positive catalysts like the rollout of advertising on Prime Video, alongside more bullish expectations around key profitability measures, more than what the street is currently pricing in. So, Becky, a whole slate of these movers out there. I'll send things back over to you.
And Dom, you know we're getting ready for after the bell stuff. Tesla, that's going to be a biggie to watch too.
Yes, and that's one of those things I'm continuing to kind of track what's going on with the options market right now. Things could get a little volatile around Tesla, but it's been one of those stocks, you know, I don't know. It could be it could be fireworks by the time this thing comes out this afternoon.
Could be. All right, you're tracking it. We will check in with you a little later. Thank you, Dom.
Okay.
When we come back, former President Trump winning in New Hampshire, Nikki Haley vowing to keep fighting. Former Maryland Governor Larry Hogan will join us next with his reaction.
Hogan.
And later, a preview of Tesla's quarterly results that are out tonight after the bell. Squawk Box will be right back.
We've won almost every single poll.
We still have a ways to go, but we keep moving up.
Former President Trump winning the New Hampshire primary over former South Carolina Governor Nikki Haley, getting nearly 55% of the vote. Governor Haley vows to fight on as the battle heads to her home state next month. Joining us now, former Republican Governor of Maryland, Larry Hogan. Sometimes I defer to my son on this. He tells me that South Carolina is a solid plus 10R, and she may have been the governor there, but it's just hardcore Trump country, and it's not going to happen for her there, I don't think.
Well, I think she's definitely behind in South Carolina. Trump's very strong there, but she's got basically a little more than 30 days to make up those points, and I think she got a little bit of a boost last night. I realized she didn't win, but there were Trump people were talking about, I heard Eric Trump saying that it was going to be like Iowa. They were going to blow her out 20, 30 points.
But it looked like 7 or 8 and turned into 12.
So it wasn't a great night, but she's, the whole, for a year and a half, people have been saying we want to get into second place in case Trump stumbles. She cleared out 10 other guys.
Yeah.
She said, cleared out the fellas. She's the last person standing. I get it. She's down, but I thought she gave a good speech last night. I like the fire in the belly and still taking it to them. What do you got to lose? We had a lot of people come out and vote. Huge turnout among Republicans and independents. That's probably good for democracy.
But that's the bigger issue. That's kind of unique to New Hampshire. You don't have that in South Carolina and many of the other states where you're not going to have the moderates or the independents who wind up voting. You've got to be registered as a Republican, and Donald Trump definitely carries more weight there.
Yeah, he's very strong right now. But look, she was a very popular governor and got elected there twice. I get it. People are all in for Trump, but any number of things can happen in the next 30 days. And then they go, we still like Nikki.
She appointed Tim Scott standing next to Trump.
Yeah, well, that and the governor, Henry McMaster, and
what about you?
Lindsay, they're all standing next to Trump.
Wait a second, you just said before, any number of things could happen.
Yeah,
that's kind of what the Wall Street
conviction.
Journal points out today as well. The idea of a conviction. Is that what people who are still supporting her are kind of hanging their hats on?
There's so much turmoil out there, and 90-some counts and all these different cases, and she continues to say kind of crazy things. So I saw one poll that said he would drop 18 points if he was convicted among Republican voters. So that gets it.
You got, Georgia, I don't know. She's got more problems down there than almost Trump had. We'll see what happens. And Alvin Bragg, that almost emboldened people to back. The Washington case, they say, is the one that could be significant. And there's, who said that, Jake? I don't know. There's not a single Republican that even lives in D.C., supposedly.
Well, there's one or two, I think. Yeah. Look, it sounds like you're giving up, but I'm the eternal optimist, and I like the fight. I like to see the competition. I mean, I wouldn't bet all the money on it, but...
well, I don't need to give up. If they're, like, you ask at the very beginning of this most of the time, will you support the nominee?
Yeah.
They ask all the other Republicans, so... that if it's a binary choice, that's an easy choice for a lot of Republicans, not for you.
It's very likely not to be.
You would never vote for Trump no matter what.
No, I can't support
You'd
Trump. I wouldn't vote for Biden either, but I think there's a very high likelihood that there's going to be another choice. And
like who?
Why do you think that? Because no labels, there's got about a 95% chance of getting access to the ballot in all 50 states, and I don't know who that ticket might be, but they're talking about a unity ticket.
Or Manchin, or
between with the Republican and Democrat running together to put the country first. I don't know who that's going to be, but I think latest
polls. There's going to have to be an enormous amount of. All of a sudden, donors are going to have to come out of the woodwork like crazy.
Well, that's a good question.
I mean, the amount of money.
Hey, that's why we're here.
Okay.
But there are a lot of donors that don't want that binary choice, and 40-some% nationally. It looks like New Hampshire, 40% in the whole country are independent, far more than there are Republican and Democrat. And among the Democrats, half of them don't want Biden, half the Republicans don't want Trump. There's a lot of frustration out there, and we just don't know what's going to happen between now and November.
You need not only donors, you need to get on the ballots on these states.
Yeah, it's a struggle because Democrats are suing them and trying to, stop, the basic tenet of democracy that citizens can petition to get on the ballot so they can have choice. They're going to get, I think, access to the ballot, which hasn't been done before by a
Is they you, Larry? Because you
No,
stepped
it's
down
not
from the
me.
leadership position.
I haven't made any commitment at all, but I've been involved
But
in
you
that
stepped
group.
down from the leadership position.
I was an honorary
that
chairman of the group. I believe in what they're doing, trying to bring about, common sense and common ground and finding bipartisan solving problems instead of just making noise. It's the angriest, loudest voices get too much attention. But no, I'm not sure. I'm not sure where that goes, but I think it's probably healthy rather than unhealthy for them to have the ability to do it.
We thought initially, a year ago, that the Democrats were geniuses because they were going to make sure Trump was the nominee, and he's the person that Biden thinks is the easy. Suddenly, I think in recent months, that narrative has started worrying Democrats because they're starting to think, he might win. And we were in Davos where most business leaders thought Trump was going to be the next.
There's no question that
president.
Change in the narrative, and the Biden people were overconfident. They were pushing for Trump. I mean, you hear
he's been off
them
Twitter.
spinning about it's all over. Trump is the guy,
Right.
but Biden continues to weaken. Biden is the least popular president in American history. He's down in the 30s. Kamala Harris is in the 20s. And they're starting to message against her. So it's the two least popular presidents in modern history.
Crazy rumors.
But Biden has dropped. That also hurt Nikki Haley. Her main issue was she's beaten Biden by 17. Trump can't win. And now everybody's like, it looks like Trump can win.
Gossip column, Cindy, Michelle
Cindy Adams
Obama,
say?
Gavin Newsom, he steps
yes.
down after right before the convention or something.
These sort of rumors.
Look, it's certainly possible. They do have the ability to do that. No one can get in now because of filing deadlines, but the convention in July or August, for Republicans are in July, Democrats are in August. He could say, look, for the good of the country, I'm turning it over to the next generation of leaders. He said he was going to be a transitional president. Nobody thought he was going to stay there for 8 years at his age.
They'd both be lame ducks.
Yeah,
choices that we have.
They are both lame ducks. They can only do 4 years, so right away, we're not going to, whatever happens, we're not going to have to put up with for that long.
Is there a...
Well, but a lot can happen in 4 years.
I agree.
We've seen what's happened in the last two.
Is there a vice president that Donald Trump could pick where you'd say, I'll support that ticket?
I think I think the smart move for Donald Trump. I'm not interested. I don't think he's going to call.
He might not.
I thought the smart move, which I didn't think he would do, but if I were Trump, he should have picked Nikki Haley, who's got tremendous support and brings in the kind of Republican wing of the Republican Party. No, it's he's going to. Trump demands ultimate, complete loyalty and fealty. He's going to find somebody like I think. Elise Stefanik or Sarah Huckabee Sanders or Kristi Noem or somebody that's going to do whatever he says.
I thought he liked Henry McMaster, didn't he?
He does like Henry McMaster, right. And he's a pretty good guy too. But he's I'm not sure he's really. They are friends. So he was the first statewide elected official to endorse him when he was lieutenant governor.
I just watched an interview with Trump where he made this sort of comment about Henry McMaster in a sort of way that made you think.
Well, it's possible. He's also been running around with Doug Burgum, who's a buddy of mine. That's ran and he's the North Dakota governor. He'll definitely end up in the cabinet, but you just don't know. Yeah. He's been working on it.
So you didn't say, so Trump, Haley. Who do you vote for Trump?
Trump, what is it, Trump, Haley? Trump the ticket. I just don't think Donald Trump should be anywhere near the White House. And look, I'm a lifelong Republican. I was a chairman for Reagan, but this is not my Republican Party.
You don't think democracy's over? I mean, don't you think we have a pretty strong system of checks and balances?
I understand the frustrations and concerns. I think there could be some it's going to be a wild ride between now and November, but no, I don't think it's the end of democracy, but I think we're going to have a bumpy road.
No, if you were to get back in, you dictatorship, you read what...
I would hope that
see what's on some other networks.
Sometimes with Trump,
I think there's a
lot of bluster, and he says outrageous things on purpose. But he really didn't get anything done in the first time. He said, so people, they're cooler minds. There's still reasonable people that are left in Washington. They are going to provide guardrails from any crazy stuff from happening.
We were in Davos, and I was in shock just watching it. I still am watching Jamie Dimon. I think he was making a case to Democrats to not just write off every person who's a Trump voter in this country. Don't make a basket of deplorables or guns and Bibles and all the stuff that the left elitists say about Trump voters. I said something today. I said that WWE and Trump voters are the same people.
But they're the same people. Yeah, I mean, I agree with that. There are certain people that are just, you're like, how How do people think the election wasn't, the election was stolen, that January 6th never happened, and but that's a smaller group. There are a lot of people that say, look, I don't like all the things Trump says and does, but the economy was good. Right. He was pretty good on this and that. And so he's got 50% of the Republican vote. Half of them are, run through a wall, die hard. The other ones are like, he's better than Biden.
Exactly. Hogan, how do you have you been through your life? Do people do the Hogan's Heroes? Have they done
I used to do some radio shows. They would play that theme every time I
They
got
would? See? It was 40 years ago, but I still.
And these guys are like, what's Hogan's Heroes?
I know. I was just playing Colonel Klink. We were trying to find
I
it.
love all those people. Bob Crane had an untimely demise. Whoa. Okay, Larry, Governor.
Thank you for having me.
You call, we want you here. So
thanks. It's fun to come see you guys every once in a while.
I saw you on some competitor last night, but that was okay.
I did 3 last night.
You did?
I'm doing another one after you, but you're my favorite. That's why
Which one do you think I saw?
He says it's all the girls.
You probably saw the Fox one.
Yeah. Well, what else? Where else were you?
I was at News Nation and NBC.
Oh, I could have seen you.
I'm doing CNN after you guys.
Or NBC.
We call this a promiscuous guest.
Promiscuous.
Yeah. Really? Yes. That seems a little bit pejorative.
No, I'm just saying. You're on all the.
Yeah, that's
I gotcha. Yeah, well, I'm not in New York that much, so we say, hey, we're going to be there in New York if you're interested, and then everybody said, I'm interested.
There you go. See.
Then I'll go home and you won't see me for a while.
He's coming along. You're coming along. You stepped out of the green again. You did.
Yeah,
proud of you. Just saying.
Governor, thank you.
Yeah, thank you.
When we come back, the earnings parade continues as we await results from Tesla. Those are due out after the bell today. We've got a preview straight ahead. Squawk Box will be right back.
Member.
Coming up next, it has been a bumpy ride for Tesla stock so far this year. Hertz shedding thousands of cars, production halts, and price cuts in China having an impact. We're going to preview what the company will say after reporting results this evening. By the way, I think JP Morgan has them on their There are a list of companies that they like. Remember we were talking about which ones that, anyway, Squawk Box.
Tesla expected to roll out quarterly results today after the bell. We want to get over to Phil LeBeau. He's got a preview of what to expect. Phil, it's pretty big numbers, right?
These are big numbers, and it's really the guidance. That's what people are going to be focused on, in addition to some of the key metrics that we'll get from the fourth quarter. So here are three numbers that we're going to be watching for in terms of expectations and then what the company ultimately reports. Earnings per share, the estimate is for 73 cents a share. Gross auto margins, and this is important, excluding zero-emission vehicle credits. It's been coming down at a fairly regular clip. 15.7% is the expectation for the fourth quarter. Average transaction price, just over $43,000. Now, three things within either the conference call or what the company says in terms of its guidance. First of all, deliveries for 2024. They delivered just over 1.8 million vehicles in all of 2023. Most believe it's going to be about 2.1 million is the estimate. That would be about a 17% increase relative to 2023. Then there's the Cybertruck. Delivery started last month. We haven't really heard much in terms of, okay, how many did you actually deliver in December? What are you noticing in terms of demand that is out there? What kind of commentary does Elon Musk deliver, aside from the usual, it's the greatest vehicle in the world, blah, 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 blah. It's the key metrics that people want to hear. And then finally, China pricing. Once again, we have seen price cuts within the last 6-7 weeks from Tesla in China because the competition continues to cut their prices on electric vehicles in that country. This is the reason you see the auto margins continuing to come under pressure. So as you take a look at shares of Tesla, remember finally the conference call is at 5:30 Eastern, and that's when we hear from Elon Musk. And some of these conference calls, and we've talked about this before, guys, sometimes you get Elon Musk where he's going to say things that are going to make news the following day or days. Sometimes you get Elon Musk like we've had the last couple of quarters where he's pretty subdued. So that's what to expect after the bell with Tesla.
Phil, thank you. We will be watching.
Okay, for more on what to expect from Tesla's results, I want to talk to Garrett Nelson. He's senior analyst at CFRA. Give me the big expectation for you, and maybe if there's a surprise on your mind, what you're worried about.
Sure, thanks for having me. No, we agree with Phil's preview. We think the focus will be on gross margins and also any guidance related to 2024. Now, on the guidance, we think they might not actually provide volume guidance for the full year. They might focus more on what they think their production capacity is. But we'll see. You know, we know Tesla's coming off, well, Q4 was a record quarter in terms of vehicle production and sales. And the company has a really solid earnings track record. They've only missed once in the past 11 quarters. So we're bullish on Tesla heading into this release. The stock's had a nice dip so far this year after the stock more than doubled last year, which we view as healthy price action given the massive run-up that it had in 2023.
Do you think we're going to hear anything about this idea of whether he wants to stay as the CEO of the company and how important that is going to be? Obviously, he's made these comments about AI and wanting to have more control of Tesla if, in fact, they're going to be building out AI. And if he doesn't get that control, that he might try to build that AI outside of the company and the implications there?
We'd be really surprised if he addressed that on the conference call. You know, we view those recent comments as mostly posturing. But he's in a bit of a standoff against the board. Of course, they're waiting a ruling in a Delaware court case regarding his prior compensation package. So we really view that as posturing ahead of a ruling from the court, which could come in the coming weeks or months.
And what is your take on, I mean, we sort of read a litany of headlines recently, including this Hertz news around selling some of these vehicles and the like. Do you look at that and say, I mean, part of you I hear is saying this is an opportunity in terms of just the price fall, but do you think there's a larger macro headwind challenge to Tesla, or is it the EVs and Tesla's excluded? Is it idiosyncratic? How do you think about that?
There's no question the U.S. EV market is in a state of oversaturation today. But the good news is that if you look at the EV price premium, so the premium at which EVs sell to the average of all vehicles, in December, that premium was only 4%, down from over 30% a year ago. So EVs are coming down in price much closer to parity with gas-powered vehicles. And so we think, you know, really the market oversaturation, the issue is more with non-Tesla EVs. That's where the demand problem is. And in December, inventories were at 114 days supply for EVs overall. That's extremely high because the historic average in terms of day supply in the U.S. is about 60 days. So, but we view that more as a problem for non-Tesla EVs. We know demand is very strong for the Cybertruck, and they face a high-class problem, which is how quickly can they produce these vehicles and get them in the hands of reservation holders.
Well, Garrett, that's I've heard it a million times. People don't jones for a EV; they jones for a Tesla. They don't say I want an EV. They say I want a Tesla. Does that ever change? What would that take to say I want? What's GM? I don't even know what they make. They make those things you can't park near your house. What's that called? A Volt or a Bolt or something. What's the most popular big three EV? Has anyone bought one?
Tesla's still the dominant player.
No,
they had 55% market share.
What's the most popular big three EV?
Oh, it would be the Chevy Bolt. The Chevy Bolt.
I'm not thinking I want one. I'm sorry.
Yeah, we got to run. Big hour ahead. We will talk to you soon, I'm sure, as we see these numbers later today from Tesla. Thank you.
Like one of those plaids, you know what I mean? Like a red one.
Would you like one?
Taycan. I would take a Taycan. Take a Taycan.
Would you take that over an Oura Ring? We got to go. We'll be back in just a moment.
CNBC.
Good morning. Earnings in focus. We've got results from AT&T, and we are watching shares of Netflix spike on a huge subscriber beat. Meantime, former President Donald Trump taking a victory in the New Hampshire GOP primary, but former South Carolina Governor Nikki Haley putting up some big numbers on her own and now turning, her attention to next month's vote in her home state. And earning perks by paying your rent. That's the business of Built Rewards. We're going to be speaking with the company's CEO and newly appointed board chairman, Ken Chenault, in a special interview right around this table in just a little bit. The final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin, and we're back, indicated above 38,000. We were only there, I think, for one day on the Dow, but you can see we're up 105 points. S&P also indicated higher, and NASDAQ getting Netflixed, I think, to some extent. Big gains in Netflix and NASDAQ, outperforming some of the other indices as well. Treasuries this morning, there's a 10-year 4.11.
Among today's top business stories, AT&T shares falling in the pre-market, fourth quarter earnings missing the street's expectations, although sales did beat estimates. The company also projecting 2024 adjusted earnings per share below what the street was expecting. You can see that stock right now off by about 2.8%. Meantime, Netflix is surging, the streaming giant adding more than 13 million subscribers in the fourth quarter. That is well above the 8 to 9 million that were expected. Netflix projecting first quarter earnings are also above what the street was forecasting. We'll hear much more about the big quarter from Netflix a little later this hour. And eBay says that it plans to eliminate 1,000 jobs, or about 9% of its workforce. eBay's CEO told employees in a letter that the company's headcount and expenses have outpaced its growth. This comes alongside other recent tech job news, including SAP's announcement yesterday that it's looking to do voluntary buyouts or enable job changes for 8,000 employees as part of a restructuring program.
Meantime, I want to get over to talk about the broader markets and turn to our own Mike Santoli. Mike, what are you catching up on this morning? What's catching your attention down at the New York Stock Exchange?
Well, Andrew, first off, it's the persistence of this rally, this breakout that we've gotten to new highs. 3 straight days for the S&P 500 at a new high, looking to add to that this morning. And we're on this track here. We really just went sideways for maybe call it 4 to 5 weeks as we digested that fourth quarter gain. And now that we've broken out higher, it looks like one of these, sort of platforms that you might consider that you're in for a while, and then you got the breakout. If you want to look back to the spring, we got about a 2-month, 10% gain off of that level. That would mean you had a little more to go here. Obviously, it's nothing that says you have to be in parallel. But one thing I'm watching is, this trend off of the September-October low kind of takes you, if you just want to extend it higher, you look at all the connecting where the rally has kind of reached and then stalled out. It gets you a little bit above 5,000, let's call it 50-50 or something like that. That would be roughly 10% up from this breakout point of 4,600. This is all this chart stuff, but what I think would happen if we managed to get to 5,000, it's only up 3% from here. That's a big round number. That's 20 times a really aggressive forward earnings estimate for S&P 500. I think it might be a stop and reassess type of a moment. Of course, you can always overshoot, but that's something to keep in mind. If you get to 5,000, you're 20 times the best estimates of this year's profits for the S&P 500. Looking at a couple of leadership bellwether areas, home builders and semis, amazing how much they've moved in common over the last year or so. A little bit of a downside gut check in home builders yesterday. D.R. Horton, good numbers, but some hesitation about the orders. So you do have a little bit of a sense out there that maybe home builders have priced in a lot with this move off of the decline in yields. Maybe if the whole housing market frees up a little bit, the scarcity value of the builders have been enjoying maybe goes away. Semis still working, although it's very narrow. It's NVIDIA and AMD for the most part. Texas Instruments is looking like it's going to back off this morning. Finally, a lot of focus on the shipping costs going up again. It seems like it creates these echoes from the pandemic. But look at the broad commodity exchange traded ETF. It's in basically broad commodity index. This is 2 years, full round trip. really nothing coming out of commodity related inflation. So that's something that I guess we can sort of take some comfort in.
Thank you, Mike. Appreciate it.
Joining us now for a closer look at the markets, Michael Bappeth.
Yes, there he is.
Private advisor for Vios Advisors at Rockefeller Global Family Office. How many cuts this year, Michael?
That's tough to say, but I think, look, I think
Does it matter?
I don't think it matters. I think inflation's under control. I think a lot of people have subsided the discussion about inflation. What I think was the problem is that they raised rates way too fast and went way too far.
They did?
You're going to see.
I know, that's your opinion.
Yeah, and look, I think it just was a knee-jerk reaction. Hindsight's 20/20 though, but I think, you know, inflation's under control right now. Rates will start to come down when, that's to be determined, but I just think that whether they cut 25 or 50, if something dramatic happens, then people will start looking at it.
I guess to take the other side, someone would say we had horrible inflation. The Fed brought it down,
right?
By doing with it. The market's still at new highs, and we are maybe going to get a soft landing. It looks like they did everything perfectly, and yet, do you think by going too far that there are some reckoning that's in front of us? It hasn't happened. Something bad is coming.
I think it's the opposite. I mean, I think you know, earnings are coming in strong right now. We're seeing technology is not going away. It's only getting stronger. It's only dominating the world more and more. We're seeing as rates come down. Obviously, where's the place to turn? It'll be the equity markets.
But I guess my point was, you said that they went way too far, way too fast. Why? It looks like they successfully did what they had to do. What's not to like was my question for what the
Just
Fed
the rapidness. Anytime the markets get something happening really fast, and it becomes panic.
So we'd be even higher. The markets would be even higher now if they hadn't done that.
The volatility that came with that is it's normal, but I just think that it doesn't matter in the short term. We're looking in the long term, and I think that with that, we will see the markets go higher.
Sick.
You all think I'm
Both of
sick.
you- no, I think
just got a
both of you
cough. I have a cough. It's
throughout the
fine.
entire
It's
time.
fine. It's fine. Can I just ask Michael though about the
Yes,
election?
please.
We're in an election year. And
Is that this year?
You heard about that? Yeah, we're in an election year. And historically, election years, if you
Are
just
good.
not like marginally good, just marginally good, and oftentimes, if you really look at it, first half of the year is very choppy, and then oddly, it gets a little bit better then. So the question is, do you think that this election year is somehow different than others? Maybe it's the better way to ask the question.
That's a great question. A lot of people are asking that because it is so in focus, but we've had how many election years? We've had you know, times when it becomes really volatile, but I don't think this year is any different than any other year. It's going to be on the first Tuesday of November. We're going to see someone win the presidency. There's going to be a lot of talk leading up to it, but from a market perspective and from
Do you think that there's no, that's a question, do you think there's a distinction between how the markets would perceive one versus the other? Remember, when Trump won, there was what we were, you know, everyone was talking about the Trump bump and how it was going to change. The taxes were going to come down, all sorts of things were going to happen. Then everybody thought Biden was going to come in and make it impossible. By the way, the markets actually outperformed. And it's a very weird situation.
Look, with all due respect to our presidents, because they you know, obviously it's a very difficult job. I think when it comes to the markets, asset allocation, everything that we do day to day, it's only a very small percentage of what really matters in the markets and what you do with clients' assets.
We do have a pretty good system here for the private sector to flourish in. I mean, around the edges, it can make a difference, I think. But
it's so hard to see so much focus go into these elections when from a financial perspective, it really all works itself
You think
out.
AI is more important than the election?
I think there's a lot of, I don't know if it's more important, but there's going to be a lot of changes coming with AI. I mean, if you think how far we've gone from the mid-90s till now from technology, you think it's whatever, 25, 30 years. Can you imagine what it's going to be like in another 30 years? And that's why you're seeing technology earnings just continue to grow and continue to drive the markets. And the broad markets, frankly, haven't moved that much.
I mean, I don't think we can really understand how the iPhone changed the world, really. I mean, I watch things that I think were made just a couple years ago, watch things, and they didn't even have flip phones. They had to use it like a pager to get in touch with some. I mean, we have a Sperry Univac that used to be on 4 floors in our pocket. It's just.
And I have, daughters 18 and 16, and they have no concept of what this world was.
Now, I can't imagine that AI could even be more powerful than what we've already seen in my life or in
It's trending that way. I mean, it's really going in that direction.
Well, we need to find out
We need to find out how to understand it first.
How to understand it and who the real beneficiaries are, and maybe the people that build the guts of it and get, I guess, NVIDIA. I don't know.
And something people have stopped talking about, but it's still going to change the world dramatically too, is this blockchain technology.
You believe that?
I mean, I think there's so many different avenues of technology that are changing the world right now, that in 30 to 50 years, it's going to be...
Okay, can you give me individual names? What's your top 3 sectors?
No, I can't, I'm sorry.
What's your top 3 sectors?
Top 3 sectors? I mean, I don't even
Top 3 favorite movies.
Top 3 favorite movies.
If you were a tree, what kind of tree would you be?
If I was a tree, I'd be a
sequoia.
I'd be a pine tree.
We decided to be a sequoia. Great venture capital firm, grows to the
I grew up in the
sky.
mountains, so pine tree would be...
Where? Which mountains?
Utah, Salt Lake City.
That's awesome.
Which is your favorite ski mountain?
Alta.
Bingo.
We knew we were going to get
What's his
one
name?
recommendation.
Michael wins. That's the best mountain in the whole world. Not even the country, in the world.
Is it? Yeah?
Oh, absolutely. Don't tell too many people.
No.
Okay.
And no shredders,
Keep
right? Or is
everything
that too
ourselves.
about?
No borders, and that's one of the...
No threshers, no Matt Quails.
Yeah.
And it's connected to Snowbird now.
It is, right. So if you're a boarder, you can go to Snowbird, and that's fine for the boarders.
Stay there.
Yeah.
Stay there. Exactly.
Thanks, Michael.
Thank you all.
When we come back, rent loyalty platform Built Rewards is announcing a $200 million fundraising round. We've got a special interview on the way with the company's CEO, Ankur Jain, and the newly appointed chairman, Ken Chenault. But next, Boeing CEO is set to meet with D.C. lawmakers today as the 737 MAX grounding stretches on. We will speak with Kansas Senator Jerry Moran. Stay tuned. You're watching Squawk Box, and this is CNBC.
Welcome back to Squawk Box. The futures right now, take a look at where we stand. 164 points higher on the Dow. The Dow Jones up moving, but S&P 500 higher as well, about 27 points there. NASDAQ up about 160 points, Becky.
The latest on Boeing following that mid-flight door plug blowout earlier this month. The company now says that it will pause work at its Seattle area's 737 production plant tomorrow so that employees can attend workshops on quality. It says so-called stand-downs like this will happen at other sites over the next few weeks as well. Separately, Boeing CEO Dave Calhoun will meet with senators today in Washington. One of those lawmakers joins us right now. Senator Jerry Moran of Kansas, the lead Republican on the Commerce Aviation Safety Subcommittee. And Senator, thank you for being with us. This is an issue that's important on so many levels, from the safety of flights and consumers thinking about those things down to the very economy, because Boeing is so important to our national economy. What do you want to hear today from Dave Calhoun?
Well, I'm anxious for that conversation. I appreciate him coming to visit, and I would say that the goal here is to have him reassure me and others that they understand the challenges that they face, that I want to know what they learned from their meetings with their employees, both in Washington State and in Kansas, and I want to make sure they're listening to those employees. Often I think that that's a place we can learn how things can be improved. And I want him to know how seriously we take this issue. It's, you know, my grandkids are on airplanes, my wife and I are on airplanes, our kids are on airplanes. We want safety. And I would reiterate, while this is an important economic issue, none of this works in the aviation sector if the American public, the people who fly, don't have an appreciation and understanding that air travel is safe. So while I care about the economy and I care about the employees and workers at home in Kansas, their jobs are important to me. Those jobs are only long term if Boeing and their supply chain get their act together and Americans know it's safe to fly, because it is safe to fly.
Senator, it wasn't just the door plug, though. Then we saw video of a Boeing plane that was, I guess, in the Miami area with it looked like flames coming out of one of the engines. Yesterday, we heard about a tire popping off a Boeing plane here in the United States as well at a different airport. Is this enough for you to question the safety aspect of that?
Well, I assume there's certainly heightened attention to these kind of stories, but I would highlight that, look, there's two investigations, and I would point out a third investigation that's going on right now. One is NTSB. Their job is to find out what happened with the door plug and the Alaska airline when the door came off and the plane decompressed. There's a second investigation, and they're separate, they're different, and that is the FAA. So NTSB looking at the incident, the FAA, rightfully so, is looking at Boeing's manufacturing process in light of safety, its supply chain, what the problems are, and they're doing that because this is not just one incident with a Boeing airplane. So the FAA is taking this broad view of what needs to be done at Boeing and the supply chain and what we need to do for aviation safety. The third one, and this was evidence to me at a hearing we had with the chair of NTSB as well as the administrator of FAA last week, and then Congress has a role here to make sure that NTSB and FAA are doing their jobs, and is there something legislatively that needs to be done? And we have pending in front of the Senate right now the FAA reauthorization bill, so there's a perfect opportunity for us to do whatever might be short-term benefit to the safety of air travel. And in the long term, I would expect the committee, the Commerce Committee, the subcommittee that I'm the ranking Republican on, to take a look at safety in particular, and is there a bill addressing that as well? So NTSB, the FAA, and the United States Senate.
So is there anything that Dave Calhoun can say to you today to make things better? Or, you know, it sounds like talk is cheap. Let's look at all these other things that you're going to be doing in these other investigations.
That's the answer. What you just said is, yes, there's reassurance that can be said with words, but the reality is that what we need to see is results and difference, and then a stamp of approval, someone outside of Boeing telling us that what Boeing has done to correct any problems is making a difference. And that would be the FAA,
and perhaps Congress. So it's an opportunity for us to make sure that he knows the importance of this issue, and I can't imagine that he doesn't. And this matters to our economy. It certainly matters to me in Kansas, where we are the air capital of the world in Wichita, and we supply lots of parts to Boeing.
I mean, we've seen this movie before, Senator. When would you say it's time to say, okay, we need to change here? I mean, okay, you're going to do this, you're going to do that. Oh, we're going to look at this. We're going to, we take this very seriously. But we seriously have heard that. How many times would you say in the last 6 or 7 years? We've heard it 6 or 7 times.
Over and over, I would say, we've heard reassurances, and the question is there something about Boeing particularly, culture, process, oversight that needs to be addressed? And again, you always want to be reassured, but you never have that reassurance until you actually see the results and know the difference, and you know it as a matter of fact, not a matter of promise or opinion.
And it's always, well, the guy there is going to be able to fix it. We don't want to bring in a new guy midstream. But then something else happens, and it's still the guy. And then something else happened, and it's still the guy.
It is, I mean, we've seen lots of changes at Boeing in management. We've lived this. The MAX was a tremendously damaging issue to certainly the safety of Americans, our national economy, and the manufacturing process. Our country, I mean, we face tremendous challenges around the world. We need a manufacturing base that works, and aviation is at the forefront. We have lots of jobs and export lots of product. This is a huge component of our economy, and it comes home to Kansas to roost pretty quickly. And can I tell you that I'm a cottonwood, the state tree, roots are deep, and provides lots of shade.
Where'd you grow up, Senator? What town?
What town? I was born in Great Bend, grew up in a town called Plainville, and lived with my family most of our married and family life in a place called Hayes, all in Kansas.
No,
and I don't live in Washington, D.C. I'm on an airplane every Monday and every Friday.
Yeah, you're talking my language now. I-70, I've been at Hayes a million times, and you got to have an eye for that part of Kansas, and I do. Beautiful.
I appreciate that.
Yeah. Bob Dole, Russell, I know the whole place.
Hey, Senator, Spirit, this spinoff, the former Boeing unit, was responsible for putting these door plugs in on this unit. They're based in Kansas, and there have been a lot of questions circulating about whether Spirit Aerosystems has enough oversight, because it's not Boeing who can directly oversee that. Are you thinking about calling them in as well?
Absolutely, and I've had a telephone conversation. I've had a conversation with the new CEO of Spirit. So this is not just a Boeing issue, it's the supply chain issue. And we learned in our hearing last week that this originates in a subsidiary of Spirit Aerosystems in Malaysia. So a lot of answers yet to be determined, and mostly there I'm anxious to see what NTSB says about whether this occurred in manufacturing or in application or in maintenance by the airline, by the prime, Boeing, or by the subcontractor Spirit or their subsidiary Malaysia. That just points us in the direction of where the problem might lie, and we don't yet know that. It's the difficult things when we want to know answers today, and there's a number of investigations going on that we keep waiting to hear what the results are.
Senator Moran, thank you.
You're very welcome. This is an important issue, and I look forward to my conversation with the CEO of Boeing today.
Very good. Coming up much more on the new quarterly numbers that we got from Netflix. Stock is jumping in the pre-market. And we're counting down to the big report tonight from Tesla. The share's down more than 15% since the company's October earnings. And this morning, Reuters reported the company is telling suppliers that it wants to start production of a new mass-market EV mid-next year. Stay tuned. More Squawk Box after a break. President Trump winning the New Hampshire GOP primary last night. About 91% of the ballots are in, and Trump said about 55%. Nikki Haley, 43%, and you know, a lot of independents in New Hampshire. Obviously, in fact, that's where a lot of Governor Haley's votes actually came from, not necessarily Republicans, and this may be one of the best nights that she has. It's not, she doesn't really have this type of chance or prospect in her own state of South Carolina. But we'll see. Here's what she said, instead of sounding dejected, said she's going to fight on, just like USC.
New Hampshire is first in the nation. It is not the last in the nation. This race is far from over. There are dozens of states left to go. And the next one is my sweet state of South Carolina.
And in Trump's victory speech, former President Trump said Haley's numbers added up to, in his words, a very bad night. Republicans in Haley's home state of South Carolina are set to vote in their primary on February 24th.
Okay, coming up after this, Built Rewards founder and CEO Anchor Jane and the company's new chairman, Ken Chenault, is going to be our special guest right here for an interview about rent, real estate, and a new 9-digit fundraising round. It's right after this. And a reminder, you can head, as we head to this break, you can get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back. Welcome back to Squawk Box. New this morning, Built Rewards announcing it's raised $200 million in funding in a round led by General Catalyst. Built Rewards is a platform that partners with real estate owners and allows its users to earn points when paying their rent. With a new funding round, the company now valued at more than $3 billion. And joining us right now, first on CNBC is Bilt Rewards founder and CEO, Anchor Jane, and Ken Chenault this morning, Chairman and Managing Director at General Catalyst, and the former CEO of American Express. He's just been appointed Chairman of the Board of Bilt. Good morning to both of you.
Morning.
And this is super exciting, and it's super exciting for us in a way because I remember when you came and sat at this table when you first launched this company in 2017.
We were talking about, if you remember in 2017, we were saying, how is it that Silicon Valley keeps pouring money into electric scooters at the time, crypto at the time, when you have the biggest housing crisis, the biggest healthcare crisis, the biggest student loan crisis? How do we solve some real problems?
So this is one of those problems, but what's interesting is back then, I think you were probably running Amex at the time.
Right.
You were probably trying to sell him on back then.
Well, it was getting a meeting with Ken. I mean, that's a hard meeting to get. So we are. I mean, it is surreal as an entrepreneur to go from that type of idea to getting to be here today, talking about having someone like Ken as our partner and chairman of the company. It's a pretty surreal moment.
Okay, so for those who may not remember what we were talking about in 2017, just explain what Bilt does for everybody.
So look, rent is the single biggest expense for most people in this country.
Right.
You don't get anything back for paying rent every month. And so we said, why can't you earn points on rent just like you do on everything else, right? Earn airline miles, earn hotel points. And by the way, why doesn't paying rent build your credit and get you closer to home ownership? And so today, you can pay with Bilt at any apartment in the United States, earn points and miles, build your credit. And the coolest part is we've now expanded that beyond just rent and said, you not only get rewarded on rent, but in your neighborhood, all these local restaurants, local grocery stores, coffee shops can now tap into loyalty platforms.
Explain the business model, though, because I think people are probably hearing you say, okay, all of a sudden you get rewards back. Who is paying for these? Who's paying for these rewards?
Right. So the amazing thing about this is you first look at rent. I mean, we're at almost $20 billion a year spent.
Right.
Now you think about it, we are a payment processor for the rental buildings, just like Stripe is for all these e-commerce. So we make money on payment processing there.
Right.
But then as we go into the expanded merchant side of the local merchants, I mean, this is what Ken invented, right? If you can bring high-value local residents to build loyalty in their neighborhood, I mean, rather than local restaurants running into an apartment building, putting up flyers, offering a 10%
It's like
discount.
Amex Rewards. That's what you
Exactly
bring.
right.
Yes, it has some similarities to membership rewards, but I think one of the important points here that I think can be transformational is if you think about commerce in the neighborhood, there's been no platform that in fact has put that all together to drive local commerce.
Small biz too?
Small business, absolutely. Small business benefits tremendously. It's one of the reasons why I'm excited is this is the first neighborhood loyalty platform.
But explain. But let's go back to the math of it because I do want to understand the economics of it. So you're collecting a fee, a processing fee, transaction fee every time.
Correct.
Which is what percent?
Which is what percent?
I mean, it depends on the type of payment method. You can pay by bank, ACH. You can pay
Okay,
by
but are we
check,
talking
you can
between
pay by
1.5% and
credit.
3%? Are we talking Amex style? I mean, Amex was 3%. MasterCard was lower,
It
obviously.
really depends if you pay by Amex or pay by Visa or pay by MasterCard.
If you pay with your bank, what's the lowest you can get?
That's right. So you and so you get different
But
levels of points.
what's the rate for the lowest if you pay by
It
bank?
depends on the landlord too and the property owner, but just like Stripe and any other payment processor.
Hold on, but go back.
But it's not something
So I'll answer this question.
This is important.
So like,
important piece.
when you go to like a local merchant,
Right.
Today, instead of giving say like a 10% local discount to bring in local customers on those off hours, off days, they can say like with American Express, but hey, we want to focus on the neighborhood, and if you come in, we can fund 2.5% or 5% in rewards. And introduce our business to all those people moving into the neighborhood every month. So think about this, half of renters move every year. So you have all these people moving out of the neighborhood every year, and these merchants, these small business owners have no way to get in front of them. So now you can be in front of everybody when they move into the neighborhood. You have a plug and play loyalty platform, and instead of giving the 10% local discount, you spend a quarter of that. Right? And you actually attract the local residents through recurring rewards for coming in, and all the points they've earned on rent can now be spent at that local business, right?
Right.
And that's what drives that.
Here's the part that I'm trying to understand on the math, okay? My understanding, I have a Platinum American Express card, sir. I pay something on the order of $700 a year now for that card. And then, so Amex is getting my 700, was it 700, 750? I don't know what it is now. You don't remember
It's been
anymore.
6 years.
Okay.
But maybe more.
Maybe more, right?
Yeah.
Okay. And then they're getting 3%, I think, something on the order of 3% on every transaction, right? That's
I'm not going to comment.
okay. But that's the math of how that works and why that makes sense. So that when they give me, and then they go to Uber and they say, give us some, $200 worth of Uber rides, because they know that then I'm going to do more. Okay, we understand. And there's a discount on those Uber rides, so they're actually give Uber some money for that privilege. Okay.
Yes.
Same thing with when they're going to go off and pay for the airlines. Okay. So I go to, I'm now renting in a Related building. I'm making that up. I own, but I'm going to rent in a Related building.
That's right.
Okay. Related is going to pay you.
So when you're payment processing, either the landlord pays for some of the fees,
right,
or sometimes the consumer pays, or sometimes the bank pays, right?
Okay.
And so,
I'll explain that. The bank is going to pay the fees?
For example, when you have an Amazon credit card,
right,
you use it on Amazon.com for a 5% cash back.
Yes.
Chase Bank pays for that.
Right.
So if you have a Bilt card and you're using it in an apartment building, the banks can fund these extra rewards as part of the value prop. If you're using a American Express card, either the landlord will pay for that fee,
right,
or the consumer might pay for that fee.
But I think my original conception of this was something that was going to help with affordable housing and help people build their credit score. What you're describing is something very different.
He's asking about the higher.
I know, but what you're describing is something very different. I think it's evolved. It's probably a better business proposition than it was before, but maybe less useful for helping the people who are at the bottom end of the scale.
With affordable housing all the way through ultra luxury.
But not small housing, which is where
small
a lot
housing
of,
too. Now you can use it at any apartment.
Like if I have a property that's a rental property, I
Somebody
can sign up with
use
it?
Bilt to pay your rent. And in
Absolutely.
fact, when they pay their rent through the Bilt platform, you can either accept that payment then as a check that we then mail to you, or through if you have an online.
But here's what I'm trying to understand.
But it costs more. It increases the
I'm going to go to Ken on this because I apologize. Okay, you decided this company is worth $3 billion. Right. Based on some kind of mathematical formula. Right. About how much they're earning and what the future of this. Okay. I'm going to ask you to explain it because I unfortunately we still don't understand it. So is it? I'm now. Let's just pretend I'm Related. Okay. You come to me and you say, hey, we want to process for you.
Yep.
Okay. And I say to you, okay, I'd be very happy for you to process for me. How much are you charging me?
Related pays for payment processing today.
Right.
ACH fees. They pay check cashing fees.
Right.
They pay card fees when you pay your rent. Instead of that being our core business, that we're trying to generate huge margin on that,
right,
you can turn that into rewards for the customer that they can then use for airline miles, hotel
I understand
points,
that somebody has to pay for those.
That is already happening today. But everybody else's business is just to keep that. So Related is already paying for payment processing before Bilt using legacy
ACH.
here.
Right.
Yes.
Yeah, but the key thing here at the end of the day is the building, right? Everyone converts to the Bilt payments platform.
And they're paying a service fee for that.
So the same way they used to pay for their legacy platform that gave none of that back to the renter,
right,
they now pay those same
No, but if somebody
fees.
wrote me a check, a personal check, there'd be no fee on that.
Correct. So then you get less rewards on that check payment, right? Exactly. So when you pay electronically, where there is a fee
Right,
to
but
pay
okay, so
for
it
that.
sounds like there's two businesses here. Help me. There's the platform fee, so the software fee that I'm going to pay you to use, right?
Payment processing.
Payment processing, a fee per transaction. I'm not paying you some kind of other fee on top of that as a building?
Correct.
Okay, what am I paying you as a building? I'm a landlord. We have a lot of landlords who are watching the show. They may want to work with you or not. How much are you charging
It would be
them?
the same that they currently pay for any other payment processing platform they use. And that's different, just like every enterprise deal has slightly
But
different
most of them don't usually allow you to pay with credit cards historically.
All the online payment centers do.
They do?
And sometimes they pass that fee on to the customer, sometimes they take it
And
themselves.
the key is, Bilt has more than 50% of the top 50 real estate
Landlords.
companies.
Okay.
Right? So,
and are they exclusive to you?
When a property, yes, is the short answer. All the properties that use Bilt.
So I can't pay with a check and not get charged
it just
to be
goes
part of the
through
program?
Bilt.
Yeah,
No,
but
it
is
goes
there a
through the
fee?
Bilt payment. Everything
But
does.
do I get charged a fee for writing a personal check through Bilt?
You do not, as a customer, no. Right.
So it doesn't. It's not going to be 1%
It's
of
the
my
exact
rent.
same as it is today. You do not pay for that as a
Okay,
customer.
if I wanted to compete with you and create my own version of Bilt and called up,
you gotta think
Stephen
about it.
Ross and said, hey, man, I'm going to provide the same service for cheaper. Is it, when I said it's exclusive to them,
Yes.
meaning do you have some kind of deal with them where
yes
they
is the
can't
short
use anybody
answer.
else?
And by the way,
He's looking for the moat.
Yeah, no, this is a great question.
That's part of the moat.
The whole ecosystem. Remember, these properties also generate revenue on build. This is what I want to get to. When you think about the ecosystem, this is a lot of what you've built at American Express. You have the merchants, who are the buildings in this case, the rental apartments. You have the neighborhood merchants, the broader ecosystem of the restaurants, the coffee shops, etc. When a customer who lives at a Related building today goes to the neighborhood venues, Related doesn't monetize any of that. Now that resident who's going to the local store and choosing to spend at that local restaurant, that local discount being paid by the restaurant to attract that local customer now goes partly to rewards, partly to build, and partly to Related. So when you think about the ecosystem, you'd have to have a network of properties with, by the way, as we now have over 50% of the market, customers have their Built loyalty account, they have their elite status, they have their points that they want to transfer with them. They have rewards ecosystem, they can use that on most of the major airlines and hotels. That's a whole ecosystem that really like us and groups like American Express have built. And then you have the merchant ecosystem. So it's not just, and that's the beauty is you can actually give up margin on payments to build that ecosystem value because you're actually accessing customers in their homes.
Okay, but you also have a separate credit card itself.
All payment processors today for rent accept credit or debit card online.
Right, but I'm saying you also have your own card.
And we have a co-brand card with Wells, like Delta does with American Express.
And the reality is, just like you can use any payment product, right? So you can sign up with Amex, you can sign up with Chase, you can sign up with any card issuer, and you can use Built. And there's a co-branded card, which is...
If I was a landlord, why would I prefer to use this as in terms of margin? For my total margin, will I do better using this versus...
Great question.
Okay.
You make more revenue per resident while rewarding the resident. Very simple. Your payment fees are the same. Your residents now earn rewards and build credit for free, which, by the way, we were the first to bring free credit reporting to all renters across the country. It's crazy to me that people charge for that. It should be something that everyone has access to, but that's something we brought. And now that property has the ability to generate new revenue from spend in the neighborhood that otherwise wasn't part of that P&L for that property. So with a plug-and-play system that you just put in the payment solution, they're now giving a better experience to their residents and generating ancillary revenue on the outside area.
The key point at the end of the day, when the calls that I made to property owners, what they said to me is, one, that what Built has been able to do is dislodge competitors that have been in there for 20 years, 25 or 30 years, the inertia that was there. And then they've said, I have this incremental revenue opportunity. And what was really exciting to me is that people said, here is a situation where I can win, the consumer wins, everybody who touches this platform wins. And that's the type of platform I love.
Is that a higher margin or lower, from an economic point of view, because you have to give out the rewards? Higher margin or lower margin, but the hope is you catch up with scale?
It's higher margin overall, lower margin on rent.
Lower margin on rent. Two other things just of note. Roger Goodell joining your board.
Very excited. I mean, NFL is the biggest hometown loyalty company in the world. It's about cities and the loyalty to your sports teams. I mean, a lot of how we're thinking about building that community, I think, is similar to what sports teams have done in hometowns.
Yeah, I would just go back to this concept of a neighborhood loyalty program, that neighborhood commerce is totally fragmented. And this is a platform that can unite.
Right. You must have to have a lot of salespeople then to actually go local to get all the merchants to get on board.
This is what's so exciting is you would think so. We have a sales team today of 3 people. Our apartment buildings already have these ad hoc relationships. So all of these restaurants have, and these coffee shops and local retailers and dry cleaners are already going to apartment buildings saying, hey, can I put up a flyer in your elevator? Can I offer a local discount? But there's been no way to institutionalize that neighborhood.
Yeah, and the key thing, one of the things that I see as a big opportunity is to dramatically increase that neighborhood coverage and the real estate coverage.
We got to go. This is fascinating, really, and it's exciting because we feel like we've been here since the beginning. Before we let you go, I got to ask Ken. Ken is on the board of Harvard University, Harvard Corporation. We talk about Harvard almost every single day, given the governance issues, questions about what's happened with Claudine Gay, the future president, all that. Can you just bring us inside a little bit of it and just tell us how you're feeling right now and what's happening?
Yeah, I can't obviously bring you inside of the boardroom, but here's what I would say is the problems of anti-Semitism, Islamophobia have been with us for a while. I think Harvard is committed to eradicating anti-Semitism, Islamophobia, but what's also very important is the institution is very strong. So I'm not minimizing what has happened, but what I'm also saying is Harvard is focused on research, academic excellence. You go on the Harvard campus and you'll see students actually focused on learning.
Okay, well, we're going to have a longer conversation. I hope you come on back on that one as well. Thank you very, very much.
Absolutely.
Thank you. Ken, thank you.
All right.
We're going to be back in just a moment.
Coming up, inside Netflix earnings and that huge subscriber beat. Julia Borston will break it all down for us. Squawk Box will be right back.
a trial.
Netflix shares soaring on new subscriber and revenue numbers. Julia Borston joins us right now. She's got more on that. Julia, big move for the stock today.
A big move for the stock, up 10% pre-market, and a lot of that is because of what the company talked about on its earnings call, which was its $5 billion deal with TKO for WWE's Raw, which it announced just yesterday morning. The company is saying yesterday that it sees an opportunity not just around live content for the WWE, but also creating more scripted programming, and also internationally, where they say WWE has been historically under-distributed. But co-CEO Ted Sarandos stressed that this does not signal a change to Netflix's sports strategy, and he gave no comment on any potential interest in NBA rights.
We are thrilled to bring this WWE live programming to our members around the world. WWE Raw is sports entertainment, which is right in the sweet spot of our sports business, which is the drama of sport. Think of this as 52 weeks of live programming every year. It feeds our desire to expand our live event programming.
The company also saying it is not interested in acquiring linear assets, which are effectively the traditional TV companies or media giants that may be up for grabs. And they said that they don't believe that further M&A among the traditional entertainment companies will change the competitive environment. Now, this all comes as Netflix reported faster than expected 12% revenue growth on a big subscriber beat, more than 13 million new subscribers added. That's 4.2 million more subscribers than anticipated. That number clearly bolstered by the growth of Netflix's ad-supported lower-cost option. They say that now 40% of all Netflix signups in its ads markets are choosing that option, and its ads membership is up 70% sequentially. The company talking a lot on the call about the potential to build out the ad business and also to raise prices after the page sharing price increases which is sort of effectively a price increase, has been absorbed. They also talked eventually about tapping into the huge engagement they're seeing around video games on the platform. So guys, that could be an area which Netflix uses as a growth driver down the line.
Yeah, you know, I was thinking it may not be a coincidence that the subscriber numbers were so strong in the quarter when all the college students went back to college and suddenly couldn't use their parents' passwords anymore, right? Like, you got kids in college, you see all over the place. Right?
The fourth quarter is traditionally a very strong quarter. Netflix is, often given as a holiday present or associated with people sort of getting a new gadget and then adding Netflix to that. But I think what we're seeing here and what is so interesting is that they've had these two levers to pull. One is the page sharing, cracking down on freeloaders. That is working, and they're saying it's working so well that we're going to be able to raise prices. And then the other piece of this is the ad-supported lower price subscription. And these two things really work together. If you're kicked off your parents' account and you want to start paying for Netflix, the fact that you could pay less, watch some ads, that really is a helpful option. But I think one thing that was really clear here about this WWE news is it is 100% about Netflix becoming an ad-supported business or building out that revenue stream and using that live programming to get people to tune in and watch those ads in real time. And that's really going to be a huge piece of this company's future.
Julia, thank you. It is exciting. A lot to see here.
All right, let's get a final check on the markets. Got about less than a minute to go. We have been postured for a higher opening all session long. 143 points now. That'll put, on the Dow, 144 on the NASDAQ, and that will put the Dow solidly back above 38,000. In the old days, we would have had a Dow 38,000 hat. I think we'll have a Dow 40,000.
I don't think I've seen one since 20,000, right?
No, we should get a Dow 40,000 hat, though. And I remember those guys, what was his name?
That looked good on you.
The guy that said Dow 40,000, remember we laughed at him?
Yes.
And it was Dow 40,000. We are not far from there. The 10-year right now is, I don't know, about 4.11, and Bitcoin is back above 40,000 just barely. That's the 10-year. Actually, 4.09. Make sure that you join us tomorrow. It's Thursday, I'm told. Squawk on the Street is next.
Tomorrow's Thursday,
yes.
Not today. I had to
tomorrow.
Good
Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. After 3 straight all-time highs for the S&P, the bulls press on here with help from some strong results at Netflix, ASML, SAP, overshadowing some light guidance at some old-line industrials. Our roadmap begins with stock records on a roll. Netflix does provide a big boost ahead of the open after delivering that subs beat.
Plus, AT&T shares under a bit of pressure this morning. Quarterly earnings results did miss some expectations. Free cash flow perhaps as well. But the company is seeing subscriber gains. And we continue to monitor the ongoing fallout at Boeing. The FAA saying it may further expand its probe. And the CEO of Alaska Airlines saying he's, quote, angry.
Let's begin with Netflix up sharply in the pre-market. Company reports 13.1 million new subs in Q4. That is the second best quarter of additions in its history. Revenue also exceeding forecasts. Jim, a lot of price target raises on the street. I counted 18, several with a 6 handle.
But it was just a really toward the fourth quarter, and as usual, a conference call that I found to be just very special. It's a special company. It's a company. There's a lot of people are going to talk about how what really happened was they cut down on passport sharing. I'm not buying that at all. They obviously knew how to do that. They have what I call, David, and I'm going to be really specific about this, they have, as opposed to almost everyone else, exactly what people want. Now, we can talk about TKO. We'll do that later. But the fact is, they said one line in here that really just was very telling. They said, we're not going to buy linear. You know what linear is? Linear is cop shows. Linear is fire department shows. And it's hospital shows. And what they're saying is, we're not interested in that crap. We're not interested in that stuff that Procter & Gamble wants to advertise against and McDonald's wants to advertise against. We want real advertisers who don't mind that we talk about real life, and that stuff was our parents' stuff. So that's what this whole quarter was about.
Yeah, and it was worth noting. I'm glad you did, Jim, in terms of them saying no interest in linear networks.
Holy cow!
Not that we necessarily thought
Chicago, whatever,
there's been some talk.
Detroit this, NCI that.
Would they ever want to buy Paramount? And obviously the studio might be of interest, but nobody's buying linear cable networks. No, thank you, no way. Listen, you know, one person said to me this morning, as so many have before, the streaming wars are over, and Amazon has won.
Bingo.
They've reinvented themselves numerous times along the way. Think about from House of Cards to where we are right now, and now they're making forays into gaming and obviously live sports, as we know well. And you know, even the ad-supported tier, which early on, people said, it's not really amounting to much. Now they got 23 million subs. They're up 70% quarter to quarter. And the fact is that there's also a question as to whether they're going to start to take ad dollars from these very linear cable networks you just discussed.
Yeah, and that's
Warner
right.
Brothers Discovery.
Then you agree with me. That really was the kind of sub rosa thing, is that, you know, what they're really saying is that right now linear is dictated by different companies, advertisers that want certain kind of programming.
China.
They don't want to be boycotted, don't want to cause a problem. So what you do is you do what they used to do in the 80s and 90s. Listen, we got to have someone shot. We got to have someone go to the hospital. We have to have someone arrested. We have to have someone prosecuted, and we're home free, except for when we're in NCIS world. And what they're saying is that's over. And those shows cost a fortune, and nobody's really interested in them. We'll resurrect Suits. All right, Suits worked, but for the most part, that is not what people want anymore. They don't want cop shows. They're not interested in hospital shows. What they're interested in is serious drama, no matter where it's from, and even if it's translated, the young people don't even mind subtitles.
But they did license, for example, Sex and the City, and one of the bull cases is that the more you license, the less you have to take big swings that are expensive.
Well, I think they find the one or two things that people really like Suits, and they run them. But for the most part, and maybe they run them and people like them in Korea or something. But when you look at where they're signing people up, they're signing people up all over the world. Because if you like subtitles, then you're suddenly willing to watch a Brazilian drama. But what they're not going to put on something when the advertisers are not dictating what they want. Now, there's this thing that's been going on for years no one talks about. I remember because I once dealt with, I had a screenplay that was going to be written about me. And they had me as a cocaine addict and going to the hospital and be arrested. I said, well, I haven't done any of those things. He said, well, you want to sell? You want not want to sell? I said, well, I just want a story about, like, me. I want it to be like what really happened. And one of the guys was like, big-time producer said, are you kidding me? Wait, do you think Procter wants that? Suddenly I realized that my story was about Procter. I'm not about Procter. I'm about Tide. So I think when we see the advertisers, they're actually going to want to be about serious drama that uses curse words and people really die, but like they don't go to the hospital, they're just killed. David, What's happening is that Netflix wants what people want.
Yeah, well, they apparently know what people want. And by the way, this was during a quarter where there was not that much new content, in part because of the strike, which we talked about.
But they had those
To
countries.
Carl's point, they're only spending $17 billion on content spend, but that is less than many had anticipated. When you looked out a couple of years ago to what they'd spend in 2024, you would not have thought they would still be at $17 billion.
But who thought that we want to watch stuff from Denmark and Poland and Iceland? Iceland, how much does it cost to make a movie and a series in Iceland?
My point is that
Yeah, they probably do it with
spending
this.
at that number does allow them to continue to lean into increasing the margin. 200 basis points in margin expansion is what we're talking about right now.
Right.
They bought back $2.5 billion worth of stock during the quarter, which is more than had been anticipated. And so, yes, we're piling on here in terms of positives right now on Netflix. And as you might expect, other than that downgrade from Deutsche Bank this morning, the street is quite positive.
The other thing, there's the Bernstein desk. Some feedback, some consternation around just how long, Jim, the tailwind from Password will go on. They did say net ads will be down sequentially. That's seasonal. But is that a hint that maybe this has a shelf life?
Well, look, obviously, what are you going to do if you're them? I mean, you crack down, and the story, why I disagree with this whole point is, the story is not, that's one time only. The story is, holy cow, you mean to tell me that my kids were stealing and they don't have 2 cents, but they're still willing to just go buy a password? I mean, you kidding me? I was watching on Frank Collins today. There's a guy from PSE&G. He says your rates are going to go up. I'd rather cut off my electric bill than I would cut off my Netflix bill, except for I would cut off my Netflix. I mean, I think that people, this was the reason why I was tour de force is because no one even seems to care that you can't steal anymore. Oh, I can't steal? All right, I'll pay. How many times, the people who are stealing from Home Depot, they don't suddenly come in and say, you know what, I'm going to start paying for that leaf blower I was going to steal. This stuff people want so badly, they're afraid not to have it.
It's the default. It is now the default for TV. And that
isn't it something?
And that's, it's replaced cable TV as the default. And it's global.
Did you see
in
the
a
top,
way that
like
your
the
cable,
shows? You see the top shows they have? I mean, they hit every, like World War, I have like this World War II thing. It's working through the front lines. Well, people like it. People like whatever they put out. There's 5 million people that want to watch.
Actually watch
what do you got?
Netflix as often.
And then it's I mean, they do all these things that I think. Again, I want to go back to the kill people in a Chicago fire while they're being sent to NCIS in Australia. They're saying, whatever who's spending all the money on that.
I like that, by the way. I'm greenlighting that right now.
Yeah, of course
that
you
isn't
are,
taken, I'm greenlighting
because
it.
Procter loves it, McDonald's love it, and the people love it. Oops, the people don't love it. The people are willing to have Josh Allen.
NCIS
They want Josh
Australia.
Allen versus Mahomes. That's what they're left with. And that's good, except for it costs them more than they make.
What about the Halo today? Warner's up, Roku's up, Paramount, our parent, all up 2% this morning. It's not zero sum, is it?
Enjoy it.
I think it might be when it comes to advertising for
zero-sum.
some of these other companies. The pie is not necessarily growing on ad spend. And so even though this is still a small percentage of overall subs, the fact that it is growing 70% quarter to quarter, and it's already 23 million, I wonder whether that's going to start to hurt some of these other companies.
I agree with you, although of course they never do that because they're such gents. The conference call is such a well-orchestrated arc where they just say, listen, there's still a lot of people.
Biggest
more the merrier.
competition is sleep.
More the merrier. They love that. The competition is time. The competition is the clock. It's people who are trying to understand and want to get into stock should read the conference call because it's accessible and it really kind of makes. Like I like to think the Procter call is accessible, but this is a really super accessible call for someone who's never thinking about buying the first stock. They really know how to.
The other thing we didn't mention was the possibility they rolled out of further price hikes.
Oh, absolutely. Yeah. I mean, they have a product that people want. It's interesting because if you go to Costco, they won't do it. I mean, what are the cards that you're willing to pay more for? You're willing to pay more for anything that Apple tells you. You're willing to pay more for Netflix. You're willing to pay more for Costco. Costco doesn't want to do that because Costco just says, listen, we don't want to alienate the customers. Netflix is willing to do it because I think they think it actually won't alienate. Those other companies that you put up, I don't think that they have anywhere near the content that Netflix has. It's a content story, and it's a worldwide story, and it's the ability to be able to find something. I mean, right now there's someone doing something creative in Uruguay. I don't know what the hell it is. But you know what? I'm going to pay money for Uruguay, and 17 million people are going to watch it because it turns out Uruguay develops actually serious programming. Not just I got caught in a fire, and sure enough, someone from NCIS rescued me, and they took me right to the courtroom, and boom, I'm going to jail.
In Sydney.
None of that. It's
That's
over.
where they prosecute
By the
all
way,
things now in
that
Australia.
program I just described costs fortunes.
No,
the
it does.
Uruguay program I just described, which doesn't exist, costs nothing.
As for the stock, you've seen it's going to be up as much as 10%.
Well, what does
today.
that say?
And the market value of Netflix now, because we like to play these games, is equal to that of Disney and Paramount and Warner Brothers Discovery if you put them all together. Given we're around $235 so probably.
DeSantis is not going to attack anything.
By the way, I
Netflix
would
does.
point out, if you go back to April of 2022, this was around $160 stock. Remember Bill Ackman lost $400 million on his
He
position?
said buying some pieces.
Threw it in, you know, said that's it, I'm done with it. That was the Ackman bottom on Netflix. That takes you back to April of 2022, and it's been straight up since then. If you were smart enough not just to own that, but to short many of the other streamers, so to speak, you'd be in good shape right now.
This is not a call about password sharing. It's a call about all the countries that they have developed content.
Now you see that bottom I'm talking
you know,
about.
one thing that they understood, even though they're older people, they understood that subtitles are the preferred way to watch things. So now they can go all over the world and find very interesting drama about a person who's getting divorced to someone in Iceland, in northern Iceland, which no one's ever been to, and yet there's a murder there, and it turns out that, wow, is that interesting, because it's over 12 shows.
And you amortize it around the globe, and your cost of production is low.
Not to mention you're going to get to watch a lot of wrestling now, and as we talked with our guests yesterday about it, I mean, you know, Ari Emanuel, who runs TKO, which obviously signed that deal with Netflix for Raw, made the point that really it was only a market increase, but the fact that it was Netflix made all the difference. Take a listen.
It's Netflix. They're the global leader. They're the best best company with regard to sports entertainment, whether they've done it with Formula One, whether they've done it with Tour de France. And this is kind of the next iteration as they go to live and moving into live.
When it comes to Netflix, I'm excited about it too. 52 weeks live. That's a lot of rock raising the eyebrow every week for Netflix.
FT this morning, jump into Pro Wrestling Signal's tipping point for sports media.
Well, it's not sports, it's entertainment, and it's great entertainment. It happens to do with the concept of sports, because people are beating up people. That they do beat up people very well in the NFL. I think that if you beat up people, it still sells. But they have to be really beaten up, or at least look like they're beaten up.
Right. Well, this is entertainment, but
but this is
it's every week.
Yeah,
and it's a storyline, and Netflix
football season ends.
The storyline.
Although Dwayne is trying to get it so football season doesn't end.
Right. Yeah, I know you seem to be a believer in the XFL.
I went
or
daily
UFL,
fantasy for that.
Couldn't say anything bad about that.
No,
it's never succeeded.
No,
but
because
you
those
were all
people
in.
play for dinner. When you pay an athlete $25 million a year,
You're like,
all he cares about is not getting hurt.
You're going to succeed where nobody succeeded before with spring football.
My friend Brian Westbrook told me it's going to work, and Brian, darn good business person. I'm a believer. I'm a believer that anything that is real. In other words, there are people out there who are killing themselves in order to be able to play it for the NFL. You know, NFL, like you said, 92 people start the season in the NFL. When you go to a training camp, when you say, hey, listen, who are all those people wearing the red pennies? Who are those other people? They always say the same thing. Nobody you'll ever have to worry about.
Yeah, the challenge is spinning out their biographies, which is what the Olympics does well and what the NFL does well.
And, oh, by the way, going against The Rock, not been a great thing for people's career. You know, like short The Rock, and you know what?
No, you don't want
Do you
to do that.
invite me to what?
Wait, if I to your funeral,
to your funeral.
When we come back, I'll look at what to expect from Tesla tonight, due out after the close of trading today. Take a look at the pre-market. It's a mixed bag of guidance today. We'll talk about T and DuPont, definitely being offset, though, by these guidance numbers from ASML and SAP when we come back.
50% off.
Shares
50% off?
of,
Where?
AT&T this morning. You know, we talked a
Oh
bit
my
about
gosh.
Verizon yesterday, which had a very strong day in the market after.
So, I just got a clue. They said the market is overpriced. We need to take it down 50%.
China.
China. 50% off. So I saw a black crow this morning. He come to me and he said, Jimmy, he said, where's all the corn at? I said, I don't know.
China.
Good morning, retail traders. Wishy-washy Washboard Jim is here to talk about China. Just because Jack Ma bought Baba, that'd probably be the only good trade you could find. Now I was asked if the SPY is going to go to 500. It could. Not today, but that should be the target. Okay, I'm going to take off my shoes. I'm going to go make me some froth for my coffee. SEC wants to make sure that SPAC investors know what they're getting into. God, get out of my life. Can't the government just leave us alone? As I was talking about this morning in Netflix video, it's hard to fight a bull market when we're at extreme greed. I haven't seen this kind of greed ever since I started trading. It's might have something to do with the setup, because I wasn't trading back during 2000. During the Carter years, when we had all them high interest rates. But I think the Fed kind of made a deal with the back room and wanted to get the richer, and that's what they've done. I can't wait to see what Buffett's worth. He probably doubled his income in a year. Over 100 billion. I wouldn't doubt it one bit. So what time is it? We got 9 minutes. I'm going to go make my froth. I'm exhausted. Tesla's earnings tonight. I think it's been consolidating for a bounce, but I'm not for sure about that. And I knew Netflix would bounce. NVIDIA back above 600 again. So we're going to try to find us a support level. I figured it would be 5, but it probably will eventually be 5. Nancy Pelosi made $500,000 with her NVIDIA bet. $500,000. Nancy Pelosi. I remember when Obama took office, he was supposed to stop all that insider trading. Nah. I mean, he was strict about it. First thing he did. His campaign was all about bashing Wall Street. And it caused a real big crash. I think it was all set up. And they blamed the housing market. But I called it way in advance. I didn't know anything about housing. I just said the market's going to crash. So I was prepared for it. I was new to trading. So it was a very good time to learn how to trade. And that's why I decided to become a knife catcher. DWAC. It's pulled back. And we got Rumble also on here. Let me change this to a different color, maroon. Something that I don't use. I gotta go make my froth. RU Rumble, RUB, or RUM. Then you had PHUN. I had $6 for Rumble to hold from yesterday. Netflix in. Anybody watch the video? I gave a resistance level and a support. 529.35 for the first support level. The way I'd trade this stock, if I was swing it overnight, which I did, I'm going to get out of this first thing. I'm going to get out of it. When you have a big gap like this, up 60-some bucks. I called this out all day yesterday. So I'm definitely going to take profit. There's no questions asked. I'm out. I'm getting out. I saw a black crow this morning. I haven't seen any crows out in a long time. That's kind of a sign for me to be a little cautious. I'm superstitious when it comes to animals. Quack. Okay, we already got 4 minutes. I'll be right back. I'd like to stay away from CNBC today. I get sick and tired of their politics. Live, good. They're definitely the socialist network. Tesla, Mara had a little pop this morning. 10,000 contracts bought right there. 10,000 shares bought at 1664. 10,000. I think that guy's an idiot. I'd wait for, or girl, 1610s where I'm going to set my alert. Man, what time is it? 10:28. I mean, 10:28. 8:28. So we got IWM had a pullback yesterday and bounced back up. SPY, we got to break 487. It's been snugged up against the 200. I'm going to raise my support up a little bit. I got right about in here. I look for a place of consolidation. We hit resistance on the SPX 486665. We hit 486648. I had 65. Netflix, I'm taking profit first thing in the morning. I ain't waiting around for this to drop on me. I think I'll wait for, see if we hold the 200 today. The SPX might hit the 2. Oh, there we go. We're open. Ding, ding, ding. I took a big chance of buying this big contract yesterday for Netflix. Watch the 550 strike. The 530 put. Support level here before I get into the put on the SPX. It's going to be the opening price at 488.48. I still have to stick with my extreme greed trading strategy. 48863. Today's the 24th. The 4,900 strike on the call. And the put will be 48.75. I think we're going to drop to the 9 and respect the 9. We hit the 200 on the SPY. Merit, we hit the 200 and bounce back on the 1 minute. Got to watch these candles here. There's a bear flag right there. We're going to squeeze. Take a deep breath. I just think it's way up too much. I'm going to scalp the SPX right now. Get my first trade here. Set a tight stop if you took this with me. This is kind of risky right now. AT&T fourth quarter earnings, adjusted earnings per share at $2.15, $2.25. Sees free cash flow about $17 billion. Oh my gosh, that's good. That's extremely good for T. That's what they got. It's hard to believe, but that's what they got. Netflix moving up some. I do have a 560 resistance, but I'm out of the trade. We got earnings tonight for Tesla. I know a fat cat that loaded up here at the it's always been a good spot. Eli Lilly had a little pop. We got some pullback on, well, not that one. Good morning, YouTube. The earnings on Netflix was outstanding. The tape's real slow here on the SPX. I think people are realizing what the heck. Or I might be saying what the heck. Where's on the Boeing got beat up pretty bad in words yesterday. Some CEO said he was just downright pissed at Boeing. That they're not going to be buying a 10 or whatever that is. Double top here on IWM. Yep, looks to me like I might have to get out of this trade because these things are looking. SPY bounced off the 200. I'll grab me another contract here. If I can get it back down to 230. DWAC had hit a support level. Is that the 30-minute? Yeah. Da-da-da-do-do. SPY's retesting the 200. The SPX did hit the 9 right here as it come up to kiss it on the mouth. Let's see if we can drop below the 9. I mean, this is a good exit idea, but I'm just going to hold on a little bit longer here. We've just now breached the 200 a little bit on the SPY. Bitcoin ETFs are up this morning. DWAC is down more, down 13%. TKO PayPal pulled back some. TKO hit my support yesterday. See if it bounces off the 21 SMA. I've got to put the 9 EMA on here. The 9 and the 200. We're at 320 now. If you're in this trade with me and you got in at 260 or below, consider taking some profit. But I think we're going to fall a little bit more. We could get 100. Oh! Could have got 340 there. We're below the 9 now. Let's keep below it. We've got a snake started here on the TKO. DWAX jumped up 4%. AMD is back up. Lilly, PLTR, Meta, oil is at 75 bucks. Microsoft had a real good run yesterday. And what the heck happened just there? All of a sudden I was at 280, now I'm at 340. I'm gonna try to get this 21 here, and I'm gonna get out of the trade. This is the 21 SMA. And we'll put the 21 EMA. Well, is that the EMA? Yeah, it's the EMA on that one. That's the one I was testing. I still think we can come back down here and touch it and then rebound. Drop. Drop, 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 drop. Yeah, they don't want to. It's hard to trade with market makers. How should you navigate this topsy-turvy earnings season? I know exactly how you navigate it. Wait for the next quarter, because they will be better. We'll see what Jimmy says here in a little bit, Kramer. Come on. Don't want to play with this all day long. Meta, new high. Apple is at the 200 SMA. NVIDIA hit the 200 SMA on the 1 minute. We got a double top on AMD. New high on AMD. This could be your next NVIDIA.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms.
Come on, baby, sell it. Just one big candle. I've got my finger on the mouse to get out of this trade. We're still bearish as long as we stay under the 9. Now, like I said, if you're a rookie, learn to take profit. Especially if you're up $80 a contract. I might set a good example here. Sell 4 of them and keep 1. There's 340. Bam. Just sold 4 of them. Ready to go to the beach. Thank you, Black Crow. Good morning, retail traders on YouTube. Now watch this thing drop, and I'm going to say, I'll start crying again. I know I'm going to start crying. I'm the biggest ball baby out there. And see if DWAC holds this 43 bucks. Okay, we're at support on the IWM. That's a pivot point on the 20-day 1 hour. We could pull back and hit the 200. I wouldn't doubt it one bit. Same as hitting the 50 SMA here on the SPX. The 9 did cross over the 21, which is a bearish indicator. We've got a snake. We've got a wedge on the SPY. A lot of uncertainty going on here right now, according to the candlesticks. In the bullish side, favor. Uncertainty as in a lot of lower and upper shadow candles here. Tesla's about to hit the bottom of the second deviation channel for support. Anybody want? A little bit later, I'll walk you through how to set this up. NVIDIA pop. I think I got 624, 23 area idea. I'm telling you guys, it ain't going to hurt to drop a little bit more here. They just don't want to give it up. If this thing pops up above the 9, I'm going to get into a calls. Let me look at them now. The 4,900 strike on the call. Here we go. Let's get it. We're above the 9 now. She's going to fake us out. 4,900 call. Lotto. Order ready, but not in. Let's see if we can squeeze this back down to the 9. Here we go. A little late. I'm going to go get my coffee going. I'll be right back. Be disciplined today.
Yes, it's a mature company, but there are moments of strain.
Yeah, you know, Tesla has over the last couple years been able to generate solid positive free cash flow. We've seen that start to dip a little bit as we've seen profit margins decline, which is to be expected when you have a margin decline and you're cutting prices to spur volumes. That's Tesla's growth strategy that they think sets them up for long-term growth because they
Calm down, Jim. Don't hurt nobody.
As possible so that there's more potential customers once they get the full self-driving subscription software to a level 3 version that's ready for the public.
Tesla, one thing I found out about trading Tesla is their number one salesman is the car owner. And the number 2 is he doesn't care about the money. He cares about people driving the car. These people will never get that because they're fundamental traders. Now this guy's smart, but CNBC will tell you a different story. He doesn't care about the money.
Because implied volatility elevated going into this report today after the close. Option markets priced in at about a plus or minus $14 move in the shares, about 6.5–7%. I think you need to keep an eye on gross margins also. Those fell down to 17.9% last quarter. Operating margins fell to 7.9%. So those will be in focus as this is a trough quarter. So looked at the IB rates here. The first strategy I'm going to look at is really short-term earnings type play where you just expect that one standard deviation move, but you still have a nice wide range for the stock to trade in. So I looked at a double calendar position here where I'm going to sell the near-term January 26 options, the 195 strike put, about $15 below the current share price, and then also sell the 230 strike call, that's about $20 to the upside out of the money, and then buy those same strikes in the February 2nd weekly cycle that expires in 9 days, the 195 put and 230 call. So you're creating this double calendar position out of the money to the downside at the 195 strike and out of the money to the upside at 230 strike,
paying roughly about a 240 debit for that, but you can see here from the risk profile, my break evens are going to be down near 184 and about 245 on the upside over the next week and a half. So in essence, on this, when I look at implied volatilities, the near-term January 26th options that I'm selling, those are about 117% implied volatility on aggregate. Now, the options that I'm buying in February 2nd weekly cycle, those are about 73%. So you see that divergence there in implied volatilities. I'm buying an extremely lower one in the February 2nd options as opposed to what I'm selling. So you're taking advantage of that near-term implied volatility pop that we're seeing ahead of the earnings event. Now, the ideal on this type of strategy is that the stock goes over the next couple days at or near 230 to the upside or at or near 195 to the downside. That'll expand the price of these calendars.
Dadgummit.
But you got a nice wide range, as I mentioned, on this. You don't want it to stay exactly where it is, around 210. You want it to move that one standard deviation.
All right, even though his price target's
Okay,
pretty
these things are a little
good,
cheaper, the
I
calls.
think, generally, this has potential to be a pretty volatile quarter for Tesla.
Yeah.
All right, because if it does surprise to the upside, then it's got catch up to do relative to some of the mega caps. If not, then it kind of reinforces the downtrend.
Yeah, that's why I extended the upside a little
I'm
bit.
gonna buy one.
$20.
I'm gonna take the risk here
upside,
on
while
Tesla.
only 15 to the downside, with the option market pricing about plus or minus 14.
That's my risk.
All right, like the trade. Thanks, Tom. All right, looking for a little swing in Tesla. When we come back,
I agree with him.
PMI, we'll get you the update on that figure that did just make a splash in markets. We did see the bond rally from this morning basically erased.
Today's Wednesday.
And so a little volatility since the open. Then we'll get ready for IBM. Very good year by IBM standards.
The 220 strike.
In its report.
$345.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made.
Ameritrade is now part of Schwab. I'm just grabbing one. No. Day trade swing. I got to go with my gut on this. I definitely could be wrong, but there's so many of us Tesla lovers that love this price area down here. We've consolidated, I think, for the bounce. You can wait a little longer maybe and see what happens. I don't want you, this is just my trade, my risk. I'm going to type in risky because there's so much negativity on it. Fat cats hate it. They would love to see this go to 150. And I don't support the fat cats. They're tonight. Hello, Zona. Good to see you, darling. Oh my gosh, look at that. Here I go again. I'm going to listen to the ball, baby. Don't even look at it, Jim. I'm going to look at it. I got one. I have to look at it. Oh my gosh. $5. I'd be up on Easy Street right now, hanging out with my dog and Persian cat. Oh man. 520. You know what that means? That's 100%er. 100% trade on the SPX. And I didn't get my froth after I went in there and made it again. But that's okay. Jim will take you 100%. No, I didn't get 100, but it did hit 100. So that would have been $1,000 in profit. Just buying 5 contracts. Yeah. Bears think they own Tesla, I know it. But you know what? We're going to fool them bears. I didn't get in that call. I was busy on the phone.
Last week in terms of the jobs report, right? I mean, I think that's
nothing breaking there.
I think that's going to keep the focus on some of these better than expected reports. But then here's the other kind of way of looking at that. I think with rates above 4% right now and holding this level, and you want to see strong data, you want to see strength in the economy. Otherwise, it'd be tough to sustain these levels for stocks. S&P is above 4,900 without a really good economic data.
All right, so dollar down 0.5%, better than it was this morning. Hard to see why the dollar should be down 80 bips like it was earlier. When our PMIs are up here and everybody else's are down here, below the contraction threshold. And the broad market, though, Netflix up 12%. I mean, the NASDAQ doesn't really care about this as much right now, which makes sense. The Russell's proven to be much more sensitive to the rate swings. So we'll watch bonds right now. Still bid, but not nearly as much as they were earlier. Go ahead, Ben.
Lastly, keep an eye on crude today, hovering around 75. You'll get inventories a little bit later on today. A big draw from the API yesterday. EIA is looking for a small draw as well, but I would argue crude and the dollar all relatively contained and supportive of the move we've seen higher in stocks.
All right. Thanks, BL. Appreciate your look here at the intraday action. Let's keep talking some earnings. Get ready for IBM this afternoon. Shares are up about 25% in the last 52 weeks. Kevin Green taking a look at the report, our senior markets correspondent. So this has been a nice move for IBM. A little smaller than some of the explosive tech rallies, of course, but by IBM,
Explosive.
put the pressure on a
Okay.
little bit here.
Yeah, just a tad bit, and actually the stock is trading or going in the direction of potentially all-time highs here. I mean, we're getting close to 2017 levels, and now we're going to see the fundamentals being reported here today after the close. We are actually
So now we're forming the pattern.
to come in at around 17.
This is what we got to look for next.
Quarter, and the adjusted
Well,
earnings per share estimate right now is sitting at $3.
I need to go pee.
Around a 5% increase on a year-over-year basis. But Oliver, there's going to be two segments that I'm going to be focused
First I'll
on.
go
First
pee
is
and
gonna
then
be
come back.
software. Now, obviously, they are also in the AI space, and they actually have been utilizing AI for a very long time, but they're really focused on not on the consumer, but on institution and enterprises. So if we continue to see a little bit of a bump there, that could actually, bring them over the top when it comes to revenue. And the market is actually expecting some pretty strong numbers coming from that software segment here. They've released several different things when it comes to
I got a great bladder, I guess.
detection, which is going to be more in the cybersecurity space. Also looking at Watson Code Assistant, as well as others here.
We had
that
3
are
white soldiers right here,
marketplace. And
so
we
get
are
ready.
actually expecting
SPX.
a decent showing.
We created a shoulder
What we
line.
not talk about that much is going to be the consulting segment. Now, we are also expecting a pretty strong showing for that particular business, and that also could see some tailwinds here as we start seeing technology companies really laying off a significant amount of workers. They could actually see a little bit of an uptick when it comes to demand because that workload could be offset by these consultants here, which is what the market is actually expecting. Last but not least here, it's a small sliver of their business.
3
but
white
it could be
soldiers is a
future when it
bullish
comes to
pattern.
computing
We got a
for
hammer.
The quantum computing space here, not talked about a lot. Right now, we're talking about large language models and artificial intelligence, but they are on the forefront when it comes to quantum computing, and that could be something that really does
3,900.
improve data
I'm gonna move it
processing,
up
as a whole, and really could revamp the whole AI narrative
to
if they're able to get it right, and they do have a
48.95.
proof of
No, let's
concept
stay.
that does look promising here in the near term.
Wow. All right, even though their IBM Watson AI has been supplanted, replaced, usurped by the language models, they've got maybe an ace up their sleeve. Market kind of trading it like that, really going vertical in the last 9 months with the stock now trading the highest since 2017. So percent-wise, it's a shallower move than much of the tech winners, but by IBM standards, this is a huge rally.
IBM.
Yeah, they're doing a pretty phenomenal job. I mean, they're very low beta when you're looking at the overall tech sector, and their forward multiples, for the most part, they don't really get too much extended. So I would say right now, they does look.
Do you like that Zona? Perfect for a squeeze.
Seeing some inflows because of the AI narrative, and then also from the software side, they have some opportunities here when it comes to enterprises. And once again, I think there is a little bit of momentum growing when it comes to quantum computing. It's an area that has not been fully materialized.
Let's see how easy that is.
But now that we're talking about artificial intelligence, if
you're able to see the pattern before it happens, you can predict almost the next move. So we're at 265 on this thing. I'm up within 2 minutes. I'm up $60 a contract. Now what am I going to do about that? Yeah, you're right. Let me tell you another thing I saw here. These 3 white soldiers. That's a continuation pattern to go to the upside. If we break this resistance level at 4888.63, we will definitely go higher. When you're up $70 a contract in 2 minutes, you got to learn to be disciplined and take that profit and get it off the table. So I'm out. No questions asked. I gotta go pee. Okay, I'm about ready to eat my lunch. So that's continuation pattern. It played perfect. If I didn't have to pee, I'd probably still be in this thing. Oh my God. Oh. Panic attack. Ugh. Ugh. The Dow Jones, the NASDAQ is up 176 points. The Dow Jones is up 39. The S&P at 25. And the Russell 2000. Now see, they got the Russell 2000 on here. They've been talking about that Russell 2000 all year. And it really hasn't done what it should have. You control your financial. Now let me look at the put. I think this is a choppy day today. The 48.75. This is just back and forth, back and forth. I can do this all day long, I think. Let's find something else. Oh, what happened here? Tesla. We're at 380. Now, if you took Tesla and you're a rookie and you're up $35 a contract here, I'm gonna swing this. I'm just gonna take an experiment, kind of like what I did with Netflix was a lot better experiment than this. I mean, there's probably 15% of the people that are going to take this trade and swing it tonight. My guess, that's guess. I want to break the 200. So here, right out of the gate, we had 3 black crows with a tweezer bottom, breakout, pull back, boom. Then another snake. Hammer, hammer, breakout. So she more or less broke out right in here. Came back and hit the top of the trend line. Boom. Oh, 405. This might turn into a swing trade. The only bad thing about it, I only have one. What the hell's going on here, man? Oh.
Ever right now.
Yeah, it's definitely an extreme dispersion that we have between small caps like the Russell 2000 benchmark and also the large cap indices. And yet, I think that we'll see relative strength improve behind small caps. That doesn't mean we'll see massive outperformance necessarily from them, but what we've noticed in the ratios between the Russell 2000 and large cap benchmarks is that there's been a pretty significant loss of downside momentum. So there are still downtrends in place, but we've seen with the Q4 relief rally, both in absolute and relative terms for the Russell 2000, a pretty significant
Well, it's red as could be, baby.
turnaround in those ratios, meaning that we should at least see better, closer to inline performance perhaps, if not phases of outperformance throughout the year for small caps. And that, of course, marks a shift. And I think in a way a welcome one, because breadth is often associated with small cap outperformance, meaning that you have broader participation on the upside, and therein it becomes an easier market environment for investors.
I just can't see it.
So right now, is there any, when I look at the Russell, I guess the thing seems to be more tied to some of the rate situation. You know, we just saw again today, we had this big drop in the dollar. We had yields down a bunch.
Mister.
And then we get this PMI to kind of reverse, and then it's the Russell that takes the hit. Do you think about that at all, the connection to some of the macro? I mean, does the Russell depend more on some big pivot next year?
Yeah, I mean, there's certain areas of the market that are a bit more closely tied to the direction of rates. And yet
Mister's the only one I like on there.
try to look at things not in a vacuum. We're certainly aware of the relationships. The relationships are valid over long-term time frames. There are certainly times at which short-term relationships or correlations will break up on the macro front. So we really try to look at things individually and then try to reconcile that on the back of our analysis. So with yields, we feel that the relief rally in yields should fade somewhat soon here, and that the corrective phase that we already saw manifest itself in the 10-year yield for one,
They should trade that
then
one.
resume, meaning sideways to lower action for yields. It shouldn't be the same sort of pace that we saw on the downside perhaps in the earlier stages of the correction, but there's been a pretty meaningful loss of long-term upside momentum.
SYNA.
And if anything, I think that's something that small caps would welcome.
Okay, so that 10-year, looking at the levels, kind of come back through that
Crocs.
first, because I know we've reached some of the trends to the upside, and it seems like since then the path of least resistance generally has been for yields on a daily basis to kind of drift lower. But then when you flip over the calendar year, we're pushing higher in rates a little bit.
Right, so the higher rates to me looks like more of a counter trend move, and that's because it came off of what we would consider to be an oversold type of condition for yields after their downdraft. So we are looking at it as likely to be short-lived. There's resistance somewhat close by for the 10-year. It's around the 50-day moving average. It's pretty much in line with current levels. There's also something called the cloud model that we use as a gauge of resistance. We think that cloud model will remain intact as resistance on the upside on the daily chart of 10-year yields. But on the weekly chart, it's still a support level, and it's roughly right now around 383 for the 10-year. Now, we do look for that level to ultimately be tested, and if it's broken, it would be pretty significant. It would support that thesis of having a corrective phase persist somewhat, for maybe months, if not years even. And the next support below this weekly cloud is around 3.25, and so I think certainly low threes for 10-year yields is something that would really mark a pretty meaningful shift.
So bond bears better hope this thing doesn't break through 3.8. It sounds like, or else you get lower yields. You're kind of pushing into the deep threes, which would be a massive reversal.
It would be.
Okay. Let's talk some of the commodity connections here as we kind of work our way through the charts. I know you were looking at copper in particular in your latest note. Tell me about that.
Copper was short-term oversold essentially coming into this week, and now we have some level of reaction to that. It's somewhat subtle. It's not necessarily the most exciting chart. If you look at copper long-term,
NDX is that weighted SPY.
That range is taking the shape of sort of a long-term triangle.
They talked about that yesterday.
Triangle formations, while they are neutral at their start, when they're resolved, then they tend to be fairly high probability in either direction. So we think that this triangle has been resolved to the upside for copper, and that means that the response to the short-term oversold condition should yield a resumed uptrend there intermediate term. When copper prices are
all-time high
or in an uptrend, that tends to be
you got a good call on that one.
Positive sentiment surrounding the global economy. And we've seen some of the metals and mining stocks, which we featured in our research today, are reacting also to a short-term oversold, still within the context of positive intermediate-term momentum. So not necessarily a favorite group or sort of segment of the market. We do prefer things that have breakouts and really strong momentum. But it's good to see these other areas that have been laggards up to this point in the new year start to react to those
Netflix,
oversold conditions.
Florence,
Shows that the
you got your
buying
wish.
is coming in now.
So kind of stuck without an obvious trend for the case of copper makes it a trickier trade to your point. I guess gold, as you kind of teased with some of the miners, also fits that a little bit after its maybe failed breakout. I'm not sure how we call that, but it certainly didn't open up the door to a big rally.
Yeah, resistance is called that for a reason. That 2063 level for gold has been a real major hurdle for it. It's been tested now essentially 4 times unsuccessfully, meaning that gold couldn't get decisively through that level. And with any kind of failure to break out, you tend to see corrective action. So that's what we're in the midst of for the price of gold. but the long-term indicators generally still do point higher, not in a steep or explosive way, but in a more regular sort of gradual way. So we do expect ultimately that resistance to be broken, not likely in the near term, but probably at some stage in the first half of this year. And therein would have some exposure perhaps to gold and other precious metals, but not large exposure at this time, with equities really doing so very well. I think.
So Netflix, I did a video this morning about my resistance level. You see this here channel? Pull it up on the yearly. Where did that come from? That come from a 3-year? Yeah. Jimmy called it head and shoulders. 568.40 is the shoulder line resistance of this head. So I'm predicting the next move. I want that thing to come up and hit the shoulder blade and pull back down and correct. Maybe back to this channel right around 520. So that's called a head and shoulders resistance. A shoulder line resistance. Did you get that, YouTube? This is how we called the SPY, the SPX, last year when we hit the resistance and pulled back pretty good. This is called, and then this is called a head and shoulders. And you're coming up from a downtrend, and you hit that shoulder line. This is on the 3-year weekly time frame. So that's going to become a hard resistance right now, and it needs to consolidate after this huge run that it's had overnight. So I'm calling that shoulder line. Good morning, retail traders. It's early morning on Wednesday. This is a Darvis box. And what we're going to do now is build support inside of this Darvis box. We hit the top of that channel. So I expect it to come down and hit the pivot point. I expect it. I don't know if that's going to happen. But this is real big stuff here. I mean, they've definitely dominated. They're going to be raising prices again. They've been notified. I've never had Netflix. I can't remember the last time I've had cable. Probably 20 years. I had it here in the apartment, but I haven't watched TV in 4 years now since they took off cops. Because of PC rules, politically correctness, wokeism. Don't want to hurt nobody's feelings.
Let's talk about that, Jenny.
So this name, ironically, I know I'm not the chart master, but it looks a lot like Lamb Research. I am part of it. Yeah, it looks a lot like Lamb Research from a chart perspective, given the fact that it's also at all-time highs. It's also up 3% this week, and it's also rallied about 74% over the last 12 months.
But they do have top-line growth,
They
right?
do have top-line growth. They just delivered previously in their third quarter really stellar results. I mean, they beat their expectations by about 25%. As far as their revenue went, it was a clean beat. Subscription revenue also did easily pass the high end of their previous forecast. Operating margin of 30% gained about 500 bips. Also did exceed guidance by about 300 bips. So a clean beat in the third quarter. So now for the fourth quarter, they are expecting earnings growth of around 21.5% year over year on revenue. That's also expected to rise about 23.5% from last year. And actually, as far as the street coverage goes, it also looks very optimistic, but even more optimistic than Lamb Research. With 38 analysts, 35 have buys. There are no outright sells. So that's 92% of all analysts that cover this name have a buy or buy equal rating, with only 3 in the neutral camp.
Wow. Street loves it. All right, so growth coming for the stock and trading basically as well as some of the best chip makers and hardware stocks, because some of these software companies still have not been able to quite keep up with the hardware trade, but it seems like ServiceNow.
Enterprise
doing a pretty
spending,
good
I
job.
think, is like been the resiliency of this name.
Yeah, okay. Anything different comparatively on these charts, Rick?
There are some key differences, but Jenny was right. They're very similar in terms of their overall shape here. And I think what I noticed about this one is the move upward here, a sharp rise, sideways consolidation centered around the volume profile point of control, the area of heaviest trading here, then another sharp rise up, acceleration of trend. We saw the trend line steepen here. We have a rather moderate sized channel here between our two purple lines, then more sideways consolidation, then another even steeper break to the upside, propelling us into these all-time highs and pushing above these old highs, these old resistance areas that we had. We did have a situation of declining momentum here, but it wasn't actually divergence because price was making lower closes there. So we weren't having the mismatch between price and momentum. It was just seems like a garden variety consolidation there for a little bit. Now, once again, we find ourselves in the overbought area, making new relative highs, pushing prices even higher, and we can see now, unlike our last chart, we are below the +1 standard deviation. That would be the resistance point to watch near 783. We're getting pretty close there as well. And you could also project the upside of our narrow white line channel here. That lines up pretty closely there. So around 783 might be a point.
Jimmy called resistance.
Old highs near 735 would be another supportive area potentially.
Support right now 553.78.
Research in some ways.
It is up more off the year.
553.78 to the penny.
Okay, there we go. So I'm not imagining it. It's a very powerful move. Definitely a high bar, but a company that's generally been quite reliable in the cloud.
In fact, we might have a head and shoulder. Well, we dipped down below it. No, we didn't. I mean, they don't have to be
trends of
horizontal.
And stability in the economy. ServiceNow coming out later. Las Vegas Sands. Get it now and later. That one's kind of tough.
Boo.
Yeah. All right. LVS. What are we looking at here? 2.5% going into the report.
I actually think this is the most interesting one because this one gives you a good exposure into China and all things Macau. And of course, previous
Doggy.
that was around 60% of their total revenue, but their gaming revenue.
SPX Lotto
91%.
calls
So
for 900
I always
at
find it to be like the most
$2
ill-named of all of the casino
260.
stocks because really most of it is derived.
Sands.
Yeah, it's Macau Sands exactly, but. They are expecting a profit this quarter. They swung to a profit in their third quarter. I mean, compare that to the losses per share of around 22 cents they reported in their fourth quarter just a year ago. Revenue expecting also to rise around 158% year
They're
over
now
year.
710.
So really astronomical growth, but also, mind you, this name had been like completely beaten up just a year ago. In third quarter, we saw RevPAR jump around 180%. Casino revenue surged 215%. So investors
baby.
are very much focused on what this recovery looks like and the nature of this recovery. When we do have occupancy rates standing really robust at almost 98% on the last several months, average daily rates for Macau are $681, which feels to me outrageously high. But hey, they're able to find those people that are willing to pay because their occupancy is still high. So I do find it amazing to watch this recovery, but for perspective, we are not back to full capacity in Macau. I mean, we're getting close though. So as of December 30th of 2023, we did see around 11,000 international tourist arrivals, just slightly under the 12,000 we saw pre-pandemic. But Macau in 2023 had its best year since pre-pandemic with around $36 billion in gaming revenue, but that still lags its peak, which was back in 2013 at around $45 billion in gaming revenue. So it's like we're coming back, but we're not fully there yet. Which I think is also can speak to like the Chinese economy and some of the various headwinds they're facing. But for that reason, I find this company so interesting because it gives us a screenshot of like international travel, Asia Pacific travel, what that looks like right now.
Agreed. I think that's why it's still so close to the lows, despite some of the improvements on the fundamentals. Still far off from where it was in the heyday. Big sell-off at the end of last year. Rick certainly has improved, but I mean, I don't know. How do we describe the chart?
Well, kind of two phases here. The first phase, like you said, kind of centered around 58 here. We had this large volume node there that's only rivaled by our volume profile point of control, the heavy trading area. Then we had a steep breakdown. As soon as we dropped below kind of this triple bottom area, excuse my not very straight line there, but as soon as we fell below that area,
you got to do better than that.
There, we had a small gap down right here that was centered, or the highs rather were 51.75. That was about where we topped out more recently again and fell off. So a lot of the price action centered around our volume profile point of control around the $49 mark here. We had kind of a megaphone pattern as well.
Megaphone.
Trend lines diverging apart from each other, but both tilted upward. So a difficult trading
I love this
situation
channel.
where two targets are continually moving apart from each other. We are struggling to make our way above the purple 252-day exponential moving average today. It looks like we are managing to peak our head above it after this gap up that we've seen today that took us above our two shorter-term moving averages here. So momentum trending upward, back above the 50 midline here. Things look like they could.
I can't tell you how refreshing this is to listen to a channel talk about charts my masterpiece. He mentioned megaphone pattern. Oh, I love you. I love you. I love you. I love you.
Section.
Nobody ever mentions megaphone but me.
Spotify. Give you the latest on a business update. Thanks, Rick and Jenny, for the charts. A market meetup panel ahead of us as well. Equities holding on to their rally and firming back up with the Russell back on track.
I remember when I first started flying.
It's so refreshing to hear the word megaphone coming from a television or from my monitors. Nothing more pure than a megaphone pattern. And he's talking about LVS, and it was coming out of a snake. What am I typing it in there for? LVS. So he was, and it's, if he would have looked at the weekly, he might have come up with a different strategy. He was looking at the yearly, saying it could, that it's going to hit the 200. So there's your snake. That's huge. Right to the 200. So there you go. There's your inverse head and shoulders to the right. So support would be off the 50 on the daily, and resistance will definitely be up here before you hit the 200, which is a good spot. You got a 1, 2, 3 here drop. So refreshing. Perfect resistance level. This would be a long trade, but you want to take it on a dip.
Services to allow smaller competitors access, and in this case, Apple's required to allow those third-party developers like Spotify to sell their own iPhone apps outside of the App Store and then be able to bill them more directly instead of using Apple's billing services. Now, Apple has long criticized this law, said that it was not in the best interest of consumers, and Apple had not yet revealed how it's going to change its software to be able to comply.
Tesla's still moving up.
So far, this is a huge win for Spotify and all of its other peers who plan on having more purchases inside of their apps and circumventing the process, as well as an up to 30% cut that the App Store usually gets on sales.
This is a big deal because if it's any blueprint for further separation from Apple and the customers in app, then it could be pretty meaningful. So good for Spotify for sure, up 3%. Thanks, Renita. Market likes it. Let's talk about the broad market. Market meetup time. Mr. George Tillis joins us from Salt Lake alongside Kevin Hanks back here with me in studio. Kevin, we had a little volatility around PMIs, but we've caught ourselves, and even though bonds pulled back, the NASDAQ is at highs of the day and the Russell's still up 0.5%.
Yeah, the story is the strength of that PMI number has turned the bonds
a little tone change in the bonds. Yields are down, but they're barely down now on the day and look like they want to go positive here on the day. That brings them over 4.1, Oliver. And what level does the market start to pay attention to higher yields? I think it's soon on the horizon. We get up by 4.2%, market's going to start paying attention to higher yields. And it's going to seep into the narrative. That's what I think this number, and these are these are big beats on the PMI composite. I mean, they were looking for 47.7 on manufacturing, comes in 50.3. They're looking for 51 on services, comes in 52.9. So not just beats, big, strong beats now all over 50.
Yeah. What do you think, George? I mean, the fact that we had manufacturing pop back up in this PMI as well, it looks like tomorrow's GDP could impress, perhaps.
460.
It
Whoa,
certainly could.
God,
I mean, I think the
wrong
numbers around 2% are
That's 460.
relatively on par with trend. I think that's the economy that we're in, at least for 2024. I think at the end of the day, I mean, looking at rates, I actually think the market appreciates rates being stable. I think if you look at even the short-term rates at the federal funds level, we're now at over a 50% probability that there is no rate cut coming up in March. And I think if we're still in that pause condition, that's a good sign for the markets. I don't necessarily like the fact that the markets wanted the rate cut or pricing of the rate cut coming in March. So as long as we continue with the pause, at least at the short-term interest rate level, I think that's good for the markets. Now, the longer-term rates, if we start to pick up a little bit, there may be some softness across the board from that perspective. But, I mean, just look at profitability. I think that's what the market is telling us. You know, large technology names, they're extremely profitable. They're moving to the upside. Ideally speaking, we like to see the market broaden out a little bit. We may end up seeing a catch-up situation where perhaps the S&P starts to pick up a little pace compared to the NASDAQ, for instance. But overall, you know, I think it's still a healthy market. And I'm looking still, like I said, for the pause, which is the best position for the market.
Yeah, I like that point a lot, actually, that the pause, no hikes, is more important than cuts, really, especially if you have to have worsening of the economy for cuts. This is a pretty sweet spot we're in, Kevin. It really does feel like that until proven otherwise by the data, but there has been no sign of major break in employment. One of our weakest points in all the economic data were the manufacturing PMIs.
Yes,
exactly. The factor back above 50, it's like, where's the risk in the economy?
Yeah, they were like the last people on the bus. They were the last boat out.
Yeah.
And, you know, they were the one lagging, and now here comes
under 50 for a while.
PMIs. Exactly right. So listen, I think what you're seeing with the market is just a tone that is extremely bullish, and there's not much to change it. You've got inflation coming down. You've got rates off their highs. You got a Fed now. I don't know. The question is, are they ready to lower? But they're certainly not going to raise anymore, right? That's the worst case scenario now is they pause and a hold, I think, right here. I think that's what the market sees. So the only thing that can screw this up is reigniting inflation, Oliver, the only thing.
Yeah, and that's where Friday's number gets interesting, but the components in that core, George, are supposed to generally continue to soften, even though our top line number is going to be above 3. There's a lot of folks arguing that the stuff that is in trend will start to slip closer to 2.
Well, yeah, I mean, the biggest one, obviously, is the slower moving owner's equivalent rent component of housing. Again, that's going to take some time to come down. You know, I still think.
Oh my! Look at that.
Be, you know, somewhere between 2 and 3% is.
We're at a double top, triple top on Tesla.
Will adjust policy rates accordingly to those levels, just because of the nature of the labor market right now. And again, you know, they even talked about the 2025 levels being around 2.5%. In terms of the federal funds,
430.
they're already indicating
almost up $100 a contract.
That inflation is going to be somewhere between 2 and 3% as the new normal, and they haven't really declared it, but you know that's what I surmise from the indications they provided in terms of language. Now, you know, I think at the end of the day, you know, looking at PCE, probably come in line, core levels coming in again below 3%. Ideally speaking, that's a good sign. But I'm still in favor of keeping this interest rates at the levels that they're at. I think the market can continue to hit new highs as long as they stay at these levels. But again, irrespective of the 10 years becoming unleashed once again, maybe somewhere in the 4.2s, as Kevin mentioned, perhaps 4.5%. That becomes a little bit more constrictive, I think, from a long-term lending standpoint.
All right, well, this might get interesting because we just went red for bonds. Just popped back higher for yields. It was a big rally this morning in bonds, so faded the whole thing down thanks to that surprisingly good manufacturing print. Appreciate the thoughts, guys. Coming. Thanks, George Jones. Trading 360 with Nicole Pedalides is up next. Join me 2 p.m. for market on close. Stick around until the bell. We will hit Tesla earnings live and all the others. See you then.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investor.
There we go. $100 a contract. No, that's the wrong one. Sorry. I screwed up yesterday by looking at the wrong platform. I'm going to go in there and prepare my lunch. Netflix is going to be the 200 SMA for support, maybe for a reversal here. Called resistance once we hit it. Go back and watch that video. It's going to be a good learning lesson. In the video. Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And right now, I'm going to try to make it as plain as simple as I can. We have the channel, which is the snake. We have the breakout above the channel. We have the pullback to the top of the channel. And we have a boom. Snake, breakout, pullback, boom. One more time. We have the channel, snake, breakout, pull back to the top of the channel, not no farther than that, and then the boom. This is on the 1 hour time frame, and this would have worked as a good swing trade for you. Have a great day. This is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. That was an info commercial from Washboardjim, brought to you by KSCP, a radio station out of Springfield, Missouri.
I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. Another record-setting day. The S&P record highs, the NASDAQ 100 record highs. A lot to chat about in this hour. We'll have the big three and chart trades for Toll Brothers, Consumer Discretionary ETF, and Boeing. Disruptor today, AMD. New Street upgrading this stock to a buy rating. And our panel is ready to break down all things Netflix. Stock is jumping about 12%. Huge spike in subscriptions. In the meantime, Here are the actual numbers that we are looking at this moment. The Dow's up 81 points here as we speak, 37,987. The S&P new highs today, 48.96 right now as we speak, led by communication services, tech, energy, financials.
Like I said, 20 years of sitting behind this desk, I've never seen a 3-month like this in my whole entire trading career. Never. Never. You can't stop these people. They don't want it to go down. And any kind of dip is a gift. It's the easiest market to trade right now. And it's only being run by a certain few stocks. And that's what's the scary part about it. I mean, all the other ones have come up with it. It's because they printed $6 trillion in 3 years. Nancy Pelosi made $500,000 in a shake of her fist. $500,000 in NVIDIA. In less than 3 months, not even that long. I got 624.06 as resistance with a 640 long. The funny thing about it, if you're listening to the people on CNBC, none of them shorted the market. They go, we're buying the dip, we're buying the dip, we're buying the dip, we're buying the dip. That's what I heard. I only heard that 15% of the hedge fund managers made money in 2022. Only 15%. They've made ungodly amount of money in 2023. And it's a continuation. I don't think I don't know. I know I played 2022 almost perfect because I wasn't listening to their garbage. But that's just one heck of a run. I mean, it's almost 200 and some percent. NVIDIA 108, now $600, $618 in a year and 3 months. Year and 6 months. Not a year and 3. It's only been 3 weeks, 4 weeks now. I mean, this is an irrational example. I'm waiting for the third soldier, and I'm going to short this sucker. NVIDIA. And that's only one more week, probably end of this week. fact, I got to keep a good eye on that candle. Not sure if we're going to hit that 624 or not. We hit 620.10. How'd I get that number? I'll show you how I got it. Forgot how I got it. Oh, it's maybe the 4 hour. Yeah, that's how I got it. Got it on the 4 hour time frame. SPX had a knife here. It's half price right now. SPX. Boy, AMC I think had a new low. Nope. 401 was my lucky employee number. I'm gonna go make my lunch and I'll be right back.
I guess at some point.
Nothing in Bitcoin sounds crazy to me at this point. But, again, if I'm looking at this from a pattern perspective, try to not think about the noise as well. And, we have a pattern target based off of a huge foundation breakout up near the last all-time highs, right? And so thinking about that is, of course, that Bitcoin can oscillate all the way down to almost 30,000, still above that breakout zone. So as we know, volatility is heightened to
30,000
1,000th degree with Bitcoin. But if you just look at it over time, it does pay attention to technicals pretty well. And even along the way over the last year, had a series of rising wedges, whatever you want, or falling wedges or bullish, taking advantage of them and broken out. So now it's a test, right? Because if I look at Bitcoin right now from a daily perspective, let's look at a topping pattern over the last few weeks. If you can hold here, that will negate that and potentially create another, bullish pattern to leverage on this little higher again.
Thank you so much. It's great to see you, Frank Capillari of Capthesis. Thank you. Plenty more to come here on Trading 360. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will go through the technicals. Don Kaufman will take us through the trades for Toll Brothers, consumer discretionary ETF, and Boeing, which continues to get news all morning long. Next on Trading 360 here on Schwab Network. We will be right back.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging.
My dad was a pellet mill operator. I used to watch him carry 25, 50-pound bags up 11 flights of stairs of dog food. When I was a young child, I respected that man, so one day he took me to work. He said, "Jim, today is Father Sunday. How would you like to come and watch me make dog food?" And I said, "I would love it, Dad. I'm so happy to go do this." So we go into so I get out of the car and I get ready to slam the door, and my thumb got stuck between the door and I smashed my thumb. He had to rush me to the hospital so they would cut my nail off and let it grow back. That was my father and son outing. But we still went up the stairs with my swelled up thumb, walked up 11 floors to where he would dump the pellets into the thing and it would roll down to the bottom and make pellets for the dog food. I will never forget it. I was approximately 7 years old at the time. That was my father and son outing.
I am bearish on in Toll Brothers is not only is a topping formation, in the last 2 trading sessions, you've had some pretty decent sell-side activity in the midst of an incredibly strong market. So when markets are rather resilient, you're seeing some sell-side activity in Toll. I don't believe this is actually going to fare well in the near future. I'm going to take a bearish position. I'm going out to the 16th.
Oh, come on, guy.
Expiration. So I've selected this to
Puss.
give myself reasonable.
Oh, well, I understand.
I'm going to go out and
It's up
buy
100%.
the 97 puts. Again, buying the 97 puts, selling the 94 puts. So it's just a $3 wide put spread. I like to choose spreads to kind of define my risk. In this case, that risk is a dollar debit. And it also keeps me rather intact in terms of, explosions and volatility and so forth.
I don't know, man.
These spreads negate most of the volatility risk as well.
I think you're taking a big risk here, sir.
Okay. I mean, we know that even when people were worried, we were seeing some of these home builders hitting new 52-week highs, and left people scratching their heads. Ben, your thoughts on this as you're looking at the chart?
Yeah.
I'd scratch my head too, honey. So in 1 year, we went from 54 all the way to 105. We had a bull flag, and we have another one right now. She definitely liked the last earnings. I don't know. I hate seeing things at these levels. I really do. It's hard. It's hard to see irrational exuberance at the extremist level I've ever seen. It's hard to get used to. Not that I don't appreciate it, because I really do. Makes the market so easy to trade. But man, we got 3 black crows with a double bottom. Come on, guy. I think I'm going to buy a call and go against your puts.
$105, 106. They don't want to see us below 92, as I mentioned, but you can see that we're kind of just, again, testing the lower extreme of this range that we've been in right now. So back above 100 opens up a door for 106 here at this point, just kind of, again, pulling back a bit here, possibly another longer-term buy opportunity in this longer-term trend that we've seen the upside. Here's the daily candle chart. So we've gone from 15...
You see anything different about this guy? All of a sudden, he's got dark hair.
Right now over the last year, and you can see a similar pattern playing out. Let me show you areas of consolidation that have been forming at higher and higher levels, kind of widen this out here right now to include all of that price activity we've seen. We'll call it 100, 75, 60, 45, staircase pattern stacking up here. I agree with Don. We've started to roll over a little bit off these most recent highs at around 106, but still no indication that this trend environment we're seeing on multiple time frames, trend higher here, Nicole, it has been invalidated.
Right, understood. And how much of your trades and thoughts, Don, depend on the rate environment?
So it's actually interesting you say that. First of all, I've been shocked. Home builders have held up incredibly well. I mean, they've been so resilient in the face of higher rates. But at this point, I mean, literally right where we're at right now, every good aspect of the idea of rate cuts for all of 24 has already been priced in, and specifically Toll Brothers, like, this is it. They can only be disappointed here if the Fed only cuts, let's say, 2 or 3 times throughout 2024. I mean, this is a stock that has, like, what, 6, 7 rate cuts actually priced into it. It's just simply not going to get that. It's another reason to bear up here in the near term.
Okay, next up, the consumer discretionary ETF.
All right, so XLY. One of the things that most people do not recognize about XLY is, what is XLY? It's really a proxy of Tesla and Amazon. I mean, in the end, Tesla, Amazon make up about 40% of the XLY. So in and around earnings, and I shy a little bit away from some of Tesla earnings, I shy a little bit away from some Amazon earnings. I mean, look, Tesla is high volatility, high impact underlying. I am a Tesla fanboy. I admit that. Okay. Amazon, maybe not so much over here, but you got to understand there's probably going to be spectacular growth around cloud computing at this point, especially when you start to see stuff like Netflix explode to the upside, which relies exclusively on none other than Amazon. As such, I'm looking at a bullish position here, and that bullish position is actually going to be spread out to the March 15th expiration. So not only is this XLY trade going to encompass Tesla earnings, it's also going to encompass Amazon earnings. If there's going to be upside momentum, I'm going to be there for it. This is a March 15th, again, March 15th expiration. I'm going to be buying the 177 calls, selling the 182 calls. So it's a $5 wide spread. It's done for a $2 debit. XLY has had no positive performance on a year-to-date basis. I'd expect if tech continues to kind of rally, specifically Tesla off earnings tonight, you may get a nice bid under XLY here in the very near future.
All right, thanks for that. And I'm going to ask you about Tesla because it sounds like you think it's going to be some good numbers based on this trade and your consumer discretionary commentary.
It's a falling wedge.
Your thoughts on the XLY ETF here?
Well, I think you need to be time frame specific when you're looking at this one because there's a couple different opportunities here. The chart behind me, we're looking at a very granular look at price activity. We're talking about 5-minute candles, and the move lower we saw back down below 100, a bearish pattern playing out here. You can see top left to bottom right, mostly consolidating after a big move again through that. I said 100, I'm sorry, I might have said 100, I meant 180 ultimately, but mostly consolidating here after we broke down through that 175 level. Let's take a look here. Again, 5-minute candle chart here, and that 175, 174 area is what I've got my eye on right now. I've got a lower extreme right around 170.
I don't see what you're seeing, my friend.
177, but most of the price activity over the last few weeks has occurred around this level. So a bearish pattern here, weakness, consolidation, simply put, acceptance of that range that we've been
That's
in.
a bull flag. What are you talking
Now, when
about?
you take a step back, you're going to see a little bit of different pattern playing out here. This is actually somewhat bullish. You're going to hourly chart going all the way back to the lows that we saw. If you remember, that was down around 147 back in the end of October. Saw a nice run up here again up to 182. And let's just take a look because while we were ranging or trending higher here, we were constantly referencing those prior areas of balance. Bouncing around 180 near these highs. We were looking at 168, and as we've rolled over here, this is not necessarily what the bulls want to see, but I don't think it's bearish at this point either because you still have yet to take out that 168 level. So there's a good possibility here that if you kind of just look at that range here as one larger area, that really what's happening is, again, that 174, 175, 176 area in this instance is going to be key to watch, holding above 168. So again, a little bit of a different situation playing out depending on which time frame you're looking at there. Speaking of, again, you've got a bit of a bearish pattern playing out here on that longer term where we've seen 3 areas of value formed at lower and lower levels. So we're just kind of testing the upper extreme of this range that we've been in, testing key highs that we've seen multiple times fail. Let's watch this because we're possibly rolling over here right now. So again, I think it depends on what time frame you're looking at in terms of whether you're bullish or bearish this one. And that's very important in terms of being realistic about expectations as far as price activity as well. So looking at this here, though, it does appear as if we're starting to roll over here. That longer-term bear still seems to be in control with that most recent failure up around 182. Back down below 160, Nicole opens up the door for lows we saw end of 2022, beginning of 2023, around 130.
Okay, wow. I mean, that's a good look there. Any final thoughts on that one before we get to Boeing, Don?
In terms of Tesla numbers tonight, just a quick mention on that one is, everybody keeps talking about in the U.S. that there's an EV demand issue. The EV demand issue happens to be it is relative, but it's Ford EVs, it's GM EVs. It is not Tesla EVs.
Oh, you're full of crap.
You see that reflected in the numbers this evening.
He's lying, man, because Ford cut the production on the Lightning, and General Motors is having the same issue. They haven't sold hardly any. I disagree with him 100%. 1,000%. He's wrong. Now I'm mad at him.
We're talking in Washington. Washington. Your thoughts on Boeing, John?
Boeing sucks.
Ironically, that's actually the exact report with the actual that landing gear falling off today. That's the exact report that actually,
Landing gear falling off today. What?
Going in here. Look, I've been watching this underlying, the trade of this underlying.
You gotta be kidding me.
They have serious issues right now. They have serious issues at the management level, the senior management level, all the way to the board. And at this point in time, I think there's going to be some sell-side activity in here, and there needs to be some sell-side activity until they literally clean house from the board to the executives, whatever it takes at this point, because these incidents are not necessarily abating. In fact, they're even expanding to some degree. In this trade, I'm actually going to give this one quite a bit of time, because what we're going to do here is we're going to take an out-of-the-money put spread shot. That is a wildly bearish trade. It's a lower probability, but right now, you know, I hate to use this pun, but Boeing is literally in a nosedive, you know, in terms of the stock, which we're about to take a look at with Ben here momentarily. So I'm going all the way out to the April 19th expiration. I'm going to be buying the 200 puts, selling the 190 puts. So it's a $10 wide put spread. It's done for a $2.60 debit. I am well aware that we're actually going to carry this trade through earnings. I think the only thing that turns Boeing around here in the near term is just that. It's got to go through a full-fledged restructuring. Well aware that they've already gone through this, but clearly not having the impact they
You gotta be kidding me.
Look, it's down 20% in 1 month almost. You know, went from 267 to 213 to the point of your trade. And when I asked another trader that was on with us earlier in the week, and I said, well, isn't it, could some people say it's a bargain now because it's sold off so much?
No, it ain't.
Just felt also, like you, just felt that there could be more room.
Boeing was a bargain at 120, honey.
The Boeing mechanics failed to properly install the blown out panel, according to the Seattle Times report. Ben, your thoughts on this chart?
Yeah, I feel like we've all seen stocks that were in oversold territory crater, right? And so difficult to buy them for that reason, and difficult to buy this one when you see trend continuing to move lower, value continuing to move lower, and this is across multiple time frames here in the cold support of the bearish narrative that Don just laid out. Let's dive into a more granular time frame first and foremost. I queued up an hourly chart here. You can see the declines from 267 recently bottoming out around 200 just below, and we've been mostly sideways since, testing upper extreme of range that we've been in. I wanted to identify some of the areas of consolidation that have formed at, in this instance, well, easily identifiable lower and lower levels. So again, just kind of testing the upper extreme here. As long as we hold below 218, the working assumption the value continues to move lower here seems to be pretty well intact at this point. And again, shares coming under pressure here, so higher today, but taking a little step back here, I wanted to show you here that move that we just looked at, the significance thereof, because take a look at this. Boeing had been trending higher, actually, all the way up into the highs, 267, balanced around 262, and while that was happening, what are we looking for? A new area balance to form at a higher level. You want to break out at that point if you're bullish, and acceptance thereof, and look what happened instead. We rolled over. Took out this 256 level, which was significant. It was the last area balance prior to the one that we were currently forming. Break down below that level, trend up, gotten validated. Everything below that, again, kind of feeds into that bearish narrative. Let's take one more step back. Speaking of bearish narrative, here's a weekly candle chart here. So we're going all the way back here to 2018, the highs that we saw, that was up around 400. And this chart says it all in many ways. Look at this, two really well-defined areas of consolidation. We're currently balancing around 180 right now. Just recently testing an upper extreme, a high that we saw back in the fall of 2020, beginning of 2021. But you can see two areas again of consolidation that have formed at lower and lower levels here. So this one's coming under pressure. Take out 180, guys. Open up a door for a retest of the double bottom we saw in 2022. That's down around 100, 110, 120. Ultimately, that's what the bears have their eyes set on here. Again, weakness through
120? You got to be kidding.
For retest of some of these lower extremes we've seen in this range going all the way back to the beginning of 2020.
Yeah, and it's so disconcerting when you read all these headlines. I mean, that's great on the chart there, Ben. Thank you for that. And to your point, you know, when people say about whether or not now they think it's oversold to jump in, and still there's some risk to the downside. Final quick thought, Don Kaufman.
Yeah, the bright side is nobody wants to sit in the exit row seat, and that's my absolute favorite seat. I fly a lot. I'll be there. I'll be the one to open the hatch if you need it.
Good to know. Okay, good. We can count on you, John Kaufman, Ben Lichtenstein. Thank you both very much for the big three today. Appreciate it. And we're going to continue our spotlight here on the airlines. We have S&P's managing director. Earnings season rolling on. We've heard from a few of the airlines already. More to come. Let's get into that. Trading 360. We'll be right back.
Boom, 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 boom. XLY has a symmetrical flag on the hour, 30-minute. You had a falling wedge on Walmart today. Breakout. 1, 2, 3. One tubus freebie, 1, 2, 3, pulls back to the third, and then boom on the fourth. Played out perfectly.
Landscape when it comes to enterprise spend and how they feel that they're going to be able to navigate this market moving forward.
Okay, thank you for that. Kevin Green, good to see you. Appreciate it. Thanks. Now let's continue our spotlight on the airlines. We've heard from Delta, United. We'll have Southwest and American. We're releasing tomorrow. For more on the details of all of this, Jarrett Billis is with us, Managing Director, Transportation, Aerospace and Defense, S&P Global Ratings. Thank you for being here. Let's start with Boeing, because obviously Boeing is the key to all of these airlines. If Boeing has problems, many of these airlines have problems. The very latest is that a Boeing plane loses the nose wheel of a 757 jet. It fell off and rolled away in Atlanta as the jet was ready to take off. Boeing's headlines, that's terrible. Your thoughts on what's going on for Boeing?
Okay. A couple weeks ago, Boeing announced that they were going woke. And this is something that I'll never understand. They've been bailed out by the federal government during COVID. They got a big old package. So the government comes in and says, go woke. So they hire a progressive liberal. And he says all he's going to do is hire people on the color of their skin and the gender. not by the qualifications that one holds. Ever since then, ever since they came out and said that, they've had nothing but bad luck. Makes me real leery of wanting to ever get into another plane. Because I think quality should come over quantity. I've always said that, every business I've had. I don't care how much you put out. I don't want to know how much you put out. I just want to make sure when it goes out that it's good quality stuff. Because I don't want them customers coming back to me and me having to remat something or redo something, or if there's a little bitty dust in the glass that they keep looking at. I want to make sure that there's no scratches if I'm using acid-free material. I mean, some of that acid-free glass can cost $50-$60 a sheet. I don't care. I want to make sure that it looks good. No matter how many pieces of glass you have to go through. I don't want that customer coming back with that picture frame unless they want to remat it to something or reframe it. When I took inventory, I had an inventory business. I told people, I don't want people working fast. I want you to do an accurate count. So when I go back to recount your stuff, I want to make sure that it's accurate. I don't want to have to keep going back and checking everything you do. Same thing with cleaning. I give you 3 steps on how to clean a toilet, and I want it done that way. If it's not done that way, I'm going to know it. So I hired this one guy, and I had to go to a bluegrass festival to play a concert. I drive 4 hours, and I get a call from the boss saying, the police were out here. I'm saying, what? I said, yeah, the police came out here because the guy couldn't shut off the alarm. And I sat there for a week and showed him how to shut the alarm off. I had to drive 4 miles back just to fire the guy. Because I showed him over and over and over for a month how to turn this thing off. I told him to take notes. So right after I got done with the concert, I had to run back. The sucker cost me almost $1,000. It's always about quality first, not quantity or trying to meet some quota. Or that's why I'm done with business after I get done with my job here.
Specific thoughts on those companies, and what happened to that merger? I mean, the Spirit JetBlue, is it as dead as dead can be, or do you think it could be sort of rekindled in some way?
Well, I guess I'll take your last question first. On the Spirit JetBlue, it's unknown. There is an appeal. Based on some of the disclosures.
Same thing with AMC.
DOJ blocking the deal.
Same thing with AMC. They came out with a bunch of woke movies in 2023, and everybody hated it. Most people hated it. And as far as I care, this stock ain't worth investing in anymore. It's not worth investing in anymore. I think it's going end up going back to people are buying this stuff and then finding out they can only make like, I mean, we're at the level where it's perfect scalping. If you buy like 1,000 contracts and sell them for 20 cents or 1,000 shares. I traded this crap a lot, these penny stocks, but they're not doing any good anymore. At one time I liked this company. But that's my reason why I'm bashing it. I heard the other day they're like $9 billion in debt now. I heard $5 billion. The guy at the IRS had a baby. And I asked him, I said, how's it going? First he said he was tired. And I said, what? What are you tired for? And he said, oh, you know I got that baby now. I said, wow, I know how it is, or I heard how it is when you have a baby and you got to stay up all night. Go out and watch it real closely. He said, yeah. He says, my wife works full-time, I work full-time. We have to drop it off at a daycare center. He says, I'm about ready to tell her to go ahead and quit her job because it's costing me $1,400 a month for them to watch this baby. I said, well, it's probably a good idea to have you or your wife stay home with the baby at a young age, a little baby. And then maybe later, daycare sounds like a better idea. Because he says it's affecting his job. And this guy carries a gun, so you want to make sure he gets his rest. For any of you daddies out there, you probably know what I'm talking about. Nikola got down to 58, or GOEV. Here's one I used to trade a lot. This is the Russell 2000. FSR. Had a little pop out of a snake coming back to support, creating an inverse head and shoulders. This could be an opportunity maybe, if it has any kind of good news. Riot at 1036. Wolf is another Bitcoin trade. There's Fubo. Laser. Fubo, and what was that other one? What's the other media one? I can't think of it right now. Blue. Someone just sold 40,000 shares at 111.
regulatory scrutiny that is facing or challenging NVIDIA. So, I mean, New Street now has a target of $212 or $215, which is actually the high analyst estimates, bringing their targets up considerably. The midpoint targets right now are around $165 for AMD. But the company just continues to accelerate its earnings growth. It actually had a very poor performance going back to 2022 and early 2023, and that was really a function of the CPU technologies. There was an inventory
should have kept an eye on Franny and Freddie.
PC prices were falling, so were chip prices, and that really created a problem for AMD. But once the artificial intelligence, hype or theme started to take traction, a lot of the analysts started reevaluating it, and their new GPU chips, which they recently launched, are actually very promising with large customers, which include companies like Meta Platforms and Google.
I mean, it was always sort of a second or alternative to NVIDIA, but as you said, now looking to their chips as well for the outlook. The M1300, I see that as being a positive part. There a lot of confidence around that timing for that. Tell me about your example trade today, George.
Yeah, so clearly, I mean, there's a lot of momentum going on in the stock. One of the things that to keep in mind is earnings. There's some earnings risk. They are going to be reporting on the 30th, which I believe is next Tuesday. So we can continue to play the trend to the upside, but we can also capitalize on the fact that next week's volatility in the call options is very inflated. But we're going to put on a bullish trade, and effectively the stock has to move higher in this case. So what we're going to do is for next week, which expires in 9 days, we're going to sell an out of the money 190 call option, and then we're going to use the proceeds, because those options are inflated in terms of high implied volatility. We're going to use the proceeds to purchase a February monthly with 23 days to expiration, 170 in the money call option. So this is basically.
I agree with him about the 190.
Now, altogether, earlier today, you could have purchased this for about $9 a share, or $900 a contract in debit. So, effectively, what we'd like to see is, the stock to go higher. If you do hold this structure through earnings, and the stock does break back above the 190 area, you just won't participate past that level. But if you do end up holding this position to expiry in the monthly contract, which is the 170 call, the break even on that is 179. So, I mean, looking at the stock, it's right around that level right now.
George Sills, great to see you. Thank you so much. Good luck there at AMD, our example trade and our disruptor today. Coming up next, 360 round. Let's break down those Netflix numbers. What a big jump. The subscriber jump was more than even the Whisper numbers, and as a result, the stock has been up double digits. Streaming landscape, details next. Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free.
February 16th straddle. Put at a sell at 185 and a buy at 182.50. I think it'll go to 190, 189. I'm definitely in a good spot here with Tesla, according to the heat map. Not named AMD though. Oh. If we could see 150 again, that'd be just simply marvelous. AMD's the next NVIDIA. Yeah. SPY did bounce off the VWAP. If I saw that, I'd have jumped in that trade. It's always good to have that VWAP next to you. Fannie and Freddie are both on here. I just now saw Fannie. FNMA. And then we had Freddie on here, I thought. FMCC. How about Hog? I haven't looked at Hog in a long time. Not too good. Well, Hog's a good trade to get in the winter. Then we got Seed. I like to buy Seed too this time of the year, right before spring. But just China. And it came back to, ooh, man. Got to keep an eye on Seed. Definitely cheap. And then we had Verizon. Verizon earnings.
Strong. It's growing. We saw gaming downloads of their portfolio of games up 180% in 2023. 53% of those downloads came in December when it released GTA. So I think those kinds of deals and creating that type of content that continues to connect with the user makes the whole platform valuable, but particularly the ad platform for the advertisers themselves.
All right, great to see you both. Thank you so much.
Thank
Dan
you.
Rayburn, streaming media analyst, Seema Shah, Sensor Tower. Thank you. Thank you for being with me here, friends, on Trading 360. I'm Nicole Petalides. I see you every day at 11 a.m. and 2 p.m. live here on the Schwab Network from the New York Stock Exchange floor. Keep it right here. Fast Market is next.
Schwab Bank Investor Checking, the checking account built for investors.
Break down consumer sentiment data on Tesla, which is falling to kick off 2024, and they've got earnings after the closing bell that'll be highly watched. Now let's take a look at the major indices, which are just off the session highs. Continue to see all-time highs for the S&P 500, up 0.7%. Dow Jones Industrial Average up 130 points. NASDAQ 100 up 1.25%, and the Russell 2000 small caps lagging once again, but still up nearly 0.4%. To help me break down the market action, let's bring in my co-host, Kevin Hinks. Kevin, this is a Teflon market that's getting driven by what?
I was gonna make
I know, that was a hard question.
I was going to make a joke and I just can't do it. I did it no, I can't. All right, now, let's stay focused. Stay focused, Todd.
Yes.
Come on. This is a rally. The lower dollar is helping stocks. Obviously, Netflix that we'll talk about with Jenny in a moment is helping stocks. The perception that lower interest rates, I mean, yields were down until we got that PMI data. Now yields have gone positive today.
Yeah.
So
not putting pressure on that.
Keep an eye on that, but big rally in the Japanese yen is making the dollar weaker. And so, and a pretty substantial rally in the euro as well has got the dollar weaker. That's helping stocks. And then, just good news. China, there's no good news out of China other than the stock market's going up because they're throwing everything they can and try to stimulate their market. But that being said, there's not anything right now that's getting in the way of this market on the upside. That can change tomorrow with some economic data, some GDP, some personal income outlays on Friday, and some earnings on large cap tech because the valuations, Tom, are getting lofty.
Yeah, we've got overbought levels on a technical side, S&P 500, NASDAQ 100 also. So we'll continue to watch this story and delve into it a little bit more. But let's get to the Netflix earnings. Let's go to Jenny Horn, markets correspondent here on the network. Jenny, all is well. Just sit back and chill, watch some Netflix, because everybody else is, right?
Not me.
I guess so. I feel like we might have exhausted the Netflix and
Well, I'm
chill
watching it.
jokes for the day because this is not chill. This
Got
is
a trim spider alert.
Yeah, I knew you were thinking it. This is absolutely
Uber.
the opposite of chill, and I think well warranted when you have results like they put up. I mean, just blowing past forecasts. I'd say securing their dominance as the streaming winner because it feels like at this point it's like Netflix and then everybody else. And I think a part of it is that it's frankly their great timing into the space. You have a very loyal consumer, but more impressively so is the fact they're still able to grow at the pace they are. I mean, we saw nearly 30 million net user adds in 2023, which was its best growth since 2020, while 13.1 million other net users added during the fourth quarter easily topped expectations, which called for around 8.7 million users. So, I mean, they just blew past forecasts. They did also highlight their ad-supported plan and, of course, the password-sharing crackdowns, which offered a lower price point of about 30% to their previous core offering, expanding their total addressable market substantially. So it is all working. As far as a strategy shift goes, it has been a very, very impressive story to watch. They've had now quarter after quarter of really impressive results, and today's move is no exception to that. Now, one of the most optimistic analyst notes I saw was Pivotal Research with a $700 price target. Right now, of the analysts upping their price targets, the average was around $600, which, hey, still implies some nice upside today and also implies about 20% upside from where we were trading prior to getting these results. But this stock now commands this premium relative to its rival, trading at around 30 times its 12-month forward earnings. So for that reason, some analysts are a little bit more on the sidelines. I wouldn't even call some of these notes today that were a bit more pessimistic negative because, frankly, they were. For example, Deutsche Bank was one that downgraded shares to hold from buy, still raised their price target substantially to like $525 from $460. But they just mentioned the fact that right now we could see a lot of this leadership position and
I'm liking this here platform
into shares. So perhaps now taking a more neutral approach as a result of their valuation, which I do get. You all were just discussing how we're at all-time highs. I mean, as far as valuation goes, we're stretched here. So some reevaluating is perhaps what we're seeing from those that are taking on a more pessimistic approach, but still, I mean, over half the analysts that cover this name upgraded shares today and raised those price targets.
So many big things about this earnings report, Jenny, but some of the subtle ones might be what is really fueling this for the future, which is
So Uber, I set an alert here on the 1 hour time frame, right in here where the money is, right in the middle of the money off the 65. I had the 65 alert set, so if it pulled back and failed to 50 on the 1 hour time frame, that this could be maybe a good shot to take the trade. I can see I'm 2 hours too late of jumping into it. But that's right where all the money is.
Contract. It is expensive. So that's money that I think Netflix is just saying, hey, we're dominating, we're positioning ourselves for growth, and we don't necessarily need to spend billions and billions of dollars to gain access to these various sports franchises because we are already dominating. And I can understand that. I've always said that was something that was lacking of Netflix because every single NFL season I sign up for one of these various services that can give me the NFL. But hey, I mean, Netflix has a retention of pool of customers that is so substantial, it doesn't really matter if there's these like flex customers like myself because they have so many customers that are sticking with their service. I mean, millions being added this quarter is impressive, especially when you look at names like Disney, Warner Brothers, Paramount, who've all seen subscriber declines. So Netflix has figured it out. I think that they'll continue to see some trickle benefit from those that were kicked off the plans they were stealing from their parents. I can speak to my own personal experience. I was kicked off my dad's like 8 months ago, and last night I finally subscribed once again to Netflix. So I can respect this near 13% move to the upside today.
Yeah, I mean, you know, it's all about subscriber ads. Those were 45% above what the expectation.
the NBA is an interesting story going forward. What do Michael Jordan and Mark Cuban have in common? They both sold NBA franchises this year.
Yeah. Maybe the top there.
Ding!
Yeah. Lofty valuations there also, right. Great breakdown here of the Netflix earnings, Jenny. Appreciate it. That's Jenny Horn, markets correspondent here, breaking it down. But now let's bring in Nick Dideracos, Managing Director of Market and Investment Risk at Charles Schwab. Nick, I wanted to get your take. It seems like a Goldilocks type of environment here for equities. People kind of pushing aside any uncertainty. The VIX, below the 13 level. So all is well, right?
Yeah.
I think the other thing those two guys, Michael Jordan and Mark Cuban, have in common, guys, is they probably have a Netflix account. They're probably paying for Netflix. So maybe not. I don't know.
Maybe even more than one.
Maybe even more than one. Maybe they're paying for their kids like you are, Kev. I don't know. It's pretty interesting. I was reading as the numbers came out this morning, PMI, and the headline was "Economy revs up in early 24, soft landing in sight." Right? I mean, this is sort of that moment where we've been talking for a bit, where good data. These aren't huge numbers today, right? The PMIs aren't, the flash PMI is not sort of moving markets like PCE will on Friday, but. The economy is strong, and there's this real divergence between the U.S. and the rest of the world right now. You saw
because we printed $6 trillion, you dingbats.
Germany, in some ways, crazy inflation there, still relatively speaking, and a sluggish economy. The rest of Europe sort of still dealing with a war. You guys already talked a bit about China.
China.
Incredible how much they're throwing everything at the economy, including the kitchen sink. It feels like to try to get it kick-started. And it's just not happening in the same way. And then here's the U.S. just sort of humming along, and you've got to be asking yourself: is something going to derail this issue? Is the election cycle going to be an issue? What are the unknown unknowns that could derail this? But right now, it feels, to your point, Tom, like it's just sort of humming along, and the soft landing feels, pretty much like the base case. I will say that. The banks made it through this, through this earnings, kind of cycle, but the yield curve's still inverted, and you are seeing that weigh on, on all the financials. And typically, the yield curve is an excellent predictor of a recession. Maybe it's a slight technical recession where we see 2 quarters of, 0 to slightly negative growth, and then we go back up. But right now, it sure feels like all these metrics that are coming in that are in the review mirror of the last month or quarter look really strong, and hard to argue with that, I think, going forward. And you're seeing that certainly priced in equities here across the board.
Think about this, Tom, real quick. What Nick just said: economy revving up for a soft landing. How is that congruous? The market doesn't rev up to a soft landing. Yeah.
Well,
Interesting.
That's we always talk about the market looking forward, and I think that's what people have to expect here. That they do expect that soft landing, that earnings are going to come in at least in line. According to FactSet, about just over 15% of the S&P 500 companies have reported earnings. About a 70, just below 70% beat rate on that. That's below the 5-year average of about 74. Maybe some of those skewed due to the pandemic, Kevin. But that sweet spot that equities are in right now, getting led by tech. I mean, they're still lagging. The Dow Industrials, Russell, still lagging at this point. So, what's the concern here for investors when you've got the RSI, relative strength indexes, and the S&P 500, NASDAQ 100 above the 70 level, signaling overbought?
I'll tell you my concern right now when I look at the market as a whole.
Yeah.
Why is the whole market rallying on Netflix's earnings?
I said this to Oliver this morning.
Netflix should be out on an island by itself. It's a one-off event.
Right.
The rest of the market isn't doing as well. But Nvidia's up $20 on Netflix earnings. Hold on a minute.
New all-time highs for Nvidia once again above 619 at this point. But Nick, Kevin brings up a good point here. If you look at Texas Instruments, that stock's down over 2%. It was down over 5% earlier in the session. I mean, that to me is a bigger barometer of the overall economy because they're involved in so many silos, whether it's automotive, industrial, the tech side of it, the chip space. They had disappointing, and their guidance was weaker than expected. But then Netflix comes, trades the day on that side of it, right?
Liz Ann Saunders had a really neat take on this yesterday in the comment she made about the top is expensive and priced as such with the PE ratios, but they're the ones that are producing the really high earnings results, right? And that is absolutely, to Kevin's point, driving these indices in a way that's outsized. And you have to ask yourself, are you better off just owning these 5 stocks or 7 stocks and then not being dragged down by the rest, or at some point is that going to flip? And if one of these names misses, we get Tesla, coming up soon. Like, how much is that going to matter? Is the whole market going to sell off if Tesla's down, 5% tomorrow? I don't know. We'll see. But it sure feels like, I hate to say the tail wagging the dog because it's not really the right scenario. These are, the dog wagging the tail because of the size of it, right? They're huge, relatively speaking, from a market weight perspective, and that really matters. And like we're always saying, if there's a misstep in any one of these names, that ultimately could trigger something in the economy. So we have to be careful of like the macro view that I kind of started off with and mentioned versus, we really are up because these names are up. If you look, below the surface, there's a lot of revenue misses out there. Right? So the earnings piece that you had earlier, Tom, just not as robust in terms of beats from the majority of companies. Right? Not everybody is the Magnificent Seven. When you look at, like you said, Texas Instruments, the revenue is an issue. And the companies that are beating EPS are doing so through cost cutting and not through growth, and the revenues are down. So you're seeing that theme play out pretty dramatically. That's where I think, we could see, maybe it's not as soft and wonderful of a landing as we think. Maybe there is somewhat of a recession. It could be shallow, sure, but like you're seeing that revenue decline, and inflation is still going up, right? It's not going up at the same rate, but things are more expensive and revenues are coming down. That's not a good combination for the majority of companies out there, but it's all being masked by sort of the very top.
Yeah, you mentioned China throwing everything but the kitchen sink at their economy.
The list is long here. I've got a whole page.
Liquidity that their banks are required to hold, their reserves getting cut by 50 basis points at the beginning of February. That earlier this year, Kevin, or this week, they stated that they're going to provide another $278 billion to kind of shore up maybe some of their stocks. They're talking about banning short sales by some of the funds over there. They're doing everything. What's the divergence caused here by the manufacturing engine of the globe is nearing recession.
It's lost $6 trillion in its stock market.
We seem to be fine, and if you look at the PMI data there that we had today, manufacturing actually went above 50 level, so expansionary, right?
Yeah, I mean the list of things that the Chinese government is throwing at their market first stock market, now banking. Jack Ma and Joe Tsai buying some Baba stock.
Yeah.
I mean, I think it's all hands on deck there in China to try to keep that economy going. So I think there's a lot of talking points there. Go ahead.
Well, there is. I think real estate is a main driver probably out in China. And the real estate structure in China is interesting. Tom, you mentioned something just kind of in passing that I think is really important. The bank reserves being cut. I'm not, doomsday, risk guy here, but if you look at sort of the real estate problems that are going on there, we don't have full transparency. It's not like our data here where we can kind of just go and trust every penny of it. But you look at the real estate cycle going on and how there is an investment in China based in like the local level, the government and the local government level, and now they're trying to bail that out. Banks are also regionalized but largely controlled by the government. If you end up in that boat where they're not holding those reserves, real estate continues to decline, those loans are riskier. Yeah, the government has more hands on sort of the money supply there than we do here, but it is a scary thing to think about, kind of a banking crisis there. And I think that's something where we're fairly insulated as a country, but to your point, if the manufacturing gets hurt because of that, there is a knock-on effect that could ultimately bleed over into our economy and potentially pushing inflation back up. But I think in a worst case scenario, causing a bit more of a banking crisis, which is not what we want to hear.
Yeah, definitely. We'll continue to watch that story. It's helping their markets today, but they've thrown stuff at the wall over there before over the last year. It hasn't helped at all. We'll continue to watch that story. But now let's take a quick break. When we come back, we're going to kick off our earnings show here. Talk IBM. This stock's hitting 9-year highs today. Amazing. Legacy tech company reporting earnings after the close. Fast Market's coming right back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
bias there at times. The bar is very, very high. You know, we sort of talk about like, you know, they're the old dog, but you know, just to hit the numbers real quickly, expected revenue looks like $3.78. I'm sorry, EPS, and revenue $15.7 billion. So it's not like they don't make money, right? They're an extremely profitable business, a stable business.
Oh yeah,
Right? You guys mentioned some price action.
IBM.
They haven't hit a new all-time high in like 13 years or something like that, 2000 I think. So they've been on sort of the stock price sort of decline for a long time. A bit of a bid here recently based on that AI trend, but you just have to ask yourself, like, can they hit that bar, given the fact that that they're not that sort of front leader, they're not the ones kind of doing all that work. NVIDIA gets so much of the press there. Like, is this just buoyed because of that, or are they really going to make a meaningful impact? And like, companies reinvent themselves, right? I mean, there's magnificent examples of that out there. They are just churning out money, so they have theoretically the income to have these side projects do really, really well internally, right? And that's kind of the Google model, right? You have the one driver. The problem to me with IBM is it's a bit scattered, and there's a lot of revenue drivers, but no one sort of big thing. So I think we're going to have to keep a close eye on the costs of these programs relative to what the upshot is of their new kind of reinvigorated, I'll call it, engagement in the AI space. So I don't think it's really going to be a revenue sort of if they miss revenue huge, obviously I don't think it's really a revenue story. I think it's going to be more of a EPS story relative and how the costs here affect them based on what their sort of new bets are.
Yep, Nick, we got option market pricing about a just over $7 move either way. What's the example trade?
Yeah, so it's about in the 57th, I think was the number, IB percentile, guys. So a little bit elevated in the front week options here, about a 70 vol there. And you go out to next week's options, 9 days out, it's only in the 30s, which is to be expected, right, given the earnings event. So I went with a 2-day essentially iron condor here. Skewed a little bit kind of in both ways, meaning strike width and a little bit of a bias towards the downside in terms of the strike positioning based on the expected move. So I went 177.50, 182.50 call spread paired up with a 162.5, 165.
That's a broken one.
Put spread. So about $1.60 credit. When you look at that, you have a $5 wide spread on the one side and only a $2.50 spread on the other. So max loss obviously much lower to the downside because that strike width is cut in half. But really the risk here is to the upside in this trade, guys. But it is a neutral strategy. So what I've done is just kind of paired with a little bit of a directional bias here where I want to take more risk. There's risk on both sides.
That's an iron condor.
Downside and taking a little bit more exposure to juice that income on the upside.
Yep, let's break this one down. January 26th weekly cycle. Selling the 177.5 strike call, buying the 182.5 strike call. There's that short $5 wide call vertical. Selling the 165 put, buying the 162.5 put. Collecting roughly about $1.60 credit. Might be a dime lower than that. But if you collect $1.60 credit, that's what you can make. Break evens on this one, Kev. 163.40 on the downside, 179.10 on the upside. You've got about $340 in risk above 182.5. And on the downside, you've only got about $90 in risk, and that's below 162.5. So he skewed a little bit.
Yeah, you can do almost 8.5 short deltas, right? That's because a couple things. It's because the upside is $5 wide versus the downside put vertical only 2.5. It looks like by the diagram that the short call option is closer to at the money. So this is a kind of a bearish play on an iron condor. So less risk on the downside, a little more on the upside. $5 versus 2.5. So yeah, if you get $1.60 credit, you're only talking about 90 cents risk on the downside. So collecting about almost $21 a day in theta. But the interesting thing on this for an iron condor, 8.5 short deltas.
8.5 short deltas on that. Implied volatility elevated on this one. IV percentile rank about 56%. So even with it at 9-year highs hitting today, the bar is set high on this one. Now you do have some assignment risk on those short options on the 165 and the 177.5, and that's over the next couple of days until Friday's expiration. So keep that in mind also. But a good look at a skewed neutral strategy, but leaning a little bit less risk to the downside. All right, thanks to Nick Theodorakis, Managing Director of Market and Investment Risk at Charles Schwab, joining us, breaking down markets. But coming up after the break, we're going to bring in Lightfolio. Andy Swan's going to give us some details on consumer sentiment data around Tesla. This company's been under pressure so far this year, had a good 2023. We'll get the data from him when we come back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made.
Quiet in here today. Such a wonderful day and it's quiet.
Contracting of margins, maybe some demand issues. They hit their target, over 1.8 million cars delivered last year, but Tesla's been under the gun here. Do you have data supporting maybe this pullback, or is the market getting this wrong?
Yeah, when I think about Tesla, I've been thinking about Tesla long term since about 2016 or 2017. Pretty bullish on it throughout, continue to be bullish on it. I think that the near-term challenges to Tesla are very real. Some of it is just simply the law of large numbers. It's really difficult to continue to grow at the pace that Tesla has grown over the last decade once you hit these types of levels. I also think that, as Wall Street's focus shifts to profitability, that's always a tough transition period for any company.
Oh, God.
But overall, Lightfolio data, very strong for Tesla, especially when you just zoom out. Web traffic, so people going to Tesla.com, which has been a very good indicator of purchase plans, up nearly 50% year over year. I think this is directly related to the pricing strategy of the company. The prices have gone down numerous times over the past year. And, we continue to see increased demand for Tesla cars, and I guess you could throw the word truck in there now that the Cybertruck is on its way. So overall, I think Tesla is absolutely in the driver's seat. I think it's time to take them out of the EV bucket and put them simply in the automotive manufacturer bucket. This is a company that's competing with all car manufacturers now. The race to be best in EV is completely over.
Andy, I'm gonna map out a scenario for you. You tell me where I'm dead wrong in this scenario. Where I think a lot of people, a lot of investors, a lot of the street people are getting Tesla dead wrong. And that is the EV story that we see, right? Where Hertz is selling 20,000 cars and Ford is cutting production on EV trucks. Some of that's coming. It's infrastructure lagging, right? Some of the companies getting ahead of themselves. It's the pressure that Tesla's putting on these regular car companies because they lowered the margins. You know, it's incredible to me. The headline is, oh, Tesla's margins are coming down. They're doing that on purpose. They're choking the life out of these other EV makers trying to get profitable. And now Elon Musk is talking about a cheaper, a less expensive production model here. Isn't the street just getting it wrong? It's not that they're avoiding EVs. When someone buys an EV, they buy a Tesla, not the others.
Yeah, exactly right. I think the whole EV story, and especially Ford slowing down production, other car companies slowing down production of EVs, is, I think you're right. It's more of a story of just how strong Tesla's dominance is. And when Tesla rolls out a $25,000 or $30,000 vehicle, I don't think that the world's really prepared for what that could mean for Tesla. I think that Wall Street does get it wrong when they focus on profit margins in 2024. The fact that this company's profitable at all is something Wall Street thought never could happen. The fact that they're voluntarily giving up margin in order to increase their market dominance, not just of the EV space, but of the automotive space, to me speaks volumes. And, I have to throw in there, I really think that when you look 4 or 5 years down the road, it's very possible that the profit margins on the initial sale of a vehicle are a minority of Tesla's overall profits from having all of these cars.
Man, I'm missing some good trades. Here's another one.
Yeah, we had news yesterday that
Google
Apple is pulling back a couple years of putting out a car.
They probably can't make them profitable.
Well, nobody can. That's why the OEMs
Tesla
are pulling
can.
back on their production. Maybe some demand issues because they're high price. But Andy, looking ahead,
This guy comes out earlier and says that General Motors and Ford are putting out top quality cars. That ain't nothing what I heard. I haven't heard anything like that. Elon's the only one that's putting out a good, halfway decent car right now. You got FSR at 85 cents. You got Nikola. You got that other one that only put out 25,000. It's like they're holding a grudge match against Tesla. I think they're way wrong about this. I mean, I said it in the video. I said, this is what I said. I said, are we at the point where everybody that's going to buy a car for a showpiece to say, I got a Tesla, is it all over with? I said, that could be the only deterrent. And I said that in my latest video a couple days ago into earnings. But I can sit here and argue with these guys about this big time.
That's in my opinion.
so I'm guessing your earnings score is above that 20 level as far as positivity.
Yeah. We're pretty bullish going into this one. I think that there's all kinds of reasons this could get tripped up. I think that the narratives have definitely shifted against Tesla, so you got to be cautious and use a risk-defined strategy. But the stock's
It's always
back,
been negative.
and every Likefolio data point suggests that the company should.
I got to argue again. It's always, we heard CNBC for 2 years on here in this room. 3 years, ever since, every day. They never have anything to good. A couple weeks ago, it was about drugs. Last week, it was about him joining the board, wanting 27% to have some say in his car, or he'd go elsewhere. They're calling it a car company. It's a tech company. You can't compare it to General Motors or Ford or any of them. None of them are successful. Look at FSR. It's at 85 cents. This was their dream baby. We got listed LCID. Taking a beating. And this was the dream machine, man. They said this is gonna go to 200%. It were because they can't build the good cars. Only one that can do it is Tesla. And they're mad at Tesla because they're not unionized. If they were unionized, oh my God, you would never hear the end of it. How great they are. I can sit here and just argue. I mean, I run this thing from 185 to 2,200 bucks. And they were bashing it then. Every day. They had nothing good to say about Tesla back when it oh my gosh, it's at 300, it's at 400, it's at 600, it's at 800. This can't make any sense. It's at 1,500. It's gone to $2,000. Oh my God. Kathy Woods puts a $7,500 price tag on it. I'm saying, now you're nuts. I mean, it's no better for the environment than gas combustion engines. It offers slave labor in Africa to young children digging cobalt to build these batteries. I mean, sugar is bad for you, but we still eat it. It's sediment. I've been following Tesla from day one. Every day I've traded it almost religiously. But here lately, I just can't take it. They're just... I mean, I got into it with a guy the other day. I said, did you even watch my video? What did I say? Do you remember what I said, guy? This is what I said. I said, we're bearish as long as we stay below the 200. We become very bullish if we break above the 200. And he thought I was pumping the stock, leading people in the wrong direction. For the last 3 quarters, we've hovered at this $200 level. So it's important. It is. I mean, with the sediment the way it is, all the EV cars are just crashed. Nile. But that's China. Nile was at 50, 60 bucks 3 years ago. Now it's down to $6.11. You got XP, which is my favorite one out of China. I'd run this all the way up. It was at 55. Now we're hovering down here at a quad bottom. And this is Biden. See, once the government gets involved in something, it just destroys it. It's true. I mean, with everything I've seen, solar panels, government got involved in it. $600 million during the Obama years through Solyndra was stolen by politicians. Their families run that business. Nancy Pelosi. And then you got Brandon's son, Hunter. Look what he's done. He made over $50 million and blew it all on cocaine and sluts. I don't know when to buy this thing. I really don't. I'm going to keep trading Tesla because it's just not a car company. It's outer space, it's solar, it's energy packs, it's robots, it's AI. It's just not a car company. Not like General Motors or Ford or Volkswagen or any of them others, Nile. They're all car companies. It makes me want to go out and buy one, but I just don't have the spot. I'm gonna have to buy a house to buy a car, to buy an EV car. But that's my rant. These guys are at it too. I mean, they're kind of bullish on it, but they don't want to admit it. But the whole sector is just beat up.
December into current levels, 800 points. And look at the lows that we saw back in October of 2022. So we're basically 1,500 points off those lows. We saw the Dow today up to 38,064. The NASDAQ topped out at 17,644. There's a look at that longer-term bull trend that's been in place. And Tom, this is impressive. I mean, this comes in its rate. You got the 10-year, which is holding up at 4.14%. I think a lot of focus here on the positive earnings. Investors have been dialed in on some of the better-than-expected eco data that we've seen here in the U.S., and we're even seeing the dollar come off today. So there's multiple catalysts that are adding to this rally that we've seen here. Again, new all-time highs here and continuation of the pattern that we haven't seen, that's for sure.
Yeah, Benny, when you look at, yields have come back. They were lower earlier. Now they're relatively flat. That 10-year just below 4.15%. That didn't cause any consternation for equities, but the dollar definitely is today after hitting 6-week highs yesterday.
Yeah, and then getting swiftly rejected. 103.60 yesterday down to 102.55 today, Tom. A big move lower. Now, if you remember, basically since last year, we've come off that 107 high, September, October of last year. So the dollar's kind of in the middle of the range that it established last year. But I do want to point to the Canadian dollar, which has seen some intraday volatility and probably more behind some of the price activity we've seen in the U.S. dollar after the Bank of Canada left rates unchanged at 5% and really kind of pushing back on some of those inflation expectations. They say it averaging 3.9 in 2023, 2.8 this year, and 2.2 in 2025. They say inflation remains too high with persistent strength in shelter and food prices. Tomorrow we'll get to hear from Christine Lagarde at the ECB, so a busy week for central bankers as we all gear up for that Fed meeting next week.
All right, can't stop it. All right, thanks to Ben Lichtenstein, host of the Future Show here on the network, breaking down markets for us. But now let's bring in George Tillis, senior markets correspondent here. George, we're talking maybe an overlooked name in the tech space. We talk about it probably once a quarter into earnings, but this is a stock, ServiceNow, hitting all-time highs, and this is all based on AI and companies that are able to monetize it. We talked about IBM earlier in the show. Maybe they're going to be. Is ServiceNow in that realm where, hey, it's justified hitting all-time highs because of the opportunity they have?
Yeah, I think there's a tremendous amount of opportunity, especially with ServiceNow technology. It's all about automating workflows from an enterprise resource management, HR management standpoint. And effectively, their software is designed to structure and automate functions from an enterprise standpoint. So integrating artificial intelligence is a natural next step for the company. That's where essentially they have generative AI prospects going forward and enhances productivity. And at the end of the day, enhances return on equity for investors. Now, I mean, this is a very large company. About 85% of the Fortune 500 companies utilize ServiceNow's software technology and services. but they also include system security, software maintenance support, and of course operations management support as well. So their subscription services are also on a recurring basis very high margin elements to their bottom line, which effectively is close to 20%, net profit margins, which is
We got
actually
a
close to some of the larger
Walmart.
aggregate players out there like the Magnificent.
We got Walmart right here at a triple bottom, 1, 2, 3 bus on a 24-hour period. Walmart. Let's go to Walmart. Fill up our shopping cart. Pinball, bird seed, all the things you need. Let's go to Walmart now. Walmart. Where's my washboard? Where's my guitar? I'll sing the Walmart song. Let's go to Walmart. Fill up our shopping carts. Pinball, bird seeds, and all the things you need. Let's go to Walmart now. Let's go to Walmart now. Ladies and gentlemen, today we have a live performance from Washboardjim. He's seen and noticed a falling wedge on a 1-2 freebie. If we break the 9, we will move up. So Mike had Walmart, the 240 strike, I think, a 162.50 call. 162.50 call. If it goes below 162. I don't want to take all this away from Michael. So we'll give him the credit. Let me look at the call. We love Walmart. I used to work at Walmart. I used to inventory Walmart. I traveled around the whole country and inventoried Walmarts. You've probably seen me in there with a 10-key calculator. I was a crew leader for Walmart. I worked in electronics at Walmart. I worked in the sporting goods at Walmart. I used to, Sam Walton met me at Walmart one time. He come up to me and said, oh, I got a Walmart store. I got 2 of them. Hey, son, could you show me where the shampoo is? Or could you lead me to the right direction? I said, I was inventorying. I said, yes, sir. I'll walk you right over there. It was twice. I have 2 health and beauty aid. So later that day, the boss come up to me and he said, Jim, you were perfect today. Do you know that you spoke to Sam Walton? And I said, are you kidding me? Yeah, he's the gentleman that asked where the shampoo was. He was very, 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 he really liked that, he said. And then one time I was in there in health and beauty aids, and this old man comes up to me and he says, son, could you tell me where the lava is? I said, lava? Yeah, lava soap. I said, I'll walk you right over there. You old, crippled old man. I got to get in this call. He says, damn, 65 cents? I remember paying $0.25 for this. I just thought, I never could get that out of my mind. I wanted to ask him, when's the last time you bought a bar of soap? And then I got fired from Walmart. This chick wanted my job. So I sold this guy a camera. He looked at me and says, does that battery go with the camera? I see you're taking it out of there. And I said, well, yeah, I guess it does go with the camera. And it's like a $20 battery. And so I went to the shrink, which is shrink is where you write off things. And I wrote down the battery, and I said, you know, I'm going to write this off. And the next day, the boss comes up to me, or about 3 or 4 days later, the lady from Arkansas come up, and they fired my ass. And it broke my heart. I said, are you serious? I did everything I was supposed to. I even asked the management. Told them what happened. They said, write it off on the shrink, and I did. And you come up here and you fire me for this? And then later I found out it was the bitch that wanted my job. I'm glad it happened, because then I went to college and got my GED. Got a associate's degree in business management and end up owning a picture frame shop. SPX is at 710 now. We're breaking out. Still in this trade. Got a couple more contracts. The 4,900 strike is now in the money. Ooh, what are you doing with a spy put? Not on a day like today. Now, what chart did I have that Walmart on? Damn, I didn't get the option. That don't sound good. I guess it might have been the trash. Fuck, what is that? February 16. The 165 strike for a swing. Get 10, 5, in case it dips. Dadgummit. See what happens when I go telling stories? Nah, I could have had that at 105. What was the one Mike was looking at? How to do this?
Day 7 days a week on Schwab.
Oh, my coffee. I'm just going to go make me some coffee. So one thing I was real good at when I was with Vegas, she'd call out 50, 60 trades a day, and just was too much for me. So I'd sit there, all these calls that were, I mean, we'd have like 200 calls a day in this room, and I just got to where I couldn't take it. But everybody would make a call, I'd go back and I'd wait. I'd set it up, set where I thought would be support at, and then I'd take the trade. I never took any of the calls. I always waited for the right time. And my slogan back then was buy at support and sell at resistance. Now it's the sneaky snake, buying at the lowest possible place I could find the trade. So here's an example. I'm going to show you. I called this this Walmart out with this snake here. We had a gap up. I didn't like that there. So I take and draw this out. I take it from the first breaking point to the second, and then just run it on down. We just had one candle break out here, barely. So it didn't break out yet. And then all of a sudden it breaks out. So now it's pulling back. So we got a head and shoulders right here. It's got to stop right here, right here. This is where it's going to go back up and break out to the 200. Watch. So there's the head and shoulders. Here's your left shoulder, your head, break out, pull back to the right shoulder. It can come back and hit the trend line and be a double bottom, but if it bounces off the 21 here and then breaks out to the upside, the exit idea would be right at 162 somewhere, that 200 SMA, because we railed up 200 SMA all the way up here with a 1S, 2S, and a 3B. 1, 2, 3, knife. Inverse head and shoulders, boing. So snake breakout, pullback, boom. Now, who wants to bet against me? That's what I thought. That's what I thought. What's going on there? Wow. Uh-oh. I didn't want to save that. Do look at my option here. "19 years of learning the market."
Is how long will we continue to see those that weren't paying but then had to pay, that benefit of net ads continue now going forward? I mean, I think it's been amazing because other closely related peers like Disney's just continuing to lose subscribers, but I completely agree, Alex. I think there's reason to be excited that euphorism is seen today, but how long does that last, I think is the big question. But we have another streaming focus, or not streaming focus, but streaming exposed stock is a better way to put it. That's Amazon with its own separate piece of news today. Now, we did see Morgan Stanley naming it a top pick into earnings. Of course, it's been a minute since we've deemed any stock a top pick according to the analysts. So they do see about 13%
Snake
upside to their
breakout,
EBIT,
higher
30%
low.
upside to first quarter consensus figures for EBIT. They also do see this as a result of the improving retail efficiency and profitability. Their scaling ad business and profitable low to mid-teens AWS top line growth, which has led to them revising their estimates to the upside. So Amazon does report its own results on February 1st after the closing bell. Next week, we get a ton of these heavy hitters, so we'll be talking about them, I'm sure, very heavily. But Amazon, with its video, its Prime Video aspect, of course, makes it not comparable to Netflix, but it fits the streaming conversation, especially because they're also going to start having ads, which I think is genius because you typically don't pay for Prime Video. It's just a nice add-on.
Well, and they got their exposure to the NFL, which I think is pretty critical. If you weren't a Prime subscriber, maybe you became one because you wanted to watch that standalone Thursday night football game. So there's reasons that the Prime Video does bring value. But I was just thinking to this to myself, okay, if we think of Netflix as sort of this king, we've always kind of positioned Amazon as like, okay, if times really got tough, you have to cancel everything. You kind of subscribe to Amazon for uses more of their traditional Prime e-commerce reasons, and you get Prime Video. However, the Netflix and other streamers of allowing for this ad-supported lower price tier, it's defensive as well, because you could always trade down to that before completely canceling it. So not surprised to see that Amazon's embedding this as well. I think the ad dollars that it can potentially bring to the table are huge, particularly through the Thursday Night Football offering. So you start looking at what Amazon brings to the table as a streamer, it's impressive. And then you think about what does streaming really mean to its business? So very little, it's even more impressive.
It is impressive, and I will say it was also.
What is that girl wearing?
They've done a great job with Thursday Night Football. Like from a company that does not market itself as a streamer, not even.
What are you doing
close,
wearing
I think they've
lingerie?
done such a good job with the broadcasting of that.
Now, honey, I would appreciate it if you dressed appropriately.
Recently, I have to imagine they saw some benefit when they had the Chiefs game. It was like 2 weeks ago, and I mean, everyone I knew signed up for Peacock to watch that playoff game. I thought that was brilliant on their half. But
It was just
this
wonderful.
company has some more issues when you look at what we can expect from their earnings now, which are due out Thursday morning. We are expecting revenue to come in around $30.4 billion. That would mark a slight increase sequentially and a slight decline year over year of around 30 bips. The company's earnings per share are expected to be relatively disappointing over the last year-over-year basis. But one thing to note, they did have around 26 earnings provisions to the upside in the last 90 days, which could also mean that the street is now seeing more of a chance of a beat, perhaps. But in terms of margins, the company's bottom line has improved once we did see some significant impairment charges they were dealing with now go away. Around $8.5 billion in goodwill and long-lived asset impairments, which did, hit the company pretty hard, but since we've seen their top line improve. So that's been a good thing to shake off. Performance of Peacock is also going to be worth noting, as that is a part of their business that they're trying to grow, but it's not yet profitable. And also, this company's debt levels have been somewhat of an issue. It's improved.
Comcast, the best CNBC. Yeah, that's what they're doing.
Media, this transition to streaming and Peacock, the platform, is almost entirely defensive. They're losing eyeballs to Netflix. They're losing eyeballs to Amazon Prime Video and Apple TV Plus and Hulu and all these other choices that you could have. Before it was, ABC.
I'll tell you why they're losing it. Because they're woke.
Sort of their spin-off streaming version of that. But what I will say is, I used to subscribe to like all of these, Jenny, right? And then I just woke up one day and was like, I don't even watch any of them. So I canceled them all. And then I was like, if I ever need them, I'll log.
Almost every company that I considered woke, I made a lot of money in. That's from Nike, Target, Budweiser, Disney, and there was one more. And now it's Boeing. It's what happens when you have the progressive liberals running everything. From law enforcement, the DOJ to, yes, I said it, SEC, DOJ, the border. Almost every one of them. So any increment that I think that they're entering wokeism, BlackRock, I'm going to be buying puts. I've nailed every one of them. I used to do a bunch of videos on them, and then they kind of hit the bottoms. Some of them did. Disney's going to be moving up soon. What was I doing here? AMD. Oh, yeah. Mike started using this deviation channel, so I went ahead and set one up. Some guy was talking the other day, how do you find a resistance level once you broke the all-time highs? You set it up by using the deviation. I never had a way of finding out how to find the next resistance. I'm blind. You know, I'm blinded by the light. I didn't know what I can find them when they pull back. I can find them real fast and real easy generally, but on the way up, once they break that 52 all-time high or whatever high it is, and enter new territory, I was lost. So I heard this guy talking the other day about why he uses the, you know, how do you look for the new resistance level once you break an all-time high? Use the deviation. So you set it up. If you have Ameritrade, type in standard, STANDARD, and you get standard deviation. So you open it up, and you got two of them in here. You change this to a 2, the deviations, you change that to a 2, and then go ahead and hit OK. And then on the other one, you just leave it alone. It's standard deviation of 1. Maybe you could put 3 in there. You hit OK. Then you got your deviation channels. You got your pivot point. You got your first deviation, then your second. You got your pivot point. These are called linear channels. I used to have a chart set up called linear channel. Where is it? I gotta go through here and really clean this up. I got so many different strategies. I got the sandwich pattern. I know it's in here somewhere. There it is. It's the same thing, it's just a linear channel. And that's another way that I used to find resistance levels. At least, yeah, with new highs. You type in LINEAR, regular channel of 100, and you can change it however you want to. You got your middle band, upper and lower band. It's set now as the price closes. I like this one better though. There's your linear channel right here. These are yearly candlesticks. So if you go like to 180 day, we broke that linear channel. So I'd have to pull up a different time frame. I mean, this is overextended. It's what it's telling us. But the momentum behind these stocks, just AI, I mean, you can't stop it. It's the best time to be trading, to buy any kind of dip.
as always, is Rick Ducat, our chart master. We got to start things off with Netflix, which is making
Let's see if he
a
charts it like I
banner move to
did.
the upside today.
What a day. I mean, this is a huge breakout to the upside here. And we can see that when we start looking at our chart here, it took us above an important level. This level right here, this red line near 495, that was our best close. And then we had trouble making our way above that point. We did make some intraday movement.
That's an ascending triangle.
But we didn't close above it again for the duration of the time that we're looking at here until today. An explosive move to the upside here, and one that's happening on heavy volume. Netflix typically sees some pretty heavy trading activity around these earnings announcements. Today was no exception, and yesterday as well too. We saw volume spikes. And by that I mean volume that's at least 50% more than the 50-day simple moving average of volume. So we saw volumes that were far exceeding that level here. So there's some conviction behind this move to the upside. If we were seeing light volume on such a big move up, it might be more concerning here. But we're breaking through resistance. Moving averages still trending up. Prices far above all three of them. The moving averages continue to diverge. The trend
See, we hit my target today.
So now as far as momentum goes, I mean, I have to imagine momentum is pretty positive today, just given the fact that we've broken out of like every channel we were previously in.
Yeah, I mean, noteworthy resistance on the...
I'll show you how I got this in a second.
Already. RSI kind of almost was the reverse shape here. If you look at price, we almost had an ascending triangle type shape here with our upward slope.
I got it right.
Our horizontal resistance in red there, and it was a small triangle type shape here. And I'm just trying to describe the shape of the price action. I'm not saying this meets all the criteria exactly for the ascending triangle type pattern. Just trying to talk about the general.
There's divergence.
If you look at RSI, we had the reverse shape. We had more of a descending triangle type shape here, going along these peaks.
When the price action goes up, the volume goes down.
A little bit heading into this earnings announcement. Really not uncommon. That's more typical, I would say, for momentum to wane a little bit when you have a large event risk type situation here. But we managed to stay and here. We dipped below it a couple times, but we managed to make our way back up. Once again, rocketing above that trend line that we established here.
Pull up the weekly. Pull up the weekly.
Relative highs. Things are looking pretty strong from the momentum standpoint.
So now as far as some support and resistance goes, again, because we've broken out of the most recent
Pull up the weekly.
to sort of reestablish things here.
One thing that I like to do typically is to try to use a trend line, extrapolated it, duplicated it, and put it across the highs. That can give you a projection. Sometimes, in this case, it was blown out of the water. We didn't even come close to stopping at that point.
That's what I did.
We have to use a different tool. Standard deviation channels can potentially
standard deviation. See,
take our blue linear regression line, our line of best fit based on closing prices. We take one standard deviation to the upside, two standard deviations to the upside, and the same to the downside to create these channels here. So
these guys say their exact same shit I'm saying. Now, who in here is the mole? Just stand up and say it. It's the newest kid on the block. Ricky? Is it you? I want to know who the mole is. No, Subway. Subway doesn't ever say much. I bet you it's Subway. You work for Schwab?
You might expect to find some resistance.
Yeah, I think really well, of course, hanging on to a nice 12.4% gain here. I keep waiting for things to fade, but they haven't really.
It's so funny, man.
Alex,
He didn't pull up the weekly.
I'm feeling we're not even in FOMO yet, but it feels like that. So
it's like a FOMO bonus, right?
Total.
I'm mad at him. He didn't pull up the weekly time frame. Now, if he would have pulled up the weekly, this is what you got to do. I hate to step on his parade, but you pull up the weekly, and I talked about this. I just got through talking about the deviation channel, how to look for new highs, and he had to do that because he broke his trend line, but he didn't go far enough back. You go far enough back, we already had a previous high. So this is called a resistance. Head and shoulders, shoulder line resistance. The thing's going to start to pull back now, maybe come back to the top of that channel that he was talking about. As far as I'm done with this trade. But Head and Shoulders, that shoulder line becomes a resistance. And he didn't pull up the weekly. If he'd pulled up the weekly, he would have, I don't know if he would have realized it or not. Not too many people call out the shoulder line as a resistance on the Head and Shoulders, but it qualifies to be a support once you break it. A solid support. And we got another one right here, actually, but this, this previous high right here. And he got this from the yearly by drawing that up on the yearly. I wish he would have pulled up that weekly. I would have gave him an A+. AMD's going to 190. I think I said that. I'm afraid you can turn that show on now. They're talking. Oh, here he is again. I guess he was going to blabber on.
Some ground heading up into these resistance.
Chartmaster.
Yeah, and at least I've been looking at this name because I was
Descending
way more down
flag.
on this name until you walked us through some of these technicals. We are off lows by about 27%. So now into earnings, which we do get tomorrow morning. What are you looking at as far as some key price levels?
Zooming in a little bit here, let's say that things continue to decline today based on our price action today. This big red candle.
Not on him.
Close of the day. We're struggling to take out that resistance. Right here looked like a significant area to me because we have our yellow 21-day and orange 63-day exponential moving averages right in line with our volume
21 and the 63. He loves that time
They all come
frame.
together right around 43.30, so a noteworthy support area could be found there. If we do keep going even lower,
And he would use that as a day trade.
lines up with our purple 250.
I mean a swing.
Exponential moving average. That's our previous low point. So 4208.
The 21 and the 63 EMA.
The 252-day EMA, basically right on top of it. So another potentially significant area to watch. To the upside.
He trades a lot like I do.
We had some.
He really does. I mean, he just uses different moving averages.
That's another point to watch. Beyond that, the 46 level, our pink line, that was some other highs from a previous downturn rally there. So look out for those potential areas for resistance.
Yeah, and I think really well put. And two different ways to look at names that are both in somewhat of the same world, but Netflix clearly, unfortunately for Comcast, dominating at this point, but we will leave it there. Appreciate the breakdown as always, Rick Ducat, our chart master. So now trading this name, Alex, considering we are still in the downtrend, even though things have more recently, momentum's been picking up. We've seen some degree of strength week to day, ever so slightly, but leaning into a more bearish example trade just to contrast with Netflix like dominating the media world right now.
And that was really the premise as well, I think, from a logic standpoint, which is there's a limited amount of time that can be spent watching these different media sources. And if Netflix is truly dominating it, that has to be leaning on some of these other companies. Not to say that if you have Netflix, you can't also have Peacock, but you can only watch one of them at a time, pretty much. So let's look at a bear strategy here. Going into earnings, buying the 45.42 put vertical for this Friday's expiration, $1.25 debits, half the width of the $2.50 wide spread. Risk 125 to make 125. 43.75 is the break even. You find that by taking $1.25 away from 45. And that's pretty close to the current share price. So that's one of our loose guidelines combined with our 1-to-1 risk-reward ratio. It is how we talk about setting this style of trade up. Now it's directional, needs to move below 42.5 to be in the profit zone, in the max profit zone. And of course a move above 45 is where max loss takes place. This all expires at the end of the week. So looking for continued downside into Friday.
Yeah, and looking for obviously a more pure play into earnings here as we do get those results Thursday morning. But that's actually a great segue into what we have coming up next because it's time for FOMO. So we are previewing Tesla ahead of their fourth quarter results due out today after the closing bell. The name's up about 0.8% here after falling about 15% since the start of 2024.
My dad was a hard worker. He used to do side jobs installing windows.
My dad was a fisherman. We used to go fishing. One morning he said, "Son, wait in the car." So I waited in the car and he jumped the fence. He jumped in the fence to go over and fish this pond. All of a sudden the game warden pulls up, knocks on the door and says, "Son, where's your dad at?" I stood there, didn't know what to say. I said, "Well, he's on the other side of the fence." Dad comes back and says, "Don't ever do that, son. Don't ever trespass on someone else's property. You might get in trouble." My dad would take me fishing. We'd go out and have some biscuits and gravy early in the morning. We'd be sitting on the bank and I'd be out there, be the first one to have my worm in the water. And, "Damn, you already got a fish?" Every time I outfished him. And I'm a little kid. So one time we were at the ocean fishing on a dock, on a pier. Has line in the water and he was getting a bite, so he went to go grab the rod and whatever was on the other end just jerked him in the ocean. I was sitting there laughing. I was about 7, 8 years old. Nothing I could do. You know, I was just a kid. I couldn't get him out of the water. He had to swim all the way back to the shoreline. Lost his rod and reel. "Let's go home. I'm done with this." That was at Newport Beach in California. Oh, this ain't good. I got to see if this is correct. Yeah, it is. This could bring the market down. There'd be a world war if this happens.
Over the last not only month but the last several months, producing margins right now
Darn,
around
did I make coffee?
16.7% would
I was
actually
going
help
to.
their case. We are seeing right
I
now.
got to get my coffee going.
Credit
Right now, the fat cats are back.
17.8% for the fourth quarter, which would have
Johnson & Johnson's down today.
There would be a decline year over year, but it's not like things are faring as perhaps as bad as the bears in this name would make you believe, at least as far as some of these estimates. Of course, we'll have to actually get these numbers, but we also do know, as far as like a positive spin on these earnings, is that we already did get the fourth quarter numbers, and fourth quarter deliveries were better than the third. That's just a fact, because we already have gotten those numbers. They shipped around 400,000
Walmart dipped.
units in the fourth quarter, compared to around 435,000 in the third quarter, which is also being seen as a way to improve their margins, since everyone's very keen on the margins. But all in all, this name right now going into earnings, I think one thing that's a pretty solid bet is we can expect volatility. Shares have moved an average of about 10% in either direction in the last 4 earnings reports. And over that same span, the last 4 reports, we've seen shares fall 3 times, rise once. So options market's pricing in a $14 move in either direction. And again, just based on Netflix's move, not saying that's indicative of what we could see from Tesla, but things are moving here and moving with conviction.
And you just said over 10% in the last 4, and the market right now is priced again like 7.5%. So is there opportunity? That's what investors should be thinking. Is this underpriced? Is there going to potentially be bigger than expected, or is this story kind of understood as a disappointing one? I do want to set some context too, because while Tesla is way off its lows of last year, where it kind of bottomed out at the turn of 22 to 23, around 100, it's double that. This stock is about 50% off its all-time high that it set in 2021. For context, we'd be talking about Apple at like $90 a share if it was half of where it was in 2021. We'd be talking about Amazon at like 90 a share if we're talking about that. We'd be talking about Nvidia at like 175. You know, we'd be talking about Netflix at 350. Tesla is the exception in this case right now. A lot of these names, Alphabet making new all-time highs, Microsoft, Apple, Nvidia, some of these names are way above those all-time highs. Tesla's the lone Magnificent Seven name to not even be sniffing that territory right now. Now, granted, it was also the area at the time that was surging the most Nvidia-like
in 2021. So that's something to be aware of. But nonetheless, it's been disappointing for a long time now for Tesla investors, despite its really impressive 2023. From a trading standpoint, though, Jenny, I looked at something comparable to what we looked at pre-earnings in Netflix, but this is the neutral to bullish version. So that stat you had about the 10% moves and the 7.5% implied move, I think can be a little bit worrisome. So risk-defined strategies is one way to protect against those big moves. But looking at a skewed put butterfly below the market in which a trader or investor would go out to this Friday's expiration, buy the 197.5 put once, sell 2 of the 195s, and then define the risk by buying a 187.5 put one time. 50-cent credit on this. The break even be 192. Now, so the break even at 192 would be about a 10%.
Okay, I'm going to talk about Walmart.
Closer to that 10% mark, a little bit outside that market maker move as well. Anything above all these options?
A place where you might want to. So you got Walmart. You got the 9. I've done quite a few videos about the 9. We held the 9 here. We held the 9 here. We held the 9 here. Here we did not hold the 9. So I'd have to go back and see if there was any news or anything like that. But we did hold, or we did create a channel. So we got to hold the 9 here. Or we're going to fall back down and hit this for the 3rd time, and that'll be a 1, 2, 3. And that's only, well, that's a buck. That's another buck down. So if I was in shares, I'd wait till it hit that. But it needed to hold the 9. Can't read the news. This camera's in my way. Let's pull up over here. There's not much news. Tech earnings, China stimulus boost Europe stocks. What? China stimulus boost European stocks? Why eBay shares are rising today after laying off 9% of its workforce. There's nothing about Walmart today. I really thought we'd hold that support level. On the 1 hour, it'd be the 200 SMA. I'm going to go make some coffee. Goldman Sachs pulled back. Oh, that's a pretty good sell-off on Walmart. On the 90-day 1 hour, or the 1 hour time frame, I guess I'd wait for the 200 now.
By the way,
I didn't get in the trade either. I was going to.
Already, but a couple of others last week. Raymond James raised the price target to $8.50 from $7.25, maintained an outperform rating.
Yeah, and this name is one of those that even though we've seen such stellar growth, we are expecting those declines on a year-over-year basis. Yep. But I guess the street doesn't care because things are ripping today at new all-time highs. So it's not a bad day for Lam Research. We'll have to see if those numbers can meet this high bar. But we will leave it there. Great breakdown on all things Lam Research ahead of their earnings. Renita Young, senior markets correspondent for the network. Now coming up next, it's time to talk all things Uber, a stock that has been on an absolute tear over the last 12 months. But one analyst feels perhaps its run is coming to an end. Kevin Green will have more on that story for us coming up next.
young lady who was mid-30s, a couple of kids, recently went through a divorce. So she had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3.
She had a good mommy. Someone tell you where the spy is at this moment? That's not good news about Israel. It's getting real tense over there. God damn, I wish they wouldn't have voted that idiot in. I don't see how anybody could vote for that idiot. Israel is now a legitimate target for Israel missile strike, senior minister says. So they must have done something. They got some kind of intelligence. Man, I really want to buy puts. I don't know why I wasn't thinking to buy puts. I got all excited. And there's no indicator here that probably would have told me to, but the double top. I'm going to go get my coffee going, and I'll be right back.
That one-time issue that they eventually resolved. Sales are expected to come in around 19% higher at $6.74 billion. And as you mentioned, you know, the balance sheet of this business itself is actually quite sound. If you look at market capitalization, it's around $18 billion, including common and preferred equities. They have about $12 billion in cash, $8 billion in debt. So they have a lot of cash, about $16 worth of cash on the balance sheet. They could certainly pay off all that debt if they wanted to, utilizing that cash, but they may not do so. They don't necessarily have to. But at the same time, they're actually paying a pretty nice dividend for those who are looking for that income as part of their portfolio income stream at 90 cents per share.
What Tesla
Now,
doing?
going forward, the company's estimates for earnings are about $1.60. So they're paying, you know, about 60% of the earnings in dividends. But it looks like, you know, at least on a forward basis for 2024, earnings estimates are starting to incrementally improve. And I can see that
Back to
it's
even
reflected
on-
in the stock prices.
No, that
It's
ain't
been incrementally improving, especially in the past about 4 or 5 months.
Yeah, and to speak to that, we're up about 7.5% since the start of this year. So I was actually going to say, like, is all this negativity at this point priced in? But hey, it's shaken off some of that, and we're not seeing
Even on
a
Tesla.
performance that necessarily like I'm on par with say
Back to
United
even
or
on
Delta,
Tesla?
but it's coming back. So is there any thinking, George, that we now have the full impact of the fiasco of last year priced in?
I think so. I think if you just consider last year, it effectively wiped out, you know, almost a full year's worth of profitability. I mean, they expect to earn about $500 million, so that
Double
$800
bottom?
million hit was huge. So it basically wiped out over a year's worth of net income to the bottom line. So I think that's been priced in. I think the stock has been recovering slowly. As the airlines themselves have been moving steadily to the upside. We know that fuel prices also have been down. And I think one of the other things to mention here with Southwest is I know that they do a lot of hedging of their fixed forward contracts for jet fuel. So, you know, as prices have come down at the spot level, you know, we have to see if Southwest locked in higher prices using fixed forward hedging techniques, which they're known to do so. And that works very well when fuel prices are rising considerably, but when prices fall, they may be locked in at higher spot rates, by higher fixed rates versus spot rates, as we know fuel prices are down. So we'll see what they say, but overall, things look pretty healthy for the business.
Yeah, and just comparing, you talked about some of those kind of comparisons of debt and market cap. The ratio would be like 0.5 for debt to market cap for Southwest. For context, it's 4, I believe, for American Airlines. So very, very different in terms of those ratios. Appreciate it, George Tillis, as always. Good
Well,
setup
not
for
either.
Southwest as we hear from the company on its quarterly update. It's going to do it for Jenny and myself here on Next Gen Investing. Thanks as always for tuning in. Coming up next, we got the watch list with Nicole Petalini.
I can dig that rock and roll. I'm even back to even on Tesla. If it doesn't work here, I'm going to get out and go into next week or not even do it. Tesla's got a hold here. And I know one girl that trades gap ups every day. Humble Trader. You all know who she is? She's real nice. If I had a chance to trade with anybody, it would be her. I used to follow Airplane Jane, but she was kind of a little on the wacky side. Not trade with her, but just follow her calls. See if they were any good. Now I trade with Yana. DWAC got whacked. First Solar is down $2.17. Humana back down. To double bottom. Apple. I had a 194.26 target and then 197.51 on a snake up breakout, pull back higher low, boom. What? Wow. Huh. It's so sad. Wow. Hmm. I'm going to ask for a moment of silence. It's hard when your friends pass away.
Resilient and robust. Even though we've had this horrible conflict in the Middle East, oil prices have probably underperformed, much to the relief of consumers, and so getting those
Watch
gasoline
oil.
prices has also afforded us some better news and outlook on inflation.
And so with this, I know you're not making market calls, but long term, what do you tell investors overall?
The same thing we always tell them, Nicole, and that is, you need to be invested for the purpose of long-term savings and retirement. And, over the years, Nicole, we've surveyed investors and basically individuals about their financial regrets. And there's been a bit of a ping pong match there over the years.
I can't listen to that right now. I have too many people that are hurting under this Biden regime. We might see a double bottom here today. Yep, here we go. Yeah, this news out of Israel ain't too hot. But I don't know if that has anything with the pullback. We're definitely way overextended. Do. Okay. Doom, 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 doom. Do, 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 do. I should have saw that earlier. YouTube, are you any stocks you're worried about? Tesla pulled back to support. Same thing happened with NVIDIA yesterday, and then we had the big, huge pop, but circumstances are a whole lot different. I'm still even. Thought about adding one more, but I'll just leave it at one. I can lose $335 if it gets bad. No. Do. Say hey, Paula. Yeah, we could pull back down here to the 486642. Another $20 drop on the SPX. I wish I was thinking about had the tweezer top on the 1 hour. That'd have been a good little idea. Swing trade. Roku was the one I was trying to think of earlier. Okay, I think I got my senses back.
Cars, they ended up selling 1.8 million. You know, there's so many other areas that I like. You know, small cap is amazing right now. If I told you it was the best place to be since 2010 mathematically, would you be interested? I mean, that's the bottom line. Small cap as a sector is trading at a 16% discount. It's probably the most, it is the most attractively valued area of the market right now. And, you know, it's interesting. And folks come to me all the time and they're just unsure about this market. The last 3 years feel like 3 decades. But we have to really embrace this market and look at the opportunities out there.
That's fact.
So when we look at the discount that you
It's
see
the
on
weirdest market I ever.
small caps, for example, the small caps.
You know, every year is different. It seems like every year. And the last 3 years have been, especially this last year and 2-3 months, has been definitely one of the weirdest times I've ever seen trading in this market. And we all feel that any experienced trader that's been around knows that this is very strange, and there's not a lot of good going to come out of it. And well, you know, you go back and years ago, every 4 years, we'd go into a recession, and we haven't had a real good recession until COVID hit, and it was purposely done by the government shutdown, shutting down the country. I mean, you should have seen the fear in all my friends that own businesses' faces. How in the hell are we going to make it? It should have never happened, I don't think, but it did. This one company that I work for has a call center, and on the other half of the building they have a website building center where they market and build websites. And I told him, well, at least you got that website going, man, because everybody's making money on the internet now. And I watched and ever since then they used to have 50 employees in the call center. They have 5 or 6 in there now. Been like that for a couple of years. He blames COVID and government.
If you talk to any car person out there, they're not a big fan, but I want us to embrace small cap.
Jack, J-A-K-K.
I think there's some
What
great
is this?
opportunities there.
I never heard of that ticker.
So my last thought here, Adam, and I understand what you're saying, and looking for different opportunities, and not just looking at the large cap, which is run hot, and maybe those valuations are too high.
Too high.
Tesla as an example. At the same time,
No.
S&P 500 crossed 4,900 today.
Oh, God, what are you talking about?
The Fed, right, is going to cut rates at least 3 times this year. I mean, at a minimum.
Don't start pulling a CNBC
So
on
would
us.
you say the valuation of the major market averages is frothy too?
Well, I think there's some opportunities in
Yeah.
mid caps and large value is attractively priced as well. ultimately, with the rates likely going down and inflation trending to 2%, I mean, I'm still a little skeptical of that by 2025, but it is trending in the right direction. And I think we have to be open to the opportunities. And then, of course, there's the simple things that we can do. Before we buy into names like this, I hope anybody that's considering doing this is maxing out their 401ks, because those are things that are protected by creditors.
Adam Lampy, great to see you. Mint Wealth Management. Nice to see you, Adam. Thanks.
Thank you.
Coming up, we're going to take a closer look at Tesla. We have that earnings report due out after the bell, and we've had bulls, bears, everybody's looking at Tesla. So the Cybertruck, AI, Elon Musk in focus. We'll be right back.
This guy's an idiot.
Schwab Bank
Jack's
Investor
Pacific
Checking,
and Company.
the checking account built for investors. Named highest in client satisfaction by J.D. Power.
There goes my Tesla's 325. I was up. Just sold it, sucker. Oh, I used to trade Jacks years ago. Years ago. Jacks. JAKKS. Thank you for visiting our website. Are you leaving the Jacks website? No, I was going to shop. Multi-brand company, designing, developing, producing, and marketing toys and products for children and adults. The company is a top global player in the sector. Maui Toys. I want to see what that is. Maui. Oh, yeah. That's the way it is over there. Oh, I gotta get to looking at, we were at support. Yeah, this news ain't good. But I don't think shouldn't have nothing to do with what's going on right now. SPX put 48.75 at 260 and I got out at 340. I'm gonna look and see what I could have made. Oh my God. 48.75s. Not bad. Not bad at all. For some reason, they're not very cheap. They're not. The 48.75s are just at $2.95. I got out at $5. And 340. So we got a 1, 2, 3 snake. 1 bis, 2 bis, and a freebie. I'm going to hold Tesla. I'm just going to take the risk. It don't feel good, but I'm going to do it. Got 3 black crows coming out of a snake here with a double bottom on the SPY. City, /ES. Took a knife also.
You know, it was going to charge your house, the battery facility,
Did he just burp?
making the batteries. I just felt like
Somebody just burped.
that Tesla is something other than a car company, and it shouldn't be priced as a car company.
Exactly, honey.
More like a tech company.
Exactly.
Yeah. That's still true. They're the only vertically integrated car company. They make their own batteries. The gigafactories are good, but you have to execute.
We got a
You
mole
have
in
to
this room.
perform. The problem is the last year or so, they haven't been able to ramp up their production like they said they would in Berlin or in.
Well, it's because there's a war going on, you idiot.
Have those anymore because they kept reducing prices because of either inventory issues or macro headwinds.
I can't listen to this guy. But she's right. Let's see if we break this 61.8% here on the SPY and go to the upside. I'm holding on to my Tesla. I don't want to care what these people. She's right. It is a tech company. So I'm going to be looking at tomorrow, the 25th, the 487 strike, call. We're not out of the snake yet, so I can't take the trade. Looks to me like a bear flag, Foreman, but this could be a head, and then we break out, pull back to the shoulder. She's right, though. It is a tech company.
bigger fan of Elon for the last few years, but I think it's important that we would call it how it is, and right now we need him back on the job.
Yeah, thank you. I know we'll all be keying in on those numbers right at the closing bell. Thank
I will
you.
too, honey.
Yeah, with Gerber Kawasaki Wealth and Investment Management.
We nailed. There's a totally difference between this and Netflix. Netflix had a lot of momentum behind it. We knew that subscribers were going to be up. We knew that Disney's taking a tumble. We knew that TKO is going streaming. So there were just a lot of good things going on there yesterday. Today is a moment of all the other car sectors are down huge. I didn't even look at GM today. I don't compare GM at all towards Tesla. Yeah, see, it's still up there too high. Ford did pull back to the bottom of the Fibonacci chart and bounced up. Now we got a higher low. We could have a two-headed snake if it holds here, but I won't trade Ford because they cut production and their CEO kind of got under my skin when he said that he was going to have perfection. We're not going to have any more recalls, is what he said. And the same thing they said about Boeing 4 years ago. We're not going to have any more drama. We're going to restructure everything and make it all better. And look where we are today on Boeing. And that guy yesterday, he says, I'm pissed. I ain't buying any more Boeings. Not until they get it together. And we broke out today. Very strange. I would have never took that trade today. I wouldn't have. Tell your loved ones you love them. No, we got a bowl in here. I just talked about /ES.
And they've
Unbelievable.
worked back towards the middle of the range and back towards that 4,900 level. Taking a step away from today's price activity, you can see where we are relative to last week's highs and lows, still holding above last week's highs. Another big week to the big week to the upside, and also you can see throughout the month of January some of the gains we've seen above the December highs. So now this chart's going to help us just kind of put this move into perspective a little bit here. Holding above the 50, holding above the 200. We basically have been since then. Well, there's that D bottom I mentioned, the October lows from last year, around 4,100, and I wanted to show you.
Oh, there's a hammer.
All-time highs here.
There's a bearish candle.
ES in the top left corner, the Dow in the top right, which got up to 38,300 today. A new all-time high there as well. The NASDAQ futures up to just shy of 17,800, and then in the bottom right corner, the Russell is a bit of a lag here, but Yeah, a lot of focus here, Nicole, on the data.
Don't leave yet.
On earnings today, right? Netflix this morning, everybody was dialed in.
I got to set up a chart like this.
Tesla, but a busy end to the week here, that's for sure, Nicole.
Yeah, understood. And tell me about yields. What are you watching there? And I know that they, we saw them to the downside, then we got the PMI composite, and people have been talking about where yields stand now. What jumps out at you?
Yeah, well, I think what's most impressive in many ways is the fact that we did post new all-time highs while we've seen yields inching their way back up to near 4.2%. Take a look at the 10-year, because a big part of that rally that we just talked about from 4,100 off the October lows from last year coincided with yields coming off from 5% down to this low that we just recently bounced off of 4.8 or 3.8, we'll call it. So now look what's happening. We're inching our way back up to 4.2 today, and again, stocks really just focusing on the positive, discounting the negative. The negative being yields to the upside, some of the positive being the data that we saw here recently, the manufacturing PMI numbers earlier today, last week the jobs reports, and the consumer sentiment I keep leaning on. Those were very strong numbers. Take a look at, you got the 10-year on the right, the 30-year on the left, a little bit of a longer-term chart. So you can see not only that move that we just mentioned from 5% back to 3.8 and how we're inching our way back up, but you can see the big move up that we saw from 1.25 all the way up to 5%. And, it just kind of really speaks to, Nicole, again, the strength that we've seen in stocks when you see yields on the move higher like this. I do want to remind everybody that we just had a 5-year note auction, which was kind of weak. We saw treasuries to new lows in reaction to, looks like the total amount that went off today was $61 billion, coupon rate 4%, bid to cover 2.31, and the yield awarded was 4.055%. So, but keep in mind, we've got central bank activity tomorrow, Nicole, the ECB, and as I mentioned here, some data here in the U.S. that could move the dollar, could move yields. So
SPY calls, 487 strike.
As well as the indices into the end of the week.
Ben Lichtenstein, thank you. Appreciate a good look at market breadth here today and what to watch as we go to the closing bell. In the meantime, a closer look now at commodities, some key levels to watch for crude oil, for gold. David McElvaney is with me, CEO of McElvaney Financial Companies. Thank you so much. There's been a lot of talk of the safe haven of gold, and it did very well. It has since been pulling back. Right now it's at 2013 a troy ounce. When you look at these commodities, why do you follow these as closely as you do? Are there potential investments to be made here?
Yeah, I think short term, you look at the gold market, and there's a case to be made.
That ain't what I wanted.
Bearish, 30, 60 day time frame. The commitment of traders reports shows a lot of interest that's clustered with your managed money and your hedge fund community, and frankly, too much interest for us to be real comfortable. So we take kind of a contrarian read on the COT reports. On the one hand, open interest is not excessive. But again, we just don't like to see hot money.
I like your glasses, my friend.
As much of as it has of late.
Where did you find them at?
Coming into a period of weak seasonality. So you mix the COT reports with the March to June malaise that you typically see in the metals, and I think you've got an argument for gold softening a bit.
/GC.
Keep in mind, both with oil and gold, geopolitical events can turn gold positive regardless of our COT concerns. And so that's worth keeping in mind. Emerging market weakness, currency market volatility, those
we're at 115, 116. I'm up $100.
Headwind to gold in the short run. So to brass tacks on
we got a Darvis box breakout.
75 that opens the door to 1800, and I would say that's your last best price for the next 5 years. If you're fortunate enough to buy gold at 1800, you'll be breaking your arm, patting yourself on the back in years ahead. So we may not see that. 1975 may hold, in which case I think you're looking at 2450 by year end. So suffice it to say, we're very long-term bullish on gold, but there are some reasons to be concerned.
So this is called the Ready, Set, Go. I use this quite a bit when I'm scalping. Ready, set, go. And I got in on the set. 3 black crows, boom. 3 black crows, boom. 1 crow, boom. You are so beautiful to me. Can't you see? You. It's a song I used to sing. Beautiful to me. Break out. Go to the VWAP. This is a very interesting looking chart right here. Come on, baby. Munich, Paris, everybody talk about. Pop music talk about. We're at 124. Anybody take this trade? Anybody in the room take this trade? Yes or no? I want you to make a business decision. We're at 129. Let's see if we can. Oh, yeah. Oh, yeah. Oh. We found some resistance right in here, some support, which now becomes resistance. If you did take this trade, boom, baby. Snake, Darvis box, 3 black crows, 3 white soldiers. What happens when we see 3 white soldiers? We take profit. That's exactly what we do. Oh, God. You did it, Jim. Come on. Let's do it. There we go. I'll take that. Yeah, 135. I made a business decision. How does he do it? Patience and talking to yourself. So this is called a Darvis box with 2 streaming black crows. I know a guy that trades the Darvis box, and he does it just totally opposite of what I do. But he's a master of the Darvis box. He probably plays by the rules. Oh my, there she goes. 137. Frick. Frack. Applejack. This is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And today's chart pattern was the Darvis box with the candlestick pattern of 3 black crows. Thank you. I knew that crow was telling me something this morning. It could pop up to the next resistance of 487.40. But we've got the green line here, so that's telling me to hold my breath. Okay, Maui boy. So, how did you find resistance, Jimmy? See, we have the box here, right? And we have another one right here. So when you're looking to go to the upside, you want to find the next chart pattern. If you run that all the way over, you had 3 black crows, 3 black crows, 3 black crows. And that's the Darvis box. That's a horizontal trend. So you want to look for a place that consolidated. And that's a consolidated area. As you can see, we found support, and then the third time it broke down. We found resistance, resistance, and resistance, and went to the upside. So that old support now becomes resistance. And that's your idea to get out of the trade and take your profit. So we got it down here at the very bottom. I could tell it was kind of squeezing. And got rid of it once we got close to that Darvis box right there at 135. And that trade only lasted 1, 2, 3, 4, 5, 6 minutes. And that's how I do it. 106 to 135. And I got as close as I could to the money that had high volume of 93,000 contracts. Same as over here. Now if you go according to the heat map, we're way overbought. Just on the hour. Oh. Okay. I don't think I've ever seen that before. Interesting. Wow. My girl said Tesla's not a car company. And I'm back up again. We're going to know tonight if I was right or not. What's my target? Promise you won't tell nobody? It's the 200 SMA. Keep that a secret on the 1 hour time frame. That microphone smells good. Magnificent. May I have a good grade for that SPY trade I just made? The S&P hits 4,900 on the tech rally. Thank you very much. We have 3 minutes to power hour, and I'm going to have another cup of coffee. I had a friend message me and he says, "You're the only one I got left now. Everyone else has passed away." see that shit. Oh, I got a song on. Let's see how this. Here, we gotta hide these messages. Let me see here.
wakes up with me in the early morning, gives me a good morning kiss. He's the best man dog man could ever have. I love my dog. Is that right, Beppy?
I love you, Beppy.
But generally, stocks have been taking into stride at higher rates. Maybe we're approaching a little bit less of an obvious area in which it can be breezed through or papered over. Still, you got a lot of working in the market today. Chip makers, which are your backbone of this equity rally for the last 9 months, really, it's all about semiconductors as the AI trade, the whole core of the big tech strength. You've also got Netflix still up huge today, so there's definitely some buffer. It's generally been risk on all day. Bitcoin too, finally getting a little bit of love, getting in the mix there, rallying with stocks, but also off the highs from earlier. Chip makers have a little bit of news. We'll talk about a few of the latest upgrades, but this afternoon we'll be focused on Tesla, which is an important name, similar in Netflix in some ways, but also very different. Both of these stocks are still off their all-time highs as they peaked in 21, and that's what separates them from the more magnificent of the Magnificent Seven. There is a pecking order even.
Tesla is part of the Magnificent Seven, my friend.
Nvidia, Apple, Microsoft,
How dare you?
Meta at all-time highs. Alphabet very close but below its. Amazon still also below its all-time high, but Tesla's really the only one that is downtrending. Netflix is closing in pretty quickly on those old records thanks to some great numbers.
That's a bull
overnight.
flag.
Still have top line growth, still have subscriber growth, both in the double digits, and margins continue
There's
to
just so
improve.
much
They're
negative
so
sentiment.
dominant in the
Oh
streaming
gosh,
world,
I hope
so
this
many others
bounces.
struggle. That was a big report to instill more.
Oh yeah, I was going to give my target.
Those giant companies that have cleaned up their balance sheets, prioritized profits, and have almost acted as safety trades in a way. If you don't believe it, just look at the market action today. We faded pretty hard in the Russell. I mean, it's happened multiple times, and what happens is the money just goes into tech. That's why this market's been so resilient on the index level, because when there's any doubt, investors just pile back into the giants. And that's where Tesla this afternoon gets fun, because even though it's got so many things going for it, it certainly does seem very dominant in its world, its financials look a lot different. We'll be watching cash flows to see if there's any burn there after the cuts on the...
No, don't
and the
watch
chart is
that.
just not very pretty. It really is an outlier in the market. Now that might mean it can play a little catch up if it impresses this afternoon. But if Tesla breaks down and starts making lower lows after trying to hold on to support for the last 3 months, or really the last kind of 6 months, then it could get dicey and it could break some of the confidence in the
I don't
bond
like you
market
anymore.
for some of the giants that do have to prove earnings to justify valuations. Because even though Tesla is still off the highs, it's also, as you can see, well off the lows. And a lot of that has basically come from the market's refrothing of valuations. There are some companies that have grown into their new records or have profited their way into the market's embrace, like Netflix, like Meta. So it's an outlier, and it should be a fun one this afternoon. We're also watching the macro ahead of tomorrow, because we do now maybe need to pay a little bit closer attention to the first look at GDP, that it's supposed to come in around 2%, significantly lower than the third quarter, but after some solid prints lately, both the retail sales, consumer sentiment, some of the expectations have been ratcheted up, with bonds selling off today after a rally early.
Can we do without the kinky music, please? This is a very tense moment for me today. SMH ETF, semiconductor, SMH. Today I've gathered a pretty good watch list. I won't be able to sell my option once it pops. That's probably the bad thing about it.
Big, Nvidia's up solid. No matter what kind of happens in the periphery right now, as long as that group is good, it seems like we're in okay shape.
Yeah, and like I know you mentioned the market's faded, which it has considerably, but AMD really hasn't. I mean, we're about at $2 off of session highs, which isn't bad for a name that's making a 6% move to the upside on what I can only assume is this analyst upgrade. So I mean, like
there's nothing else, right?
There's nothing else. So New Street, $215 price target, upgraded to buy from neutral. $215 is significant though, because that's the highest of any analyst covering the same as far as I could tell. So that would be a New Street high. Previously, the high had been $200. So correct me if I'm wrong, but that was I scoured the internet for the analysts covering this name.
You didn't scour mine. It was 190, honey.
New Street?
Yes, that's correct. Yeah, no, I
She didn't see mine. Mine was at 190 for AMD. That's more reasonable than the 215.
Now this figure, that's still like a very much an estimate, and very much, I would say there's many different opinions, to put that nicely. But they did say AMD is the best way to play this fast adoption of AI chips, given its valuation and expectation upside. They listed a bunch of other names, most notably was Taiwan Semiconductor, as well as AMD being the biggest standouts. But they do say that if they could reach even only half of that $400 billion forecast, they could still see total data center spending growing at about a 25% annual rate. And why I question the $400 billion target is because we did also see from other analysts, like Northland, for example, earlier this week, estimating around 125
You want
billion.
485?
Still massive growth, but I think
You want it
400
now?
billion is the most optimistic I've seen as far as like the total addressable market.
Wow. This came out last night late, So it's had some real impact. It's also from an analyst that was neutral and pretty far behind. So they had a $100 price target, and now it's a buy. So seems like then you've got a little bit of a catch-up being played. I mean, but this is kind of the story, Kevin, which has basically been the continued broadening of the AI trade outside of NVIDIA, which is it's mostly been chips, but we're starting to hear some of the software stuff, the applications, but to see the continuous pylons, like every day, you've got fresh news if you need a reason to buy chips.
AMD and NVIDIA are the two clear leaders.
Exactly.
Need it now. It's my money and I need it now.
It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's your money. Use it when you need it.
Send it to Washboardjim. Post Office Box 445 6521.
You're on an upgrade.
Been a little bit more volatile for sure. A lot of these earnings start to show up next week when we're going to get a little bit more kind of close to the heart, the core of the situation. Tesla will be fun tonight.
Tesla will be fun tonight. I think this is the most tedious earnings I've ever waited for.
It's kind of a gamble.
Because we're so close.
The best days for the Russell are actually when it's
to
getting pulled by
support. We are at support.
It fades a lot.
Well, the Russell is made up of, number one, a large sample size of a different bunch of stocks than you see in the other three indices. So, yeah, it trades a little more volatile, right? And it was a fade today. Why? Well, you know, remember, yields were down this morning and the dollar was down. The dollar's down, pretty big, substantial rally in the Japanese yen today, and to a lesser extent in the euro. That's keeping the dollar down, and it stayed down all day. Yield's a little different, right? You saw the PMI composite flash come out at 9 o'clock. Yield spiked from negative to positive right as we came off the air at the 8 o'clock hour. Then, or the 9 o'clock hour, sorry. Then you saw the bond auction come out around noon, and you saw another spike in the 1 minute charts. So if you want to see what happened with yields today, throw up the TNX, look at the 1 minute charts. You see two gaps, one at the 9 o'clock hour and one at the noon hour.
Yeah.
So those 2 points, you know, just kind of took some of the inertia off this upside move that was, frankly, in a glide path for the last couple of days.
We were kind of suspicious this morning why the dollar was down that much.
Yeah.
I mean, the dollar really got blasted.
Yes, and it stayed there. It didn't recover at all.
Well, it'll come back. It's recovered about half. Only down about 40
That's
points.
strange.
Yeah, you're right. It was down a little bit more. You're right.
But still
significantly down.
It's still down. All right. So the auction doesn't go great. You know, we get some of those kind of nagging bond market problems, arguably, but it's hard to compete when you got people saying AMD's going to a new street high. So
hey, they have earnings next week, next Tuesday. So we get that. I mean, I feel like for a lot of these chip names, I need like numbers before I buy into the hype, because like, what are they actually doing to get to this total addressable market? It's more, I think you have to show me before I like truly buy in. But right now, I mean, the Nasdaq Russell divergence is like pretty much, I feel like, the daily story at this point.
Well, that's the big difference between NVIDIA and everybody else. They've already got all the numbers, proven it to us, multiple earnings. Last time AMD started to get there, and so far a lot of these chips have just told us there's like a trough happening behind them. So let's see what AMD is going to prove next week. Thanks for the context, Jenny Horn, Kevin Hanks. All right, let's continue with the
a lot of calls are coming in.
We really go earnest into all the reports coming out in Tesla right now. Let's talk bonds with Mike Sanders of Madison Investments, head of fixed income. Mike, thanks for being here on the Schwab Network.
Yeah, thanks for having me.
Okay, so we got a little bit of action in bonds today. You know, decent fade. 5 years seemed like it didn't go perfectly. Kind of a shocker with PMI manufacturing. What do you think of the action today?
Yeah, I mean, you're right. You know, the PMI data came out better than expected, so kind of took back the rally we had to start the day, and then we were flattish in reality right before the 5-year auction that tailed by 2 basis points. And you know, you had a 2-year auction yesterday that did okay. You have 7s coming tomorrow, so. You know, the strength of the auctions at the back half of last year seemed to be weakening a little bit. So it's not surprising to us, if you looked at the data, how it was coming out and how far the market really ran in the fourth quarter, especially the last 2-3 weeks of the year. To us, the market was getting a little bit ahead of itself, and the data isn't as bad as what maybe some bond bulls really want to see.
Yeah, what do you think at this point, with only a little over a month until we get to March, where the market still is applying coin flip odds to a cut? What kind of data are really going to move that needle to a direction that the Fed's going to follow?
Yeah, it's going to come down to inflation and jobs. It's interesting. The probability of the cut in March is actually now at 40%, the highest or the lowest level, depending on which way you want to look at it, since back in mid-November. So the bets on the cuts have really come off a little bit. You've seen that pressure on the front of the yield curve, but in reality, it's going to come down to what happens in the labor market, and are we going to still continue to get this disinflation, core PCE moving down to the Fed's target? I do think that when you kind of break down the inflation data, though, you have to separate it a little bit between the goods disinflation and then the services disinflation. So if you look at core goods inflation year over year, you're running negative now. But if you look at on a super core services side, with excluding energy services and housing, you're still at or above 3.5% year over year, 3% on a 3-month annualized basis. So, to us, if the Fed's kind of walked back a little bit of the commentary they had to kind of talk about the path of expectation being that 3 cuts, and we don't disagree. It's going to be somewhere in that 3 to 125 basis points worth of cuts, probably in 24.
What trade is there available to kind of arb that difference between what the market is rooting for at the top end, which is still a little bit more than it sounds like is your baseline?
Yeah, I don't know about an arb, but I think that front-end interest rates are still attractive. You haven't seen these yields in a very, very long time. And so just locking in income at 4.5%, when you look at certain parts of the fixed income market, make a lot of sense to us. I would say that if you're thinking about duration and securities farther out the curve, you really have to think about how much the Fed maybe has to cut in this cycle, and maybe the pivot that they had in the fourth quarter was a little premature by the Fed. From our perspective, the Fed shifting from, I guess, a concern about inflation to a concern about growth, and kind of expecting or hoping, if you will, or forecasting the soft landing type scenario. They think that's probable now. And so with that shift in the Fed's thinking, there's probably some pressure on the front of the curve, but it probably has more impact on a P&L basis a little bit farther out the curve. So it wouldn't shock us for the back end, so 10s and out, to kind of continue to drift higher. There's lots of duration supply coming this year, because the Fed or the Treasury kind of punted in terms of how much coupon issuance versus bill issuance they did, which is one of the reasons we rallied so much coming into last year.
The first week bond auction we've had in some time, after a couple dicey ones last year. But then there were even some more dramatic ones in the year prior, when bonds were really in the kind of early stage of the nasty bear market, and stocks were too. How are you thinking about?
Okay, we got 2 options here.
And the supply.
One of them is the previous close from the day before, which, man, if I'd have...
Yeah, I think that's probably a good way to look at it.
48.75s, I still got out real good. I can't believe they're not holding up.
There's going to be more.
I'm looking at the 48.80 call.
Their quantitative tightening program that may not end sometime in this year.
Sir, I'm going to have to mute you for a second. So we've got a snake breakout, pullback. 48.80 at 105 Lotto, and that's where it is right now. It did jump up to 120 for a second. It's at $1.90. Now it's at 95. This is my risk. It's kind of risky. Yeah, that didn't work. Give it just a few more seconds. It broke support. Okay. Come on, baby. Break it. I might have good genes. I think so. I wear Levi's. Break. So we got the snake breakout. Uh-oh. This might be a stop here. We are consolidating. I see one hammer and another. It'd be nice to take it up to 48.7636 if she decides to break out here. But I think the market's ready for a little correction. So far, it's looking better. Oh. There we go. Go, baby, go, 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 go. A little bit more. Okay, we're on our way. Don't pull back here. Oh. Goldman Sachs is down. SPX is down. Don't look like I'm going to get my way. But we've got the snake, the breakout, pull back to the support line, and then it's got to move. After I take a nice little loss. So it has to break to the upside here. Tesla knife too. No, this might not work out for me. What did you freeze up on me? Not this. Better not. Okay. I don't want this platform freezing up on me while I'm in this sucker punch. It's definitely bearish right now because we went below my support. We had to break out in the pullback. thought about adding it 50 cents and I didn't do it. I'd be probably out of the trade by now. You got the RSI. Go. Takes a lot of patience. You're down like 600 points. You're going, oh my. Come on, just one big old push. Back to even. There we go. Now I'm going to get out of this sucker. It'll probably run up. Now. Out. 115. Woo! Hit my resistance. Oh gosh, don't do it. Oh no, it's going to 125. Miracle. Man, if I'd have added on to that 50 cents, that'd have been $600. Man, look at that. Damn it. 135. That's a lot of stress. Well, at least I hit my target. This is the best. This is some good advice for you. Don't ever take a trade unless you know where you're going to get in and out before you even take it. At least you know you have some kind of idea when you hit that target, you can go ahead and... I could have added another 10 of them down here at 55 cents, 45, and I didn't do it. I just figured I'd write it out. I didn't want to take a chance of it knifing on me again and being out another $300 plus being down 600. But it was definitely bearish. If you go with my strat, oh God, there it goes. 150. Oh no. Oh. That would have been $1,000 trade if I'd have bought that 50 cents. Plus another 450 had been $1,500. But see, I went below. I gotta see where this. Oh, interesting. I should have pulled that up, looked at that. Here was the other snake break out, pulled back. And then it pulled right back to this in here. Bounced off that trend line. Dang it, 165. Okay. Why? Why do you do this to me? It's not like I cheated on your wife or anything. I would never do that. It went to 175. Oh no. Oh my. 210 now. I got freaked out. The only thing that got me was this here little frickin'. I should have added right there. $0.50. I mean, that's $500. And I'd had 1,500 in it.
continue to see that area struggle to, basically be the threshold for distribution for the big part of the globe.
What do you think, to go back to the levels here, as you mentioned, we get through here, we get through 75. Now, the market's been happy with basically all the inflation data. At what point do you think crude enters that conversation in a negative way?
Today.
Boy, it will take
If
a
the
little
nuke goes
time,
off.
But, any shift in the general trends that we have experienced for the lower price structure in crude over the last year, I think if we break above the 76 level, and then if we were to push to 80, that would be the highest level in several months, and certainly could be a potential shift in the trend pattern as well. And as that, if it was to build, that would re-enter I think the arena as far as a potential inflationary input. And we're also seeing inflation kind of holding and potentially even moving higher in other parts of the globe. The UK is struggling, continuing to see that. We'll see if the PCE data comes out Friday, how that is interpreted and priced. And but right now it feels like we're hitting a plateau here with the inflation front for this time being, and it's still above target. It's much lower than it has been, but still above target.
Okay. Dollar got
75 is target,
back.
you
What do you
dip.
think of the way bonds and the dollar traded real quick, Dan?
Yeah, interesting, Oliver. I think, again, resetting maybe a little bit of the expectations as far as global central bank activity. And so I think that's why we did see the dollar under some pressure, not bouncing back a little bit, but, some reassessing evaluations and some repositioning, I think, as we head into these big numbers the next couple of days.
Okay. Thanks, sir. Yeah, we do have some pretty big prints coming out. And thanks, Dan, for the trading thoughts for the session. Let's talk PayPal for a moment. No earnings just yet, but a pretty negative note out from an analyst falling on.
It's had a pretty good little run.
New CEO about a week ago that there's a shock event on its way. Rita Young has the developing story. Let's start with this analyst now, Rita.
Well, we are 2 weeks out from PayPal earnings, and the analyst opened a 30-day negative catalyst watch on this stock because they believe that this company will take longer to get back to gross profit transaction dollar growth. And in the analyst's view, the company has a couple of options. They can either exit the less profitable contracts, or they could choose not to give full-year guidance, but both of those could be seen as negative surprises. But we do have an analyst over at Seeking Alpha offering a different view. He feels like this is actually a good entry point for the stock and that PayPal is well positioned to be able to benefit from the ongoing shift to digital payments. And it is one of the largest buy now, pay later companies globally. It's still got more than 30 million consumers and 300,000 merchants that are using its services ever since launch. And plus, the new CEO, Alex Chris, he has a focus on enhancing that efficiency, improving profitability, and growth. And we'll actually get to see his take through this huge transformation, a little bit of a view into that tomorrow at the company's Innovation Day. It'll be an exclusive look into PayPal and Venmo and the advancements that the company's made for it for the coming years, perhaps months, years to go.
Oh, already had something there.
It'll be on YouTube at 12:30 p.m. But if we look at the price target, or not just the price target, but the price action for PayPal, right now, it is down more than 20% over the past 12 months, down about 28% from yearly intraday highs. And then, however, it's up around 25% from its yearly intraday low. But the earnings comes out on February 7th. Analysts are currently expecting adjusted earnings to actually rise about 9% year over year to $1.36 a share.
Okay, so there's some bottom line
Riding deep.
strength, but I guess too many potential
Riding deep.
potholes in the road for the analysts to give it the clear. Definitely some contention here. With the
I got really freaked out here when I took the first one,
but then the CEO
and I could have been up
the
a lot.
event for their AI that they're going to try and wow the market with, shock the world.
Shock the world.
Okay, all right, should be a fun one. Thanks for the heads up.
One bis, two bis, and a freebie. 3 black crows.
Here, Liz Ann Saunders and Cooper Howard talking
Oh!
bonds into the closing bell.
I'm going to stay away from it.
I was born
Something
on the
just
south
don't
side
smell
of
right.
Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens.
Can I get a
and
job?
Invest.
I want to be the chartist artist. that guy earlier, he couldn't see the weekly time frame, and if he would have, he'd be up. Okay. I definitely heavily traded this today. I think it would have been a great trade if I'd have just thought about them puts up there, but I just wasn't into it. I was so caught up in this rush, and I'm not going with my gut. I bought more puts, I think, this year than I have the whole entire trading career that I've had, because we're so extremely overbought. We're such extreme greed. I've never been off. I'll show you what I'm talking about. I've never felt like this. And I'm glad I got away from listening to CNBC. These guys have a little bit more common sense. I mean, they pull up the charts and tell you, hey, hell no, man. We're extremely high levels. I've heard it all day from these guys. And I didn't hear it once from them idiots over on CNBC, except until the first of the year when we pulled back off the double top high. But we're up here. We're up here. We were at denial. And then all of a sudden we got back up into that extreme greed level, and I think it's more extreme than what it was at the end of last year. But I nail this pattern almost every time. When I nailed that capitulation a while back during the fear right before the interest rates, when I called, I said there ain't going to be no more interest rate hikes, and that was a couple weeks in advance. And then we had that big run, and it just kept going and 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 going. And then we created a little bit of, the first came, and we had a little bit of anxiety and denial. They were at CNBC, oh, what's going on? You know, we priced in 6 rate hikes. Now they're talking about no rate hikes. Tempting to go long in PayPal and just hold it all year long. Okay, we're going to find out about Tesla here. Wow, look at them buys right there. Oh shit. There's 100,000. I saw about 200,000 a little bit ago. There it is.
streak now since 2016. This amid ongoing price cuts, shrinking profit margins, and slowing demand alongside increased competition. Joining me now here Post 9 to discuss Wedbush's Dan Ives. Welcome back.
Great to be here.
So, I'm not sure if you heard Bryn Talkington a moment ago, a shareholder, big believer in Elon and Tesla, and yet she says the most important thing she's watching is all about Elon. Not pricing, not margins, not market share, not this, not that. It's all about Elon.
Look, I mean, he definitely, you know.
It's about Elon. It's nothing to do with pricing. I'm trying to tell you that.
AI, 25% ownership, and that's definitely caused some nervousness out there. But and that'll be something I expect him to sort of reiterate that he's committed to Tesla. He's not going anywhere. I think that's something that's important on the conference call to hit. But no doubt, the margins, the price cuts, that I think is front and center for many investors.
Okay, so let's take those margins. Are they going to be hurt by more price cuts?
Look, I mean, we believe coming in that 95% price cuts were done. They've continued to cut prices.
You've told me that like 3 appearances ago.
Yeah, and look, and the problem is
watch your
that,
mouth.
You know, as they continue to cut margins, last year it was the right move. This year, you got to hold the line. I think you could have around the edges some price cuts. They need to draw a line in the sand.
Oh, God.
That the vast majority of price cuts are done. You're going to have a sub $30,000 vehicle, we believe, over the next 12 to 18 months. And I think that's the important thing. You cannot keep giving away that margin advantage. That's the important thing that we believe they ultimately do line in the sand this quarter. And I think that's something that the streets focus on.
He's like he's in a price war with the Chinese. Right? I mean, he's already losing or has lost the lead there. So where does this go from here?
I mean, look, in China, this was a record quarter for Q4. So the one thing is, from a demand perspective, that poker move is paid off. I think now when it comes to Tesla, the focus is 2024, you can't continue to cut prices. And I think if margins start to trough, and they talk about that and upticking from here, I think volumes 2.1, 2.2 million, then at that point, I think the bottom is in for the stock.
There we go. Earnings per share, 71, misses 74. Say goodbye to my 300. $24.3. Sales were up from this quarter last year, but that ain't going to matter. There's my lowest support right here, 194.82. That's got to hold. Well, that's it. That's the end of the story.